is looking down cap, whether that's small or the mid cap space. The spreads between valuations there and the large cap space are pretty remarkable. And as you look toward earnings growth toward in 2024, you see more earnings growth opportunities for those smaller companies. And so while there's been, huge excitement over a concentrated set of large cap names this year, we do think that has the opportunity to change as we look into 2024.
Is this a knock-on effect of tech as a sector being the highly concentrated leader of the last 8 months?
It's a little bit of that.
Good morning. Good morning.
Concentrated group of stock. In your last segment.
Coffee's good.
We are in a higher rate, higher inflationary environment that's likely to stay.
SPY a bit lower.
Our selection is really, really key. You don't want to own the entire market, but you do want to own companies that can be flexible, that can adjust.
All right, let's go to the videotape. Good morning, everyone. I'm your host, Cousin Vinny, coming to you from theclosingprint.com on a fine Friday, the 15th of September.
Well, certainly the top down or the economy does have an impact on all companies. And so what we're looking for is each individual company's ability to adjust and adjust quickly. And also,
Okay, NYMO yesterday. We're looking for NYMO to continue climbing. NYMO is plus 1177 at the close. Looking for NYMO to continue its pattern of cyan bars being completed. We've got about 8 of them so far.
They also have really not seen the patients come back since
The dollar was higher earlier. I have to go check that. Still higher. The dollar is trading 105.30, starting to fade from the morning high. The 10-year yields at 4.31, and VIX continues its path lower. ARM is up, trading 66.74 this morning. It's up $3 from the close. Futures are below a descending 105 for those of you who follow the 105. Cycles turning upward. We have a bullish signal on Grover's cycle. Yesterday we had mostly bullish momentum. Kind of weird SPYs down here at the low. Okay. All right, so that's good. From the data I've seen still that a lot of investors are at least kind of neutrally. First 15 minutes of the trading day after 9:30, 9:35. I'm taking profits off in the strength usually into 9:45. We've seen the results of that recently with Roku. It popped last week on Tuesday or Wednesday. We sold into that strength, and it's been spending the last few days consolidating. Okay, here's Roku. We got 6 minutes to go. Roku, the Renko chart continues lower. So we sold into this pop to 95.84 in the first few minutes of the trading day. We're below the 50-day now. So the next level is 75. Needs to bounce in this area. Was hoping for a bounce at the 50. So some of you asked me about Roku. Needs to bounce. Tesla. We got the UAW striking today. All right. ARM is running pre-market. ARM.
We believe you can still find positive returns in the equity space in 2024 if you own the right companies.
Okay. What about
ARM is running.
higher octane stuff? Is that a risk point? The tech companies and some of these AI things are going to be powering up and getting
5 minutes to go. 5 minutes to go.
viewed with 100 times trailing earnings. It's a pretty unique starting point.
Yeah. You know, it's so interesting because I think when you have a broad brush and you paint a whole group of stocks with that broad brush, you can make mistakes. And you know, when I take the big seven, for example, you could say valuations are out of control. It makes no sense. But you might find one or two of those stocks within the seven that have really good revenue growth. You know, double-digit revenue growth for a large mega cap company like those. That's pretty amazing. And then the margin profile has looked pretty good, resulting in. And so,
All right. Let's get Woody up and running.
one or two of those, again, depending on the investor profile and what they're looking for. So I hate to paint a broad brush. I would say, though, generally speaking, when you look at some of those names, they don't have the revenue growth. They certainly, you can see margin pressure coming, and that does really worry me. And I think that is the power of active management right now. In fact, Morningstar put out a survey, not a survey, their study this morning.
Ooh, let's see. DraftKings
Managed funds had
up a couple of pennies. What else is going on here? Rivian, nope.
outperforming passive. And that's a change, as you know.
Cleveland Cliffs. Pretty much everything is
With the regime change that we talked
flat on the day so far. Let's see what is working. Take a look at the NASDAQ 100. Give us a flavor for how we're going to open. The NASDAQ 100 is 90% red, 10% green, led by AstraZeneca, Seagen, Apple's moving up the list. Okay, we just added a whole bunch. A whole bunch of stocks just went green, like about 30. Okay, let's see what's going on there. AstraZeneca. AstraZeneca looks pretty good on the 60-minute.
With Schwab Order Execution Advantage, you get price improvement on 96% of orders and commission-free online trades.
Top 30. QQQ. NDX 100.
Accelerate your market knowledge. Shift your perspective into full view. Real-time example trading. Full hours of business. On top line, uncovered news. Catch me on Fast Market. Weekdays at noon on this podcast. Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
All right, we've got 2 minutes left to go. 2 minutes. big move lower just now. S&P at the open. Okay, any puts that you might have taken? The puts we took, when was it? Wednesday? Take them off. Taking profits. All right, that was good. Looking for a bounce or a continuation lower. Good morning, everyone. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. We're looking for some follow through in some of these names. There goes Tesla. Tesla's on the move. Tesla likely gets a nice bid today with the UAW strike. Be looking at next week's calls, not today's. Me personally. Tesla on the move. Okay. Let's keep an eye on Tesla for now. Today, we had U.S. import prices. We had New York Fed manufacturing at 8:30. Industrial production at 9:15. U.S. manufacturing output 9:15. Industrial production number was higher. University of Michigan sentiment, looking for that at 10 o'clock. That'll be an important data point. University of Michigan sentiment. All right, we added about 40 stocks green on the NASDAQ 100. Right now, the sectors are all red. Sectors all red. Okay, we're moving lower. Okay, 445 would be the next level lower, right? 4492 S&P. 4492. We're at 4486. All right, S&P. Big gap down. We're down $1.80 on the SPY. On the SPY, 0.4%. Waiting for. We could come back down to. What is that? That's the Thursday low. Thursday low was at 4432. That's 50 points. I don't see us dropping 50 points. We might fill the gap and maybe make it to 4460 on the S&P. Right now, I'm just waiting for a bounce. MSOS, big pot stocks. Let's see what they're doing. Tilray popping up today. Tilray. Tesla. Rivian. Rivian continues to drive higher, trying to get to 25. Rivian.
fiscal 2024 pricing benefit. And Mizuho did note that it was clear that the bar was high heading into the print, higher than most investors even seem to think, but does think Adobe is very well positioned to benefit from the digital transformation, kept the buy rating on shares with a $630 price target. So median price target for Adobe right now, $616, currently trading around $527. About 70% of analysts have a buy rating on Adobe shares, despite the fact that it's seen
Rivian higher, Rivian.
percent gains over the past year.
Yeah, a lot of love for this stock for sure still. And I will say,
Unity Software.
definitely sizable on a pretty quiet day so far for stocks, but it doesn't really show up on the chart just yet as anything meaningful. Start trading below 515 bucks, maybe it gets a little bit more interesting technically. Not the only one with earnings though. Let's talk Lennar.
Carvana.
Still looking pretty good.
Pulling back a bit.
Situation for the home builder. It's actually even been a bigger one over the past
Okay, let's go see what is what's doing here. Okay, most actives, Disney, 85.60, still in a downtrend, trying to break that downtrend, Disney. If it gets above the 50-day, that would be a big change. Then you'd have the 100 and the 200-day, Disney.
Historically low inventories in the market supported demand for new home construction. Easing supply chain issues also helped improve delivery time. So this was a beat on both the top and bottom line. Co-CEO Stuart Miller said market conditions remain constructive for new home builders during our third quarter. Tight housing supply, absorbed by strong current and pent-up demand, continued to help sales.
Okay, we're still a bear flag on the S&P. Keep an eye on Tesla. Tesla trying to bounce. Carvana, 55 and change, trying to bounce here after a little dip this morning.
With average selling prices consistent with Q3. So that actually came in better than expected. Not a whole lot of analyst activity, but Wedbush did maintain its neutral rating on shares, $123.
Tiger, up FinTech on the move.
Taking a little bit of a break this morning. So down about 4%, same as Adobe.
Fubo higher.
A sign that this market is maybe expecting a little bit of,
What is ARM doing? ARM.
Man, these are fine figures, but stocks are some pressure. Thanks, Caroline. Let's bring on
Okay, a little dip. ARM looks like it wants to keep going.
right. None of these numbers are bad. Adobe, Lennar, it just seems like another sign that the market has gotten a little bit frothy. And when you've got rates moving like they are, some of the other inflationary stuff is kind of percolating in the background. Why not take a little profit in one of these stocks?
Tesla. What else is going on here? Microsoft lower to start. Roku lower to start. NVIDIA lower to start. SPY. Flat BWAP. Oh God, this guy is so annoying. All right, watching the S&P on this gap down. Tesla pulling back a bit more. All right, S&P looks like it might drop some more.
Do stocks always have the exact worry right at the right time?
Not always, no, but I think as we've seen how the Fed is reacting.
Blackstone pushing a bit higher this morning. Blackstone, BX, Bravo X-Ray. Bristol Myers pushing higher.
I don't know if that's a good thing or a bad thing necessarily, but it is a thing.
ARM is at 67, consolidating.
We don't know if that's going to continue in November or if we're done, but the market largely over the last few years has seen no tightening or potentially lower interest rates is stimulative to, let's say, tech stocks. Doesn't necessarily always equate to that.
All right, SPY's still sitting here at the low.
It looks like the market's view of the
Looks like people are buying 445, 446, and 447. The calls, puts are at 448 and 449.
To your point, there is no uptick in the expectations for the Fed. There's about 1 percentage point.
Need to get back above 448. Calls being bought.
By December, coming in this week feels like 43.5. So to your point, the market has basically said the Fed's not going to have to do anything about any of these developments.
Look, over the last few years and months, the market has not been the most accurate at projecting the further out in time we get. That's been clear.
Correct.
But they are pretty accurate when it comes to the immediate meeting. September's off the table, probably was always off the table.
For sure.
The question's going to come in November, being at 45% or in that range, or even 35%. It's on the table still. It might not be favored at this point, if you will. But, if there's a couple more data points that suggest an economy that's still holding in there, I don't know that we can say it's not going to happen. I'm not sure that the impact is that great one way or another. But the sentiment.
Okay, Tesla pulling back pretty fast. Tesla.
However, I also said it's been passed to something else. And in my opinion, that something else is the economic process.
Still early. Gotta wait for clear direction. Okay, NASDAQ 100. We had about 30 stocks green. We're building about 35 now. Becoming more bullish. Let's see what the sectors look like. Tesla pulling back. Okay, we are adding more sectors. Those are defensive. XLU, XLV, XLP, pharmaceuticals, and biotechs. Semiconductors, once again. Semiconductors will be up a couple of days, and then it's down at the bottom of the sector list for now.
It's always kind of trailing, right? Hindsight game of analyst expectations. You were looking at a bunch of comments.
Apple pulling back.
That has some tech companies recovering. Wanted to hit that real fast since you're talking about kind of
Apple's off 60 cents, 70 cents.
post-arm yesterday. Anything dramatically changed?
Yeah, a couple things. First off, I'll start with this since it's the shortest part of this story. Instacart's also slated to go public here soon, Oliver. After ARM, they're now adjusting that indicative price of what they're looking for to a higher level, trying to
Apple's still pushing lower.
optimism that ARM basically debuted. So this is where it comes to be a little bit more game theory. Do you want to see your investors get more out of this IPO?
I will say the cycle has been turning in terms of NIMO and tick cumulative. So we're looking for a higher low. We're printing higher highs right now, or were yesterday, I should say. We're only trading 1-to-1. So it's not a huge amount of selling volume. Very few blocks. IWM has most blocks. We have 7 blocks on the IWM, 2 on the SPY, and 1 on the Q. So it's not a ton of selling. It's an options expiration day, triple witching. Hands off for now.
Impressively, after the recent moves we've seen with Oracle, they have it at a buy with 144. So they saw maybe kind of what I saw, which was a pretty strong report, and maybe just a name that had seen its valuation swallow a little bit, is not one that typically sees a higher valuation, price readjusted just simply because the ball got too high.
Yeah, for sure. So we're saying buy the dip on the stuff that
Tesla looking for a bounce. Not a whole lot of selling.
That includes, a few of the big cloud names, as mentioned for Oracle, but CRM as well, which didn't break out on earnings and try to pop when it came back in. So we've kind of had the little sideways action develop in a lot of these key tech names outside of the mega caps. Zoom too, they throw in the mix. So I mean, this is a pretty bullish, sweeping commentary.
I like too that you mentioned Zoom, because I look at some of the other names that are mentioned here. DocuSign is one that sticks out. DocuSign, they actually initiated and reduced with a $42 price target. DocuSign's struggles have been widely, of course, public and known.
All right, institutions appear to be absent.
Price action and impacts post-pandemic. In a way, kind of the tech world of supply shock and demand shock worked through it, yet they were able to see positives in Zoom, still concerned about DocuSign. So it isn't as simple as they've looked for the names that have done well, they like them still, and the names that have struggled. There is really a feeling of
S&P sitting here at 4482.
and making a call. Palantir, another one that I know is quite popular. They're sort of neutral on it, hold with 16. Sort of the story that maybe they're not at that critical point yet, but there is maybe still a lot to like for the future for something like Palantir.
And
All right, S&P.
yesterday talking about AI. That didn't seem to have a big effect on anything really. Tesla, those stocks just kind of still grinding sideways a little bit. Tesla slowed down after a couple big days. In terms of what comes next, obviously we've got
Tesla pulling back pretty hard. S&P pulling back.
Maybe we'll see in comments, but I do think that back to your point about Instacart and the IPO world.
Okay, we're at the below the 50-day now. S&P.
Shows up and tries to take advantage of this moment where there's some ability to absorb new supply. Because there's, even though Instacart's what people are talking about, I mean, there's a lot of stuff that still is in the private market.
Still on a sell signal from the open, even though we gapped down. Looked like we could see some buying coming in.
Privately held companies in the tech world that,
Not yet.
and if they do come to market, would seemingly signal a pretty big regime shift.
Today's a triple witching.
You start seeing IPOs come in and do really well while we're at 5% 2-year rates. That would push against a lot of the bear case that the higher for
Tesla's still dropping.
situation and policy would be enough to keep the market under pressure.
This is
Apple,
interesting conversation.
some decent volume this morning.
Apparently, we think of interest rates
On the downside, Google, ARM pulling back.
But if interest rates are higher and the market can handle higher rates, it just inherently means the market is stronger, the economy is stronger. You cut rates and bring to zero when things are struggling, they need stimulus. So rates, I think, are actually more correlated than you think to a stronger economy.
Well, historically, they absolutely are. There's no reason why rates are has to be.
Not all IPOs are going to be equal. We'll see if Instacart can be armed.
Right. Okay. Well, it's not quite as, it's Instacart. It's fine, but it's not like that exciting. I don't know. Maybe it is kind of changing the world. I don't use Instacart, but I know people do. Okay. Thanks, Alex. Thanks. Appreciate those things. When we come back, let's talk more chips and those connected to the auto world, which have been good.
All right, starting to see a buy signal on SPY on the S&P. Wow. Oh, that was the AM. Okay, AM. PM expiration, S&P. I was just looking at those calls. It's like, wow, that's really expensive. S&P looking for some early short covering signals here. Looking for shorts to cover. Either we bear flag or reverse. We need to see a half a dozen or more candles on the upside and get through back through VWAP, or the prospects of potentially moving maybe 50% into the gap, right around 4,500. So far, no good. Sectors, only the defensive sectors, utilities and healthcare. Pharmaceuticals are in a bullish trend for now. We've got 30 stocks on the NASDAQ 100. Out of 130 stocks are green. Most of them, it looks like a good mix. PayPal is higher. It drifted lower. It's like people taking profits early. Amgen, might do something there. Amgen. Regeneron, nothing yet. Skyworks. Walmart pull back. Tesla. Amazon dipped. Microsoft dipped. Everything's dipping. No reversal yet. Still looks like a bear flag on the S&P. Tesla still drifting lower. Tesla. We got University of Michigan consumer sentiment at 10. We'll see how that has changed over the last month. NIMO is at the zero line, minus 3.4. It was plus 19, it was 11, 14, something like that. It was positive at the close yesterday. Making higher highs and higher lows. Let's take a look while we're waiting for the indices. All right, we're pushing a bit lower now. Advanced decline percent briefly turned up yesterday, turning back down. So it's neutral. We're neutral at the moment. Looking for a higher low and a higher high if you are bullish. Presently looks pretty neutral. Look at the NASDAQ in the lower panel. Small caps, mid caps, bottom to top, and the S&P in the top panel, all saying the same thing, neutral. Longer term, the trend has been changing direction. You can see NIMO, that black line, NYSE, is turned up. Starting to turn up over here in the bottom right corner. That could be setting up for a rally next week. Okay, we're losing some green candidates. We've got about 25 stocks on the NASDAQ 100. 25 out of 100 are green. We need to see that build. More green. More bullish. Dow 30. 50-50 on the Dow 30. Disney's number one. It's up 1.5%. Disney. It's flat now. Flat at VWAP. United Health is on the move. UNH on the move. Let's take a look at United Health. United Health, UNH. Yeah, that looks pretty good, actually. If it gets above the 200-day and the 50-day, United Health looks like it could run.
And a nice little bullish thought for us here this morning. James, thanks for the contribution. Appreciate it. Guys, I'm on here. Just checking here. And then on some of the big key players, NXP is another one. I think about the auto link chip makers. Let's just start with NVIDIA first, though, because it's kind of drifting. You know, it's not down, it's not out, it's drifting.
Right. And I think a lot of investors and traders look at this.
Okay, so you saw no, you didn't see advanced decline percent. Advanced decline percent is neutral. NIMO is more bullish, looking for a follow through next week, but advanced decline percent at neutral at the moment. More bear flags.
Cycle, so 35 days till expiration. You got a month, right? Just selling it out of the money put vertical. So I looked at selling the 430 strike put and then buying the 410 strike put. So you're creating
United Health looking for push higher.
Vertical, collecting roughly a $5 credit, right? That's what you can make out of $500. But look at that break even.
S&P bear flag starting to break down.
Over the next 5 weeks, that's about 6% below the current share price. So you're giving that yourself that cushion, and the probability that NVIDIA at in 35 days will be above that 525 break even is about 70%. So you're giving yourself better probabilities that it doesn't crash. Right. Exactly.
S&P dropping off.
To buy in case something does happen.
Okay. So sell the put spread to the downside for roughly a month out.
Right.
Okay, so give yourself a month to that NVIDIA doesn't break down. Lower by 1.5% roughly today, 448. You know, we're not having a great session here to start off on Friday. Nasdaq's down about 1%. So,
but it's a perfect day to kind of implement that type of strategy, right?
Yeah, it's Friday.
Yeah, it is Friday.
Okay. You're looking at OnSemi as well, right?
Yeah.
Similar kind of looking chart at this point.
Yeah, it's still up over 50% this year. It's had a good run. The growth is in the automotive sector, a little bit of AI in there also. But then you have to also think of their cash cows, right? If you look at what they are, 5G in the cloud, they still have those businesses, but the growth isn't there. But they're relying more on the growth in the automotive sector and moving into AI. So look at a strategy that takes advantage of the slight pullback that we've seen here, but giving myself duration, right? So you can buy a call for a directional bullish trade, but at the same time, there's still a lot of option premium, even though on semis implied volatility on an aggregate basis is at 52 weeks. Well, I looked at buying a call vertical, but I went out to the January monthly cycle. So about 126 days till expiration, Oliver, giving yourself about 4 months, right? Because you want to give yourself some time. And I looked at buying the 90 strike call in January and then against it.
All right, Paramount pushing higher. Let me go take a look at small caps and mid caps, IWM. Okay, IWM still hanging out above the 200-day. Okay, so University of Michigan sentiment is coming out in less than a minute now. Okay, let's take a look at that real quick. University of Michigan sentiment. On July 14th, this was at 72.6. We're looking for this to be above 72.6. About to be reported here.
This one works against you. It's directional, but you don't need a massive move to the upside. And you're giving yourself duration.
Okay. All right. So essentially, you may be aware of this, but it's buying the dip. These two trades.
University of Michigan sentiment.
With the loading session, we get coming off here. Chip's not having quite as joyous of a session so far. Yesterday, actually, they
Ooh, that's really low. 67.7.
Thanks, Tom. Thanks, James. Jim. We're an hour two when we come back. We got consumer sentiment data coming up. We're going to trade Disney as they look to try and spin off businesses, short bottom line, and we'll talk about a new biotech stock that's just
All right, we're starting to blast in the other direction. All right, shorts covering for now. 44.78, 44.78, watching that level. All right, so that's much lower University of Michigan sentiment. S&P still trying to change direction. Nothing yet. VIX is at the highs, just dipping back a little bit. Right now, everything I'm looking at says neutral, hang out. The dollar just dropped pretty dramatically, so did the 10-year yield. So maybe they're looking at that weaker number as potential for the Fed to pause even more. Hard to read it at this point. The estimate was 69. The sentiment came in at 67.7.
available anytime, anywhere,
On any device for free.
Schwab Network, empowering every investor and trader.
Every market day.
Rig pushing higher. Rig pushing higher.
Empower your portfolio with the Schwab Network. Available anytime, anywhere, on any device for free.
Okay, rig's pushing a bit higher. That needs to get above 950, something like that. Let's see. Last time I looked at it, rig. Energy stocks. Okay, here is rig. Okay, so through 9 would definitely do it. Longer the base, the higher in space. Looking for a rig to break out. Let's see. Crude oil. Still trending. Since breaking above the 200-day back in July. Crude oil. That's a headwind for U.S. equities. Crude higher also technically should affect the 10-year yield, but the 10-year is still hanging out below that October high. Pushing down.
We're also going to be talking about a new biotech company that just debuted in the last week, about 10% so far. Dianthus Therapeutics is targeting autoimmune diseases and a few other efforts.
VIX still dropping. The dollar still dropping pretty dramatically. The dollar. The high, the dollar was 105.43. It's at 105.13. VIX backing off. The 10-year backing off. So let's see if we can get anything going here. New York FANG index. Okay. Back to the 50-day. Just below the 50-day. Did we bounce here and take out the bears? I mean, NIMO is certainly in a bullish trend, NIMO. NIMO is certainly in a bullish trend. Turned up, made a trough, turning. We got NICE trying to turn up. It's got a little hook right there, higher low.
get a closer look here, but I'm noticing
Cycles are beginning to look more bullish.
in a minute whether we were seeing some weakness already
Grover cycles right now
into this number. So we'll see
showing that
things get
bearish
closer as we move
flow for now. Another bear flag potentially.
Some treasuries on the move here. We've been watching the dollar, which has come off that 105 handle, and looking at the number here, yeah, definitely this is going to raise some concern. Sentiment, looking at 67.7, the current conditions coming at 69.8, so across the board, a little bit softer consumer expectations at 66.3.
Okay, we're starting to turn.
66. The one thing that we should be keeping an eye on here, obviously ahead of the Fed, is the inflation expectations component, which have been and continue to, but they're coming down here right now, Oliver. 3.1% for the shorter data, that's the 1 year, and 2.7 down from 3 for the 5 year. So again, looking at multiple components associated with this number after better than expected industrial production earlier, which I think started to weigh on the indices, start things off here now. Again, Michigan sentiment, definitely, again, one of the numbers to keep an eye on here, as I mentioned, with inflationary pressures and price at the pump or energy prices on the rise.
It's interesting to see how this is affecting the market so far this morning because we did have a pretty juicy little bond sell-off to start things off. Didn't seem like stocks really liked that. But you're looking for data to come in.
All right, still looks like a bear flag until it's not. Watching the S&P.
This might be a piece of that, but it really depends on the inflation expectations. That's what's going to be key for trying to apply this into the macro narrative for the Fed next week.
Tilray higher.
Necessarily the most closely watched number. Keep in mind, I think there's multiple
Range bound.
investors and traders. This, as I've been saying all week, we've been able to shrug off some of the negative, focus on the positive. The market, the way I see it, in this holding pattern since June right now, 100 points off the highs of the year from July. Oliver,
GM doing exact opposite of what you would anticipate. I thought we would see a drop off, but GM's actually moving higher, not lower, on this UAW strike. Huh. Interesting. So the White House is talking about economic aid to who? To the company or to the strike, to the workers? Let's see what we got here.
Probably not the biggest number of the week either. Agreed. What we're watching for. So CPI was the real tell here, I think, and again, tying back into those higher.
President Joe Biden on Friday will deliver remarks on the contract negotiations between United Auto Workers and the Detroit 3 automakers. On Wednesday, the White House economic advisor said the president wanted both sides to work, blah, blah, blah. Biden's administration is also discussing emergency aid to protect smaller firms that supply U.S. auto manufacturers. Okay, so supplying the U.S. auto manufacturers, not direct help to the unions. They have their own piggy bank. Okay. So there you go. GM moving higher, not lower. United Health, still going. United Health. S&P rolling over again.
This year for a company that's in kind of a turnaround mode. Yesterday we saw their thing about spinning off ABC.
Yeah, we are seeing Bob Iger continuing to make adjustments when it comes to the
United Health continuation.
Some news that came out that they are looking to sell ABC, and really Bob Iger has put out there really that pretty much almost every business segment within Disney is up for sale at this point in time if there's a bidder that makes it a profitable type of sell. But ABC is definitely in the crosshairs, especially when you're looking at Nexstar here. So that's what the news was yesterday, and they are
All right, rolling over.
So I think that's going to be once again an area where Disney is trying to shed some of that dead weight, if you will. We are seeing the shares up around 1.3% at this point in time. And we are also kind of seeing some reports actually yesterday afternoon that they're actually reducing their subscriber target and in fact potentially even reducing the guidance when it comes to their subscriber target moving forward here.
Dollars at the low.
The market already did price that.
VIX bouncing, the 10-year bouncing. All right, so there's a lot more noise here. We've got a major OPEX triple witching. Tesla still rolling lower.
Deal that they should take. I mean, the market's screaming out for them to either streamline their business or, I mean, I think it's just screaming out for them to streamline their business, right? I mean, I don't really know what else the other option is right now. They can't really cut costs more. I mean, I guess maybe they can. They've already made layoffs. They've already bring down costs of the streaming expenses. I guess maybe that's the other option that they could still do is stop spending so much on that Star Wars shows or what.
I think the market right now is basically telling
They keep trying to sell it lower, and either shorts or new money's coming in here and buying right here. The S&P. I'll keep an eye on it. Still early. It's only 10:10 on the East Coast. 10:10 wins in New York City. Good radio station. Rig looking for a follow through. Rig.
here, and you want to continue to see that grow to the upside and make raise prices in order to improve their margins. You want to kind of continue to see that trajectory. I think that also does have some risk when it comes to cyclicality and economic cycles at this point.
Yeah. All right. So the upside here the last 2 days seems to be telling us that the deal's not a bad offer. I mean, if and by the way, it actually goes back to last Thursday, so it's really not a week, but yesterday pop followed through here today, down market too, Disney up. You know, it's been one of the worst performers. That's pretty surprising. I think we got to attribute that to this news story.
Yeah, and I think also investors are looking at value in the marketplace. And when I say value, you're looking at historical valuation from a PE standpoint, also from a price to sales standpoint, and they're starting to try to bargain from here a little bit. And it's not only just Disney here, however, you're seeing it in utilities, which is happening. You see that pop.
Okay, we're testing a low, maybe taking some stops for now. Still on a sell signal. VWAP overhead. Dollar trying to bounce, so is the 10-year and the VIX, so that's bearish at the moment. Tesla starting to turn. Tesla turning. Roku still lower. Lost the 50-day. Microsoft gapping down.
The market knew that. You could see every analyst on the street could see that they were not going to be able to hit that target whatsoever.
All right. Well, another risk that's what at least buyers interested in their businesses could potentially put a floor in there. I think it's
Okay, S&P. Okay, technically yesterday was a lower high. We had a lower high a couple of weeks ago at 452 on SPY.
Yesterday was like markets up, Disney up, maybe a little bit more of it. The follow through today, Disney up, market down, a little bit different. $10 billion, it sure can produce a lot of fast dollars. You telling bitter about the $5 billion content?
You are a little bit upset about that. Once again, I think from a technical standpoint, from a valuation standpoint, however, it is trading up through this low levels on the downside. So I think that's why we are seeing some buyers starting to stop in here. I'm not sure how long it's going to last.
VIX spiking a bit higher.
Low ticker minus 800.
I think so, but one thing for sure, the course is not with you, Oliver, right now. Wow.
Well, I like the one they did with what's that guy's name? I forget. They did one of them that was good.
The
Andor. That was a good one. Everything else, garbage.
Agreed. I am in full agreement with you on that. So
S&P still weak.
Maybe the force is with the stock.
Bear flags. VWAP turning down more.
As Kevin pointed out, some key technical metrics and the bottoming formation that we're seeing now. Right now, we're bumping up against that 50-day moving average. So this will be a key level here, right around the 86 level. But I do think that based on some of the dynamics that we will see regain that 50-day moving average here in the next month or so, and potentially even see more upside. As I think the worst has been priced into Disney, I think Iger is going to be aggressive in reshaping and restructuring the company to get it back to some sense of profitability in the next several quarters. And he's going to take some pretty aggressive steps. He already has, and I think these steps will ultimately benefit Disney.
Okay. So you're kind of in the similar boat that I'm thinking here, because everything, aside with the streaming product, just the technical action, when the market's down, and there were a couple sprinklings of bad news in here alongside the good news of the potential ABC buyout. I think it means something when the stock is up. But is this something you want to buy calls in, or do you just sell some downside maybe?
Yeah, there's a couple of thoughts that went through my head when I was looking for this trade example, but I think to keep it relatively clean, because there's still a fair amount of uncertainty in Disney when you look at it from, yes, I think that it hasn't made a short.
Okay, today's sentiment, you can see, is mostly bearish. We got some work in utilities, some bulls in the utilities, healthcare a little bit. Right now, bearish to neutral, not doing anything.
So I'm looking at a call spread and pushing it out to November, 63 days, Oliver, in the November complex, and looking at the 85-95 call spread. You can buy that here around, with a stock around 85-85 at the 360 level. So you have to spend some money to put this on, a little bit, undervalued. Intrinsically, it's still not worth anything at this level, but it's still, the 85 call is in the money now by almost $1, and I think, to capture further upside, this is one potential way to do it without having too significant of downside risk.
Okay, shorts covering, that's about all this is right here.
So I think that's something that, is somewhat compelling if we see Disney continue to maintain this upside momentum.
Okay. So you're basically breaking even a couple bucks away from you here.
Right.
So you
Exactly.
need a solid little bounce still on top of what we already got.
You do, and you need to break above that 50-day moving average and see where the momentum, if that momentum is able to maintain, because the 200-day moving average is still looming above. So, when you look at the 50-day below the 200-day, that is historically, certainly not a great sign, but it does appear that there's some shifting in the general trends of the trajectories of those moving averages. So I do think that if they continue to cost cut and see some benefits from, restructuring, that Disney has the potential over the next 2 months. That's the other reason I kind of pushed this trade example out to November, to give some time for this to develop. And again, as you pointed out, it's $2 above where it's currently trading, where the intrinsic value is. But then after that, you can capture potentially $7 on this, or just under $7 on this trade, and then still have that defined risk to the downside.
Okay. And you're giving yourself a good bit of time here. So, pay up a little bit for the time, but 316 not the most expensive trade.
All right, we continue to make bear flags. Reason to be cautious is obvious on the screen. We would need to see, I would say, a dozen or so candles back in the opposite direction and move back above VWAP for a shot back to 44.95. 4,500 is this level overhead. That's a gap down. The middle of the gap down. VIX is still pushing higher, though. We have a headwind for now.
Bullish view there on Disney over the next 2 months. Dynamic Managing Partner, Take Care Financial. All right, when we come back, let's talk about another stock that debuted this week. Not ARM. We're going to shift over to the biotech world. Dianthus Therapeutics is up about 10% since it started trading. We've got the CEO joining us next.
ARM starting to bounce. Let me go see what we've got on ARM.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
Wrap up the trading day with me, Oliver Rennick, for the biggest earnings coverage, 3 p.m. Eastern. It's Market on Close. No place better than the Schwab Network.
ARM.
All the need-to-know info from every trader.
Okay, what does the quant say? Wall Street says it's a strong buy. Quant obviously doesn't have much of a coverage on ARM. I'm talking about ARM.
Any device for free. Recap your trading day with the rep right here on SchwabNetwork.com.
Kickstart your morning with a full dose of commodities, technical analysis, economic data.
All the analysts are saying sell ARM. The IPO valuation is expensive, yeah. Okay, so we need to see a dozen or so candles. We need to get back through VWAP to have any chance of getting close to yesterday's close or fill this gap. We need to see solid price action and volume. The dollar still bouncing. All right, so we got mixed signals from the dollar, the 10-year, and the VIX. Let's see what the cycles look like. Okay, Apple's turning. That'll probably trigger a buy signal here shortly. Apple, Netflix.
We started trading on Tuesday. It's a very exciting, transformative time for Dianthus. The path we took here, we were approached earlier this year by a company called Magenta Therapeutics about a potential merger. So, and the opportunity of going public through this reverse merger. And what was attractive for Dianthus, for us, is that at that point we started seeing very early data from our lead clinical program, DNTH103, an antibody we're studying for various neuromuscular, or plan to study for various neuromuscular degenerative diseases. And we started seeing that we had really, really exciting data, and that this product had the potential to do even more than we thought possible. So the idea of merging with Magenta was attractive for us on multiple fronts, because it would allow us then to conduct a concurrent financing. The feedback from investors when we proposed the idea of this merger was very positive. And then at the completion of the merger, not only would we be a public company with access to the capital markets, but we'd have what we
All right.
now $184 million on our balance sheet. That allows us to be able to kick off multiple phase 2 trials with the MTH-103 in 2024, as opposed to having to phase them and make patients potentially have to wait for this therapy to be approved at some point in the future and have access to it. So I'm very excited about the merger. It's really allowing us to fully maximize the value of the MTH-103 for patients who are suffering from some pretty severe autoimmune disorders.
What is the population of potential patients that you're targeting here for that lead antibody DNTH103?
So the plans we have are to start phase 2 clinical trials in 3 conditions: generalized myasthenia gravis, or MG, and multifocal motor neuropathy, or MMN, and chronic inflammatory.
All right, just studying some scans here. Not a whole lot to do. We got bearish, mostly bearish sentiment. You saw the market carpet continues to. This is what it looked like. Update this and see if there's much of a change. There's a few more greens coming in. Okay, so that's a good sign. All right, so we had a lot of selling at the open. Most of this was red. Now we're starting to see some green in financials. Visa, JP Morgan bouncing. MasterCard. All right, let's take a look at some of those. MasterCard. All right, intraday, short term. We're still seeing some weakness. MasterCard looking pretty good at the highs. Speaking of Marriott and Hilton, those were both moving higher. Hilton's trying to break out.
We didn't stop there, of course. Then we modified the antibody to try and push out its half-life.
All right, SPY, another bear flag.
And what we saw in the phase 1 data that is a very favorable safety profile, which is fantastic, but also that our goal of extending the half-life, or in other words, making it longer lasting, worked. It achieved a 60-day half-life. What that allows the patient ultimately is the ability to get the kind of efficacy they're used to with this class of therapies, the complement therapies, but at a potentially much lower volume, less frequent.
Okay, folks, I wouldn't do much of anything right now. We're not getting any kind of bullish flow that I can see. The cumulative had turned up early. Yesterday looked really good. We got all of Thursday with a green signal on tick cumulative. With the fast signal turning back down, that's on the short time frame. Let me see what the 4-hour looks like. The bigger picture. Okay, the 4-hour is giving us more of a bullish picture, which makes sense because we have NYMO with that trough continuing to move higher over the last 3 weeks. Intraday, NYMO is telling you it is an OPEX. So we're right at the 0 line right now. Need to see a higher high. Technically speaking, NYMO created a higher low right here. We need to see a higher high now. I'd stay cautious. If you're going to trade anything, trade in the financials.
Issuance, any debt issuance? What does the financial runway look like to accomplish your goals here?
So we've stated that with $184 million, we have a runway that will take us into the second quarter of 2026. That definitely allows us to kick off the phase 3 the 3 phase 2 programs next year. And myasthenia gravis, we are expecting to have top-line results from the phase 2 program in the second.
Tiger, what's that doing? Tiger up FinTech was higher earlier. Tiger, it's flat. Okay.
Looking forward to following on and keeping track of the progress. Marino, so definitely keep us up to speed. Thanks for being here.
Thank you very much, Oliver.
You got it. Marino Garcia is the CEO at Dianthus Therapeutics, DNTH. Coming off the chart masters, got some technical thoughts for us. Marino's going to walk us through a few of the fundamental updates on DoorDash, FedEx, and Celsius. A wide array of themes when we come back, looking at the big success story in the energy drinks of Celsius. But right now, down slightly as the market's under some pressure. Bulls abound, though. The latest initiating coverage with a $250 price target for Celsius. FedEx has been a big winner as UPS has lagged. And DoorDash has actually had a great year. It's going to transfer its listing to a new
My dad was a hard worker. He used to do side jobs, installing windows, charging something like $100 a window, and other guys were charging $400 or $500. He just didn't want to do that. He was proud of the price of just charging. My dad instilled in me always put people first. Be proud of offering a good product at a fair price. I think he'd be extremely proud of me.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Wayne.
Each and every angle, the whole picture, every day, comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360 over on Schwab Network.
Download the Schwab Network app and join in on the latest market trends. Available anytime, anywhere, any device, for free. Schwab Network. Accelerating market knowledge.
All right. I don't see any reason to get very aggressive today. A couple of weeks ago, we talked about the turn in NIMO that we might get more aggressive into the previous week and this week. That worked out pretty well. Currently, we're creating a lower high, so that's something we need to pay attention to. If you're trading or if you're investing on an investing time frame and you're not interested in this day-to-day back and forth in day trading, if you're just investing, then you're nibbling here and there. Okay, we technically have a lower high. Oh, you don't see what I'm looking at here. Hold on a second. Okay, technically we have a lower high. Boom, boom, boom. Now we need to take out yesterday's high. We need to reverse hard, get back above VWAP. If we start seeing more sectors go green on that heat map, all right, this is what it looks like now. Let's see what it looks like if I update this. All right, so you can see a bit more green. Still a lot of red. But what's changed? What has changed? 2 steps forward, 1 step back. We had 2 steps. Wednesday, Thursday, higher. We got above the 50-day. Now we're coming back 1 step backward. Texas 2-step. Looking for, if you're bullish, you want to see we got to take out the high of yesterday. So we need to get back above 45.10 or so. If you're bearish, you want this to lose and head back towards this neckline. So right now I'm not doing anything because, we started the week with tight price action. Monday, Tuesday, Wednesday, very tight candles, you can see. very tight candles. All right, chopping people up. Got a little reprieve yesterday, got some bullish trades. Many of you were trading Tesla and Google and Amazon, Microsoft. But today looks like another, well, we got some selling there. So people taking profits into the weekend, which makes sense. But if you're investing time frame, take a look at some of the alternatives to day trading. TRBCX, we were buying this last December, made it up to 45%. You can see the wick underneath this week's candle. Now, will this be resistance next week? Possible. Fingers crossed. Because we know what time of year it is. All right, third line down, August 16th to September 30th. Tomorrow's August 16th. We'll start the week next week, which happens to coincide with a lot of things. If you read the Gamma channel on the site, on Slack, if you read the Gamma channel, you know that there's a possibility of going either way after OPEX because that relieves the dealers of their hedging. Some think that we could see a sell-off from September into October and then finally get a reversal then. Okay, but when the OPEX, which is pretty big this week, this Friday, today, when this OPEX is done next week, the dealers are going to reset their hedges. So not only do we have the hedges to deal with next week, we got the FOMC, we've got the in the boxes here, the short 4665 call. That's a JP Morgan collar. They're long the 4210 put, 4210 put, and they're short the 3550 put. So what happens? I mean, the call walls shifted higher yesterday to 40, actually 45. I think what was the number this morning? Gamma. The call wall shifted to 45.25 on the S&P. So it was 4,500 Thursday morning, and we pushed higher. Today, 45.25. Support 44.92, 44.50. We made it down to 44.74, and we're starting to bounce now. So if we can see volume come in here right now and start to reverse, then maybe there is a chance that we can get the S&P back above today's high and yesterday's high. If that's the case, if we get back above yesterday's high, then we look a lot better. I don't know, lower high. So the bulls really have to show up. Institutions need to show up and start buying. I see an Apple starting to bounce. Google bounced about 35, 40 minutes ago. So did Tesla. Tesla bounced about the same time. Shorts covering. Tesla moving the opposite direction now. That's pretty wild. So if you bought the dip on Tesla, you're probably smiling at this moment. All right, what else can I tell you? Let's take a look at the New York Stock Exchange. Before we do that, let's take a look at the S&P. Growth and value, these were back above the 21-day. Okay, they're balancing on a flat 21-day. That moving average is a 21-day EMA. Growth in the top panel. Growth in the top panel. Value in the lower panel. If you're using a barbell approach, both of these are neutral. And growth is no longer outperforming value, as you can see this line dropping in the top panel. So that's neutral. We're seeing this stochastic in the lower panel starting to turn. So that may be setting up for next week, along with what we're seeing on tick cumulative in a longer time frame, the 4-hour. S&P equal weight index, many stocks got down below their 50-day, down to 40%, 39%. So we're looking for this to move higher. CCI and number of stocks above their 200-day in the lower panel to move higher too. So we're neutral. I mean, either this moves higher, either these indicators move higher or lower. So it's going to be a product of institutions buying or selling. That's going to determine what we do next. We're still holding on to the 200-day and the S&P equal weight index. All stocks in the S&P are the same weight, not these on the top on the left. Okay, so S&P, these are weighted heavier, these big cap stocks. So everybody's always talking about them. If you remove the weight, you're looking at this chart. We're above the 200-day. We've tested it twice. Do we move higher? 50 days starting to roll over. We're in that time period. So if you're an investor, you're just sitting here waiting to put money to work, or you put money to work last couple of weeks. And positions like TRBCX. Okay, you can see daily is turned up, the weekly, buyers stepping up during the week. I guess the biggest issue is most everyone that listens to the financial news understands that this is one of the weaker times of the year. So you want to just chill. There's no hurry. You're in it for the long term. If you're in your 30s, you're not going to be retiring for another 30 years. So let's see. Let me go take a look at what I wanted to originally look at was NYSE. Looking at the new highs, new lows. All right, we want this to be above the zero line. It is presently above the zero line. So what does that mean? That means if you take the number of new highs on the New York Stock Exchange, 2,700 stocks, subtract the new lows from the new highs, guess what? You got a positive number. You got higher lows. So this is not my opinion. This is the data. Higher low. You know what NYMO looks like. Let's go look at NYMO. So remember this chart. Okay. NYMO is higher. Okay. And trending. Short term, yes, we've got some weakness. We've got green elder sticks on the NYSE for now. This is an end of day chart. So the upper panel was yesterday's close. Let's look at one other thing. S&P 1500. S&P big caps 500, small cap 600, mid cap 400 is this chart. Where are you? Right there. Okay, so this is neutral to slightly bullish. We need to get back above that red line. It'll turn green. It is green already. We've got histogram bars, so I hear you, Vinny, but we're still moving lower. Yep, short term, they're still selling. So not doing anything, waiting for the cavalry to show up. We got a lower high sitting on the 50-day. Bulls need to be above yesterday's high, or at a minimum today's high. Bears need to see it below the 50-day. So there's a lot of talk over the last few months about the big cap tech names, and we should be looking at some of the small cap stocks that are underperformed, that are starting to show better risk reward, or have been showing better risk reward. Let's take a look. Let me just keep an eye on S&P for a minute.
Moving average is starting to trend sideways here. Points to watch: 254 to the downside, 270 to the upside, representing our old highs. Momentum starting to break down as well. We're in the bearish territory here. So kind of a mixed picture here, but heading into earnings, that could all change.
All right. still holding that nice trend line. Okay, so two pretty solid charts in Celsius. I think FedEx, but some recent weakness in FedEx sets up for an interesting earnings like we talked about last time. Coming in to report basically on the support line, which is kind of a nice situation for a beat. We'll see if they can do it. Thanks, Radio. Thanks, Rick Ducat. When we come back, get an update on Planet Fitness. Yeah, remember Planet Fitness?
Okay, some small caps. Let's see.
Great today, down 14%.
Nope. I'm just looking at some. I'm going to show you what I'm looking at once I do my initial analysis here. Let's see.
I would watch the flight attendants. They're not nervous, then I'm not going to be nervous. Financially, I'm the flight attendant. The relief that comes over people once they know they've got a guide to help them through. I definitely feel privileged.
Nope. Rig. Rig is trying to break out. MACD's above the signal line. Some of the small cap energy names like Apache pulled back recently, bouncing now. Let's see, Devon. EOG. EOG is trending. What's Diamondback doing? Diamondback Energy, FANG, trending.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere.
Yeah, a lot of small caps are at the lows. FA. All right, we continue to move lower here. First Advantage, what is that? Huh. All right, so here's a stock. I'm just looking at small cap stocks. First Advantage Corp. The company provides technology solutions for customers in screening, verification, safety-related, HR-related name. Let's see what earnings look like. So at this time, because some of these big cap tech names are at the highs, maybe some of them pull back. Need to start looking at what analysts are talking about, which is small cap, mid cap stocks that have better valuations. In the case of First Advantage, what's on the screen right now, FA. This small cap earnings are continue to grow, 1.12%, $1.12 for 2024. That's 11% gain or change for the better. K-Force. All right, so this one looks pretty interesting. Watching this base, it broke above 1430 and pulled back. Volume looks good. It's a fairly low traded volume stock. I like to see these average about 300,000. It's about right along the border of 300,000. K-Force. You could also run some scans on FinViz. I'd be looking at small cap stocks. Set your criteria to small cap stocks with bullish earnings growth over the last 6 months, year. Run a scan and then look for stocks that are above their 921 day. For example, had Microsoft. Microsoft's still trending. They did pull back today. It's trending above its 921 50-day. You see the 50-day is flat. Price came right back down to the 50-day, starting to find buyers. The 21-day will cross up probably next week. I'm looking for stocks that are in this area right here. Okay, breaking above a base, starting to see a trend higher in the small and medium cap, small and mid cap sectors. All right, so I'm scanning through that right now.
Fall from grace after $100 was the 2021 high, and expectations they'd be able to thread the needle in the workout business world. This is now the lowest, basically, other than the COVID low. Let's bring in our market meetup panel. We got George Tillis and Scott Durfee joining me this morning. George is our senior markets correspondent. Scott's the senior manager of trading and education. What's going wrong here this morning, Scott? We're having a little bit of trouble.
Well, here we are. We're in September. We've got a couple of things working for us, but we've got a lot of things that are also kind of creating some headwinds. We've come off a pretty soft week. We have federal market committee stuff still looming. And I think that we're kind of just waiting for the next shoe to drop in that area. We're anticipating no move from the FOMC this time around. But what we'll be doing is really listening, and traders and investors are really going to be listening.
I'm just scanning through several small caps. Nothing going on right now.
Maybe a potential pause in the very near future, and I think based on some inflationary print that we received this week, and a few other things, I think that all eyes are kind of just going to be focused right there right now.
All sectors are red, so you should expect to see a drift lower. All right, we'll continue to move lower. All right, so heat map still. Financials look okay. So if you're daring and you're looking for bullish flow, that's where you'll find it. Most everything else, you're probably looking at bearish flow. Tesla just turned as well.
So I think we're moving into that portion of the year where
low ticker minus 800.
More low ticks. All right, so we just got a crossover.
I think we're in the distribution stage still. I mean, if you don't see it. If you look at this, it's very low, but I follow intraday volatility.
Puts are starting to overtake. No surprise.
Distribution essentially is buying, and of course, any movement to the upside they're selling. So there's no conviction to really hold equities at the very least from a near-term perspective. Profit-taking opportunities are abound, and I think this is the market we're in probably in the next 4 to 6 weeks. Considering all of the seasonal issues, the fiscal issues, and the uncertainty around the Fed.
Yeah, I wouldn't be doing much of anything.
I think they're in a good position where they're at. They're not going to move on rates either direction. I think it's the right policy.
I agree with you, Scott. Just taking it easy. As the Eagles would say, we're dropping off. SPY's on a sell. Still on a sell signal, moving away from a bearish sloping VWAP. So if this was a bullish setup, VWAP would be tilting up and to the right, and you'd be buying dips. In this case, we are selling rejection at VWAP. Not doing anything. I haven't made any trades this morning other than to take some puts off, but other than that, not doing anything. Tesla turning over.
bonuses, particularly, does that force him to try and strike a little bit more of a hawkish tone?
I don't think so, honestly. Unless we see, oil prices remain high, I would say between the next 3 and 6 months, there's a potential for, contracts that are negotiated by commodity suppliers, and of course, those used commodities where they actually reset price contracts that are higher, and I think that'll manifest in a higher core inflation. So I think if you look at the core inflation, it's relatively stable.
Okay, still showing weakness in the S&P. Spiders.
They're going to change their language very much at all. I think their policy condition, like I said, is very balanced right now. It's still very restrictive, but again, I think they need to do that because I think core inflation is going to take a long time to get to that 2% level. If not, maybe until we actually see a recession. But also just looking at it from a technical standpoint, I know we talk about fundamentals mostly, but if you just look at the weekly charts as well, you basically have 2 inside weeks. Considering that this week, if we do trade right around where we're at right now, and last week relative to the previous 3 weeks, so we have consecutive inside weeks. You typically have a full breakout.
Yeah, it's a slow week for sure, Steven. VIX still pushing higher. So let me go take a look. Market Smith. Let me see. All right.
December. Scott Durfee, as far as our market response day 2 with yesterday's big IPO, a little bit disappointing perhaps?
Sometimes these are, right? In most, I don't know if it's true that more often than not they are, but I don't know. I think that we're seeing some strength, and you can't fight against the strength, right? You don't fight the trend, you don't fight your friend, and I think the trend's moving in the right direction. So I don't think that we're going to fight that one.
I'm going to go with that one. I like that. Don't fight your friend, don't fight the trend. Appreciate it. Thanks, guys. Scott Durfee, George Tillis. Nice way to close out our program here this morning. Thank you for joining Morning Trade Live. I'll see you this afternoon. Market on close, 2 p.m. Central Time. Trading 360.
Okay, let's look at a few things here. Markets continue to move lower. Yeah, that's nothing there. CENT cent. Don't try too hard to find anything to trade today, is what I'm telling myself. Don't spend too much mental energy. Oh, this one looks pretty good. Blue Owl Capital. What is that? Blue Owl. Blue Owl. What do you guys do? Provide wealth and investment management services to institutional and private wealth clients. Oh, that one looks pretty good. Blue Wealth. This one, check out this stock. Major volume today. Trying to break out. The company provides wealth and investment management services to institutional and private wealth clients. It has earnings growing 21% this year, 18% next year. 74 cents. Might be worth a shot. What do the options look like?
Join us to follow all the market trends. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
Trading the trending names every day. It's Fast Market. Ready for you, ready to go. I'm Kevin Hughes. Catch me on Fast Market.
All right, SPY continues to move lower. S&P continues lower. VIX still spiking higher.
You know that tech stock we talked about? I picked up 500 shares. You get in
good price?
Oh, yeah. Schwab saved you how much?
With Schwab Order Execution Advantage, you get price improvement on 96% of orders and commission-free online trades. Are you getting complete price transparency? Expect more from your firm. Schwab, the better place for traders.
I'm Nicole Petalides, host of Trading 360 and The Watch that's live on the floor of the New York Stock Exchange, where we bring you breaking news, experts, CEOs, influencers, and analysts. It's all available on Schwab Network.
The U.S. envoy says the Mexico energy dispute merits a formal trade
You could
panel.
think getting commission-free trades is as good as it gets, but you know better. At Schwab, free means more. You get commission-free online trades and quality trade executions on our powerful platform. Plus the satisfaction guarantee. Expect more from your firm. Trade up to Schwab, the better place for traders.
Schwab Network's like no other financial media you watch because it's all markets, all the time. It's 100% finance.
So
You look at everything
on whether Mexico proposed energy violating the North American trade deal warrants creating an arbitration panel to rule on the issue. According to President Biden's ambassador, so since talks between these two nations have exceeded the closing debate between them, the panel may be a way to resolve the dispute. U.S. Ambassador
tailored
Mexico
specifically
Salazar
to
said
our audience. We never take our eye off the ball, which means we're always ahead of our peers.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
All right, we continue to drop off here.
Welcome to Trading 360. I'm Nicole Petalides, and I'm on the floor of the New York Stock Exchange. Quickly here at markets swing week on Wall Street, though we are selling off. I'll have to retabulate. Right now, we are seeing that Dow is down about 198 points. There's a great show for you today, where of course we'll talk about UAW, Adobe, Dan Ives will be on, and I'll talk about both how Tesla could benefit from the UAW strike and this Apple call as well. Here are the numbers. S&P is down 42 at 44.62. The Nasdaq's down 1.5%. The Dow is down 205 points, 34,701, and the Russell down 1%. As you look at oil and gold, both are higher today. Oil right now is $90.62 the barrel, so holding above that $90 mark, and gold is being over $17 right now. $17 at 19.50 a troy ounce. The VIX at this moment is at 13. Jenny Horn, who has some top stories for us today. Jenny Horn, of course, joining us.
All right, we continue lower. VIX has been on a move. We were looking for VIX to do what it's doing today. We're looking forward to do it next week after CPI and PPI are out of the way and OPEX. We were expecting to see VIX moving higher. Well, VIX is doing that today. NYMO's at -8, still okay. The dollar is back to 105.29. It's in the middle of the range that it's been printing in the last couple of days. The 10-year, same thing, 4.31%, and VIX heading towards 14. Now, I don't expect VIX to get to 20 next week, but anything's possible. If we start to see some negative flow, if FOMC There's a lot of ifs there. But watch price action. If price action starts off the week and we're below the 50-day today at the close, and we start off next week below the 50-day and continue lower, then it's a possibility we could head back down to the 200-day. Plan for the worst, hope for the best. Okay, so here's the S&P one more time. I'm not doing anything today. If you're looking for setups, I'm not doing much today. This whole week, really, we've had this tight price action between 44.75 and 4,500, basically. Very tight price action. So what that looks like is a flat VWAP. A flat VWAP starting off the day doesn't always work out too well. Here's Apple flat VWAP. You can see it runs up in the morning, then moves sideways the rest of the day. In this case, we dropped and we've been moving sideways to slightly lower. All right, what are the bears going to do here? Another bear flag, potentially? Lots of blocks coming through. VIX starting to peak. Maybe we get a little reprieve here. Tesla flat at VWAP. All right, so we can use Tesla as an example. Let's use Tesla as an example. Okay, here is VWAP. You can see VWAP is flat. So this has been pretty much what we've seen all week. All right, it's Tuesday, Wednesday, Thursday, and today a little bit more weakness, but we've been seeing this tight price action. So if you got an absolute best entry at the low and you sold when you start to see some topping candles and RSI rolled over, then you're making some profits. But for the most part, people will wait and look for price to get through VWAP, and then you don't have much upside. So the moral is, or the strategy is, when you got a flat VWAP, I'm not looking for much to do here. Maybe you get something going, but it's tough if you're day trading. If you're swing trading, you know what Tesla looks like on the daily. So that's a little bit easier because Tesla is trending above its 9 EMA. 21 days crossing up through 50. So more than likely Tesla will be higher next week. Same thing with stocks that moved higher. Google trending. All right. So I'd much prefer to trade something like Google, or swing trade it anyway. Buy on the dips and then just let the swing work for you. What it will look like if, let me just mark this up real quick. Okay, what this will look like on a day where we should think about getting out positions is you're going to get a big bearish candle that does something like this. That's not the case. That's not the case right now. Okay. We have a trend going. So stick with the trend. Much prefer to trade stocks like this than stocks that are in a downtrend. Like right now, I like Roku. I'm just not trading it at the moment. All right, so let's look at Roku. All right, so you see what Google's doing. That's trending. Narrow, nothing to do here if you're swing. If you took a position in this when it broke out on this gap up or this pullback to the 21-day, you're just riding the trend. You're swing trading it. Let's take a look at Roku. Roku was looking good last week. Now it's below the 50-day. So next level is 75, right along here. If we bounce there, maybe there's a range. If you know what Darvas boxes look like, this is what Brother Bill likes to trade, Darvas box setups. Okay. So a Darvas box will look something like this. You got the high, You get that low, and you're looking for a bounce back in the other direction. I won't buy this until I see Roku proceeding back above the 50-day for starters, and then continuing on higher volume. The good thing is on the pullback that Roku has been fading. The volume's been fading. So fewer and fewer people are selling even on a pullback. So that's a good sign. Okay. But it's not trending. It's range bound. So I don't want to trade Roku when it's range bound. I want to look for it to start trending again. Let's see what else is working here. See if we can spot some stocks that have the setup we're looking for. All right, Disney's reversing off the low. So you could say that Disney's been trending for the last 6 trading days, but it needs to close above the 50-day for starters. That needs to break that downtrend. What's United Health doing? United Health bounced today, hit the 50-day, 200-day, and got rejected. Meta is also trending. It's not doing much today, but it is trending. So looking for this dip to get bought. Look at stocks like AMC, which have done nothing. This is going the opposite direction. So you don't even want to, I don't even want to look at this. I was going to say until it gets above the 50-day, but I'm not really interested. What about Tilray? Tilray has been in a downtrend, what seems like forever. Okay, so if you zoom out, I'm just going to zoom out here. Go to like 5 years. Okay, you can see, even with these peaks, this is going back to 2019, 2018. So if you were in Tilray, you were in a losing battle. Below the 921.50 and 200-day moving averages, you're in a downtrend. Maybe this uptrend turns into something like we had back here in late 2020, 2021, where we ran from $4 up to 67. The change in Tilray was the company management buying 8 brands from Anheuser-Busch. That's a change. That's a change that benefits their earnings. Let me just look at MarketSmith, see if they've done any calculations lately. I doubt it, but Tilray, T-L-R-Y, Tilray, T-L-R-Y. Okay, Tilray. All right, so they're showing a positive improvement. If you look at MarketSmith, you look at earnings were a negative $1.25 for next year. They're looking at a loss of 23 cents. So from $1.25 to a loss of 23 cents. So that's improvement. We know that they bought these companies or these brands. So there's going to be some accretive value. There's going to be some earnings flow finally, not just from pot, but they'll get some earnings flow from beer, legal. And maybe we can see by 2025, maybe they up these estimates and we get to a positive. So Tilray, change in direction. Look at the volume. That's telling you institutions have been buying. Okay, so this has broken a downtrend. So there's a lot of stocks like, say, Bristol Myers that need to break above the 50-day. Still in a downtrend. Let's look at Uber. Uber has been we've been talking about Uber lately. Uber is trending. It doesn't go up every single day. Another one, I just saw you guys mention, I saw Jeff mention Intel. Intel's down today. Okay, so Intel ran up for like 4 weeks. Yeah, it's going to pull back from time to time. Probably back to 37 and then bounce. Look at the volume there. That's institutions. You think institutions are going to sell? If they lose $2 after they were buying through here, 33 all the way up to 39, you think they're going to be selling massively? Doesn't look like it. Volume has been tapering off. MACD's turning, stochastic's turning. Yeah, it goes through cycles. It's not going to go straight up every single day. I find with some of the new members that have no experience in the markets, you have this, I hate to say it, but you have this expectation that you're never going to have a pullback, and you wind up buying at the high of the day. On the high of the week, you see prices pull back. What do you get into this perpetual cycle of, buying the high and selling because, the stocks pull back on you. If you just reverse that mindset, look for a stock that's trending, wait for the pullback, and then, and only then, once you see buyers step up again, that's when you buy. Okay. So I know I'm boring some of you probably. SPY looks like it wants to keep going lower. Another bear flag. Wow. That's a hell of a, we're off almost 1% on the day. I'm looking for a higher low, looking for VIX to taper off now. We've come down quite a bit, 1%, almost 1%. Actually, we're down 1% at one point there. So consumer sentiment was softer than estimated. Those numbers this morning, consumer sentiment. CPI was flat, was a dud. PPI was higher than expected. So next week we got the FOMC. Are traders getting preemptive? Did they sell into strength yesterday? They're looking for more downside. Let's see if this bear flag breaks lower. Anyway, so you want to be looking for stocks that are trending and buy the dips. Don't buy the highs. So Intel, unfortunately, is going to pull back probably a couple of days. You have to be able to handle a couple of down days to look for those up days. Institutions were buying pretty heavily from the 4th and 5th week of August off of the 100 day. So that was pretty good. Market.
Seems to be setting up that way. You know, we're already in the middle of September. Most times, if you know, if you're gonna have a bad September, you know, October, it normally starts in August. You know, I just don't see. There's not enough sellers yet. Let's put it that way. Because if you look at the SPY, what happens with the SPY's trading right now at the let's see, the 440 mark. Every time it gets down to that 430 mark, the fear is big.
Okay, so looking at some of these stocks that showed up, volume percent change, XPro. XPro looks like it's going to break out too. XPro. That's looking pretty good. Look at the volume on XPro. Volume XPro.
Technically, it's set up. We're coming into this season. You know, we're trading at 140. You know, I think you can put a stop at like a, you know, right under 138. Now, I think this is going to go to where Amazon broke down, which is the 158 area. You know, you're down $3 to 3.90 today. You know, the market's down, but I think this has some juice in it. You know, they have a lot of things going for it, that's for sure. I mean, between AWS, you know, just delivery in general is huge. And as I say, we're coming into the quarter that people really start thinking about, okay, you know, the holidays, Amazon owns the holidays. So, you know, technically I like the setup. And the hit that Amazon took was extraordinary, you know, and Amazon's always hard to buy. You know, every time it takes a hit and say, I'm going to buy, and then the hit always seems bigger than it is. And then all of a sudden it takes off and then makes a new high. So it's like, okay, you know.
All right, so not for the faint of heart.
Yes.
What are you thinking then about this chart of Amazon?
Well, it's taking a hit off the highs that we saw earlier this week, but still in a longer-term trend up off the lows that we saw months ago. Taking a look, first and foremost, I started off with a bit of a more granular time frame, and you can see in this chart a pretty well-defined
trend to the upside here, going all the way back to, we'll call it 135, and the run up that we saw this week to 146. But you can also see, in addition to that trend up, how we're kind of topping out here a little bit, right? And starting to roll over. You can see as we establish this 145 area of consolidation, we're focused on the 145.
All right, Logitech looks pretty interesting. LOGI, Logitech. X Pro looks pretty good. X Pro Group. X Pro engages in well construction, well flow management, subsea well access, and well integrity and intervention. So that looks like it's trying to break out here, X Pro.
Key areas to watch. Well, in this instance, 138 is the significant areas. We're balancing right now around 143. You can see the move that we just looked at off that high from 146 and how we still have yet to take out a key area. And again, this is now based on a 4-hour time frame. This method of kind of determining trend and determining whether that mindset is right or wrong, the validation and invalidation process, it really is one of the benefits of looking at price activity through this lens, through the lens of auction market theory concepts and ideas. But also, one thing I like about it is it helps us determine not only when a trend is present, but when one is no longer present.
Still looks like bear flags.
Trend to the downside, you can see how anything above 120
OLMA, Olema Pharmaceuticals, trending in a defensive sector, small caps.
Right, understood. Okay, so as you look at these charts, I mean, this is a pretty good looking chart. Some of them have been like at the lower end and flopping around. I mean, this one came off the lows, back up there. Tom?
This is, you know, if I take all free equities that I gave you today, I made a different mix today because of the fact that I think the market's in a consolidation. So
Market.
bottom of the consolidation,
He's from Boston.
Amazon will get hit. That's why you see I kind of mixed this up out here today. Because as Ben says, you know, it's like, okay, it's at the top of the range. The real question is, are we going to stay at the top of the range in the market? If we do, great. This thing will keep going. If we come down to the bottom of the range, well, Amazon, that's why I put the stop so close. You know, Amazon can get lower pretty quick. You know, that's how it works.
Right. How about AT&T? I mean, this one has been such a disappointment. Hit a low of $13 not that long ago. Your thoughts? I mean, it was a dividend payer forever. I think they're back with the dividend now. Your thoughts on this one?
Oh yeah, this is definitely a trip. So you get Marvell, right? AT&T, you're trading $15.24. You can buy it here. You know, put a stop at like $14. I think $17.66 is game here. Now, this is at a 28-year low. So if you hit this right, you know, this is a decent deal. They are paying a 7.5% dividend. They have a $16 billion cash flow, you know. So, you know, technically you are bottom fishing here, you know, but I like what it's done, you know. It had a hard bottom, came off the bottom, had a couple signs of strength. Even yesterday had some good volume in it. And you can see in a down day, it's even, you know, up 16 cents. Now, that's not a lot, but it's not bad for a $15 stock. And so where I'm bringing you there, where that, you know, the 1766 level is the last place that you really had some heavy damage outside of the bottom. So most times when that happens, you'll come up to that area, then you'll go sideways for a bit to see if you can make it through it. So you have to get two different things here. You have a good trade, and you very well might have a bottom, and you're going to get a dividend simultaneously.
Right. Okay. Well, we'll watch that $17 level and see if it can, you know, punch around in there. Ben?
Well, the trend has definitely been to the downside, trying to cover right now. Back above 1440 is encouraging, but as long as we're below 1550, really no invalidation that the working assumption is that value continues to form at lower and lower levels, and that we're trending lower on multiple time frames. That's what's really convincing here, Nicole, and that's why even in this more granular time frame, still giving the benefit of the doubt to the bears. You can see trending downside.
Let's go. LETSGO, let's go.
From the middle of July, around 1350, back up to this 1550 area, but we've yet to take it out. The current balancing around 1440, and while that
Okay, SPY starting to turn the corner.
the prior area balance relative to the one that we're currently forming. The bears want to see this thing
high in a vertical fashion, then form a new area bound.
Okay, S&P is starting to turn. I wouldn't put too much into this. Been bear flags all morning. Still below VWAP. VWAP is tilted down and to the right. Tick cumulative looks pretty good though. And we're only trading lower on 1.8 down volume. So approaching 2-to-1 down. Blocks, lots of blocks today. OPEX, a lot of those getting filled today. IWM, Qs, S&P. A lot of IWM. I'm seeing a lot of IWM. Fewer of the SPY, but I expect a lot more on this triple witching.
Separate time frames, areas of value continue to form lower and lower levels.
Right. Thank you, Ben, for that excellent charts. Final thoughts on this one, Tom?
No, listen, I knew this would be a tough one. I knew it'd rip this apart. My take is that, we're going to see the 1766. You get volume coming into it. It's took out a swing point. We'll see what happens up there at that 1766 level. That's my take on it.
And look, AT&T has been trying to talk positively against guidance when it comes to their fiber lines. And the CFO was out not that long ago trying to give some positive outlook. So we will see what happens there. In the meantime, gold is off in the safe haven. We look at 2000. Gold is right now, it's been around 3-week lows. Barrick Gold has been ticking a little higher, though. It doesn't trade exactly with gold. Your thoughts on this? Today it's at $16, Tom.
Yeah, so you can buy it here. You're putting a stop at 1504. I'm looking.
He's definitely from Boston, right?
2075 area. So this is really intriguing. So what we had yesterday was this. The dollar broke topside. The dollar's up 500 ticks yesterday. It's been trying to get through this 104,699 for quite some time. It got through it. Gold was down $2, yet all the gold stocks were up yesterday. This morning, the dollar is down only 100 ticks. Gold's up $17, $18. I think gold, it looks to me like normally if you're going to have a big run in gold, so you get back gold, volume came in it yesterday, we get volume in it today, you're at the 63 area, your next swing point up there is 2075, and I think that's what it's going for. I think we have the beginning of a run in the gold equities. And, normally when that happens, Nicole, you haven't heard anything about gold equities, and we shouldn't have heard anything about gold equities because they've only been down for, a good year, 2 years. So I think it's the beginning of that run.
All right, so maybe now is the time for gold equities and watching that $20 level. Ben?
Yeah, I think it's right about 2075. That is a big level. We're actually testing a big level here right now, but this is very much like what we were talking about a minute ago in some of the weakness, that downward trend on multiple time frames. And here you can see it's playing out in this instance as well. I started off right away the 4-hour candle chart. You can see the areas of consolidation that form lower and lower levels since the beginning of May. You can see we've been mostly sideways, again, around 1675. As long as we hold below 18, looks like we're still in a trend environment to the downside. Let's step away from the 4-hour candles. I want to show you what's going on. Again, just taking a step back each time, adding more time, longer duration, still a similar pattern, though. You can see 4 areas of consolidation. In this instance, we're talking about a well-defined area around 18 that we're still struggling to get up above right now. Bit of a double top here from the end of or beginning of 2023, and we're talking end of April, beginning of May of around 2021. So again, this is a stock that has struggled to say the least. Taking a look at where we stand longer term, very similar pattern, right? You've got areas of consolidation that continue to form.
All right, so getting a little reversal here now. Okay.
And in this instance, again, a very well-defined area of consolidation forming around this 18 level. I don't really see the bullish narrative here for me when I see time frames, or multiple time frames suggesting the value continues to move lower. Again, for me, I have a hard time buying into this one as of yet, but definitely around 1675 or trying to make a stand to the upside, and around 2075, 21 would be a key area if we were to get above that as well.
Yeah, so we're seeing a consolidation on this downward move. Tom, final thoughts?
the divergence we have out there, and I like the idea that when you have divergence and the gold equities go before the gold contract, normally you have a market that's happening. You know, the contract right now is trading at $16, 19.49. You know, if this contract's going to go, this contract's going to go to about 2,100. You know, 2,100, you're going to have these gold equities a lot higher. And, you know, for where the contract actually went, it's amazing that these gold equities didn't get actually slammed even more, because most of the time they do. So, you know, we had some buying yesterday. You know, we got a little buying out here today. I'd like to see a little more volume out here today. But I think we have, you know, I think we have that $20 in line.
Yeah, okay. Eris was a good victory today on the Friday. Thank you both so much. I'm always great on the chart. And Liechtenstein and Tom O'Brien of TFNN. And we looked at Amazon and AT&T and Barrick Gold today. Thank you both for the victory. Coming up next, spotlight on Apple. So the iPhone 15 pre-orders went live today. You can pre-order today. You can actually go to the store and get one on the 22nd. We'll cover that and a lot of Dan Ives of Wedbush, his thoughts.
All right. So Tesla still flappy wap doing nothing today. Nothing.
Then watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com and on all of your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free. Binge watch the market with the Schwab Network. Get each and every angle, the whole picture, everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network. Download the Schwab Network app and join in on the latest market trends. Available anytime, anywhere, on any device.
SPHD. I forgot to post it. I added 200 shares of SPHD on a dip this morning. If you look at the daily looks fine. Hope everyone's having a okay Friday, despite the fact that a lot of stocks have pulled back. The indices pulled back as well. We were off 1% at the lows, 1%. Now we're starting to show signs of a potential bounce. Expecting volatility, we did see VIX spike. I was expecting VIX to spike next week, not today. A little bit. I mean, it made it high up to 1368, I guess. Not high by most people's standards. 25 would be high. We're a long ways from that. Volatility is still very suppressed. So the markets have been, even though we haven't moved much, we've been in a choppy range this week. We're not trending. We're just moving sideways. We're chopping people up. So if you had hit or miss results this week, if you had some winners and most of your winners outweigh the losers, I mean, we've had winners and losers. Microsoft's currently off. That didn't follow through, but I have next week's calls, so we'll see what I'll need to do with Microsoft. I have shares anyway, so yeah, I'm selling covered calls. Net, Microsoft's fine. UNH, looking for that to come out of the squeeze and start to move higher. UNH. S&P, I'm not looking for anything like a big, huge run up to the highs or fill the gap at the moment. There's just too much selling. Looking for next week. Looking for next week to give us direction, whether it's higher or lower. If it's lower, my intention is, if you look at the watch list, if you're a new member, look at the watch list. In the very bottom of the watch list, I have several potential hedges that you can look at. Let's say the markets head south for the month of September and October. Well, here's a potential trade here, or a swing, SPXS, or, you can just take profits off. Okay. If you're thinking the market's going to move higher and you don't want to do anything other than adding a hedge, here's SPXS. This is the S&P 500 short. It's an ETF, 3-time bear. All right. So it's kind of like if you don't want to do options, you have the alternative to trade something like this or swing it. You could try SPXU. That's another one. Some people don't like these because they're sort of wasting assets in that they'll just continue to fade over time. QID, if you want to look at the Qs, I'm not saying I think the market's going to roll over, but if the market rolls over, this is what I'd be looking at. Okay, so what this does, what's the effect? All right, so let's say you have a couple $100,000 in a 401k or an IRA, and you want to hedge. You could do it with something like this. I would probably buy about 1,000 shares, and let this hedge work for me. Or you could just, if you don't want to outlay that kind of money, I'd be doing puts, SPY S&P puts. I'd wait for a bounce next week, perhaps. Let's see what let me just stay on the subject. So that's QID for the Qs, or you could do SQQQ, SQQQ. All right, so this looks like it's turning the corner with the S&P and the Qs moving, the opposite direction, sort of a double top, an ugly head and shoulders top. You could do SQQQ. If you're thinking that the small caps, IWM, are going to roll over, you could take some, what is it? TZA, right? TZA. Okay, 3-times bear, small cap. So if the small caps drop below the 200, TZA should jump above the 200-day, and you have, a few points to the upside. So I'd probably buy 300 or 400 shares of this. You could also buy bonds, which have been trying to make a new high. I'm not particularly fond of bonds at the moment. They're still in a downtrend. If you look at the weekly, okay, rolled over. Now this could be a double bottom. You have the potential to trade bonds. Okay, you'd want to see the 10-year roll over. The 10-year yield is bullish, so you don't want to buy bonds just yet. The opposite of this is the opposite of the yield. 10-year yield is the IEF, 7-10-year Treasury bond ETF. This is just hanging out here. It's still below the 10 EMA on the weekly. Not really a trade for me. You could trade UUP. You could trade the dollar. Dollar is bullish. UUP is not expensive if you think the dollar is going to continue to move higher. Okay. US dollar moving higher. It's in a bullish trend. If this were a stock, you'd be looking for this breakout through 105, 106, creating a headwind into the seasonally weaker time of year, September, October. October, for the most part, yeah, we've had a couple of pretty decent drawdowns. 1987 for the S&P during October, but generally it's mostly in September, August, September. So a lot of people are positioning for weakness in September, and you can see that in SKU. SKU will tell you whether or not institutions are hedging. They appear to be hedging. When you're above 135, that line, that red line, they tend to be hedging, but they're not hedging like they were back in May and June, which is interesting because May and June, the markets didn't pull back. They accelerated higher. So what did they do with their hedges? They started to exit the hedges, and this dropped off rather dramatically. So right now it's at run 135. So The way I read this is skew is basically neutral. Okay, so skew is basically neutral. So we would see that in a neutral signal here on advanced decline. That's exactly what we see. We see a neutral signal. S&P in the top panel, mid caps, small caps, from top to bottom, mid caps, small caps, and NASDAQ in the lower panel. We're basically neutral. And how does that show up in price action? If advanced decline is neutral, how does that show up? It shows up in price action moving sideways, not dramatically lower. I'm not saying we can't see that next week or the week after, but for now, everything's neutral. So this could go either way. So making a bet, you got 50-50 shot on being right. I don't like 50-50. I like 80-20 to be on my side. So how do I know what 80-20 looks like? Here's 80-20, a trending market. Or if you're bearish, you want to see an 80-20 percentage. Here's that percentage on Tilray. Okay, price is below the 920 or something like Bristol Myers. This is 80-20. What do I mean by 80-20? Well, there's an 80% chance this trend is going to continue to move lower. Now I'm just using round numbers, but there's 20% chance that this is going to break trend. It's probably less than that. It's probably more like 90% downtrend continues rather than over here. Over here, we had 90% potential that this is going to move higher and a 10% that it's going to pull back from time to time. But you see the difference? If you're a new member and you're just looking at this, where is price relative to the 10 EMA? That's the first thing you should ask yourself. First thing I ask myself every time, what does the 10 period or the 10 EMA look like on the weekly time frame? If it's above the 10 EMA, I go to the next step. I go to the daily. I go to the 60, and then I go intraday chart. We're making a higher low now. So if you're a new member and you're just seeing this for the first time and you practice this religiously, you've got a bullish, you've got a profitable road ahead in your trading and investing. Just this one concept. If you can just stick to it and not try to be a cowboy and do something opposite to what the market's telling you. Let's look at the S&P. S&P on the weekly time frame. Okay, we know what the advanced decline percent says. Here's the weekly. What does that tell you? You got a trend and consolidation. Consolidation can go either way. It can go down, can go up. But we're not going anywhere. We got a weekly doji, spinning top. We're inside of last week's candle, and last week's candle was inside of the previous week's candle. But this is certainly not bearish. It's neutral. Okay, what about the Qs? Qs. Same thing. Inside week. IWM, inside week. So what I'm trying to say to you is that if you're trying to bet that this is going to move higher, you got a 50-50 shot right now. Now, I'm just using numbers to express what I'm trying to tell you. You don't have 80-20. You got 50-50. All right, so the markets are starting to move higher. Okay, so let's see what IWM looks like. Okay, IWM, I'm really not interested until we get out of this malaise at the 200-day. See over here where we were similar. See how the similar to price action looks? It looks similar to me, maybe not to you. But price action couldn't get above the 200-day, that dotted gold-colored line. We came down, we bounced back up, we got rejected, came back down, come back up. Finally, we broke above it. Okay, so where's my threshold? For right now, we're just going to bounce around in this area. Okay, the tell for me is when IWM, although it's 5 points higher, IWM gets back above the 50-day and starts to trend. That's the sweet spot. That's when I'm going to be looking to get long IWM. Not right here. Because for the last 7 trading days, we've stayed between 182 and 186. That's chop to me. I hope I'm not boring by saying this. For new members, I hope this helps, because what you do should be based on what the markets are telling you. Okay, I was just looking at MarketSmith, and earlier to start the day, we had 563 stocks down on volume. We had 200 stocks up on volume. Okay, so you trade the stocks that are up on volume, but remember what we're doing here. We're just chopping around. So even if you took one of those 200 stocks that are up on volume, maybe it follows through, maybe it doesn't. I'm just thinking that the bearish sentiment we're seeing today is going to impart a bearish flow on everything. Let's see, RIDI. Owl looks pretty good, though. Some of these stocks that are showing relative strength. I mean, you could choose to you can choose to trade during this kind of environment. I'm not very fond. Okay. We've got a lower high, lower high, lower high. Everything I'm looking at, Google. Let's take a look at Google. This expresses what my thinking is. All right. So you got a spinning top. What does it look like on the 2-minute chart? Looks like a flat VWAP, doesn't it? Slightly downward sloping. What about Tesla? Tesla, flat VWAP. So if you're looking for a big move in Tesla when the markets are in chop, here's the New York Stock Exchange. Tesla chopping around, so is the markets. Tesla daily is trending. You got about 20, 22 points overhead potentially to get back to the top of this pattern. The good thing for Tesla bulls is that the 9 EMA and the 21 EMA have crossed through the 50-day. So the odds are a little bit more towards the bullish side, but right now, not much to do with VWAP. Even though we have that bullish trend in the 9 EMA and 21 EMA, Tesla's flat. Tesla is flat. I'm very pleased to see we've got quite a few people in the live stream. Good morning. Good morning. Okay, so welcome to the live YouTube chat room. I just noticed I had it public instead of private. So you're getting a free broadcast. Hopefully, if you've been in the YouTube chat, not in the main trading room, but YouTube chat, you've learned a few things. Flat VWAP, no trade. Upward sloping VWAP, you're interested. UNH. Okay, flat VWAP on UNH. The most I would expect is this to get back to 489, the morning high. UNH. SPY. Trying to turn the corner, but VWAP is overhead, so still bearish until it gets above VWAP. Meta's starting to turn. Let's see, OWL, OWL. This company provides services to institutions and private clients. Upward sloping VWAP. Now it's flat. Okay, let's look at XPro. XPro is oil and gas sector. All right, so here's a good example of upward sloping VWAP, that dotted purple line. in between the gold color, that's the 200. The red line is the 20 EMA. VWAP is right between. Why is it significant? When it's up and to the right, we can tell that it's in play. Look at the volume compared to yesterday. That's said to be relative volume of 3 times, it looks like. So that's potential for this to follow through. Not many people are watching it. OWL is trading 294% of its ATR. Wow. So it's definitely in play. OWL is trading 10 times RVOL. OWL.
I'd say the results overall were good, but the increase in our fair value estimate was really driven by the incorporation of Firefly throughout the portfolio and the fact that it's actually generating revenue now. So we expect that to be a growth driver over the next few years. That wasn't explicitly in our model before, and now it is. And the company also has some other product releases too that I think are going to help juice growth slightly. So our estimates just come up a little bit over the next few years, and hence our targets up a little bit as well.
I wonder why they couldn't do that sooner. I mean, when you talk about Firefly, why couldn't they do that sooner, Dan?
Well, Firefly was something they actually introduced a few years ago, and they finally got around to actually releasing the product in March. So that was a closed beta, and just a couple months ago in July, they put it in the portfolio. It's generating revenue now. It's considered within guidance. So they've been working on it for a long time, but these large language models take a lot of time and effort and engineering resources in terms of headcount dollars to make into a reality. So the timing is pretty good for them because it's kind of right at the peak of AI interest. So we think it's a pretty exciting product.
More bear flags.
If you see the demos in the presentation. So I think that the users are going to get a lot of utility out of it.
All right, and Chris, you said you're not surprised on the beat. Now what?
Nicole, we think to some degree, you say this often, the sky may be the limit. This is the kind of the start of every horror movie, right? The machines are going to help us completely, but what they're doing in AI, you said it already, Firefly is amazing, and the content creation stuff they're doing in Adobe Express, we think this could add between $600 million and $2 billion of additional top-line revenue to the company. So we are more than cautiously optimistic. We're very bullish. We think some of these estimates at 10 and 12% growth, maybe 12-month outlook, maybe understated. We think it could be as much as 15 to 20% just based on this kind of invasion of AI.
Yeah, and everybody's using Adobe in their offices. This is not like one of those pandemic stocks that people used and forgot about. Now that if they started to pick it up during the pandemic, they'll keep using it, as you said, the content creation, the gold standard, Chris. What's your price target these days? Do you give price targets at $5.29 right now?
We're thinking it could be 20%. We're thinking it could be 6. We're seeing them as high as 580, and we're a little north of that, Nicole. We're thinking 610, 620 over the next 12 months. The subscription model works, and as you said so accurately, this isn't just a phenomenon of people being locked in their office. This is where content creation is going, and what's it going to do to the graphic? This text to image business. What is that going to do to the graphic artists in the world? It's going to change that $20 billion industry, but Adobe's going to want to benefit from it, certainly.
Yeah. Tell me more, Dan, because when we think about the digital experience, Adobe's not the only player, and there is competition, right? Or do they have some sort of moat? What kind of competitive space are you maybe worried about?
So I think you're right. Adobe definitely has a moat, and that is, I think, wider on the creative side where they have a virtual monopoly just with Photoshop and the Creative Cloud, Illustrator, and the products under that umbrella. On the experience side, that's where I think there's more competition, notably Salesforce, I think, between Salesforce and...
All right, so a little bit more short covering. Looks like the shorts are done for now anyway. If you're looking at the short time frames, like the 2-minute chart, it looks like a big bear flag. Okay, so it still looks like a bear flag until it's not. What did Adobe, what's their stock doing? Adobe, that had earnings. Earnings this week, Adobe. Ouch, gap down. Gap down to 50-day. These stocks are trading at a premium. So I wouldn't be surprised to see them come back over the next few weeks. Adobe, Autodesk. Autodesk is below the 100 period. It's just trending lower. Oh, no, that's ADSK. ADSK. Yeah, it's trending a little bit lower. All right, looking for the markets to move a bit higher. Shorts cover. All right, more downside. Sunrun. Sunrun, you're looking at there. Lee Star. Yeah, okay. W bottom. Okay. All right, S&P. Just a couple of minutes after I mentioned it, still looks like a bear flag. Now we're breaking down again. See how far they take it. If they're just taking out stops, what they're doing here. I have to keep repeating myself. Sorry. But if you're anticipating a big move, probably today setting it up if we don't get back above the 50-day. All this week, we've had very tight price action. Started off Friday with a very narrow range. Thursday, the day before that, we made a pivot. We got up to the highs on Monday, but still a narrow range. And for the rest of the week, we've just been in this tight trading pattern. So tight. Neutral. We are neutral on a daily time frame. Short term, neutral. I'm sorry, short term intraday has been bearish all day. We're still down 0.9%. So I'm not doing anything. That's not my kind of environment to trade. I need to see a trend. Again, repeating, I need to see a trend like this. This is where we are right now. Okay, look at the middle of the screen. See this chop? And especially right in the middle right there. It was about 10 days. We went sideways. We popped up to 42.12, came back down. But that week prior to the pop, when was that? All right, that was going into May OPEX. And then we continued higher eventually after May OPEX. See that? Here's June OPEX, third week. We pulled back a little bit. Oh, yeah, I remember that. June OPEX, remember that one? We faded for a week, and then we took off to the upside into July OPEX. That shot across the bow, that big red candle at 46.07. You remember us talking about that. That was a Thursday, and we said that's a shot across the bow. We should be careful because it looks like we could see a move lower into the weaker time of year, August, and that's exactly what happened. We pulled back, bouncing. So now it's neutral. The Bears or the Bulls have to show us what to do next. The Bulls push it above 4,500. I would look more bullish. If we drop below today's low next week or 44.50 today, then I'd be looking for lower prices. And if that were the case, if we did pull back again, I'd be looking to maybe add some positions to SPHD. I bought some SPHD. Tesla's starting to bounce here, coming out of a squeeze. Watch Tesla. All right, so we've been patient pretty much all day. Tesla trying to turn. Tesla trying to turn now, back up towards the highs. SPY is starting to rally. Shorts are starting to cover. All right, Tesla trying to turn.
Major indices, which are off of session lows, but still deep in the red to end the week. The S&P 500 down 0.8%. Dow Jones Industrial Average off 185 points, or about 0.5%. Nasdaq leading to the downside, down nearly 1.5%, and the small caps for Russell's down 1.1% on the session. To help me break down the market action, let's bring in my co-host Kevin Hanks. Kevin. Some Friday follies here, selling off, reversing some of those gains that we saw yesterday. Choppy week for stocks, a little bit of volatility throughout the week, inflationary numbers, but then you've got the VIX at levels, earlier this morning hit 3.5-year lows.
Yeah, I think what the market took out of some of the data this week was that it's crude oil dominating. Right? Some of the ex-food and energy numbers were pretty mild, pretty muted. I think the market liked that. I think some of the foreign markets, the European market rallies, fueled our markets a bit. I think I don't really know why we're weak on a Friday, but yields are higher, crude oil's higher, the dollar a little softer, but the dollar's had quite a run up until now. But this market, without anything specific to talk about, it reeks, Tom, of fatigue on the upside. It just feels like this market is overvalued and tired on the upside and looking for a new reason to go up. The ARM IPO, that was incredibly successful again today, but it seems to be just not enough to get this market to another level.
Right. That rally yesterday, Kevin, and a lot of it was kind of
Okay, Tesla trying to push higher. S&P trying to turn the corner. We got to see numerous candles on the 5-minute. Let's go to the 5-minute. Numerous candles continue back towards VWAP and get above VWAP to get a chance to maybe head back to 4,500. Most of the selling, institutional selling, it looks like, is the early morning has been done. I don't think they want to push this much lower. If they were looking to flatten positions or whatever institutions are doing. There's lots of block trades today, mostly on the IWM, small caps.
Stocks are doing okay today on the back of this, though, Caroline.
That's right, Tom. Not having much of an impact on the shares of GM, Ford, or Stellantis, but thousands of UAW workers went on strike last night at midnight when that deadline passed, as you said. This is the first time the big three automakers are all on strike together, so it's really unprecedented times. And they're targeted strikes. It impacts 3 plants for GM, Ford, and Stellantis plants in Michigan, Ohio, employees right now are
Our dollar starting to drift lower. MACD on the dollar has turned. It's more of a bearish cross now. VIX, we had a bearish cross on the 5 minutes, starting to turn down. The 10 years at the highs, above the October high. As you guys have noted in the trading room, Yoda. More shorts covering. More shorts are covering. All right, I'm going to take a few minutes, go stick my head outside, look at the golf course, get a little fresh air, a little sun on my face. Give me 5 minutes. I just need to take a little break. I'll be right back. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It's 12:05 p.m. on the East Coast, the best coast. I'm going to turn these guys off and put our favorite Mr. Wapner on, if he's on today. I'll be right back. Give me 5 minutes.
So oil up, yields up, dollar up. None of that rises to the level to upset the narrative that you said is still intact.
No, I mean, I'm always nervous and defensive. So for me, it comes from a different perspective. But looking at the overall macro, no, not yet.
Jim Leventhal, how do you see this today? As I said, a lot of cross currents. Ken Griffin, by the way, also, as we played the sound for you yesterday, anxious that the rally can continue. 7th or 8th inning is how he characterized, at least in his own mind, about where he thinks we are.
I think the rally continues, Scott, but you raised a great point to Kevin here about sentiment. Because in a larger scope, when I talk to people, and I don't care if it's investors, fellow money managers, people on the street, there's this interesting paradox. People have jobs and wages are growing, but they feel lousy about the economy. And investors talk about the market. A lot of them, they say, wow, this is a lousy market. And yet, the S&P is up, 16% year to date? Let's not even talk about the NASDAQ. So let's explain that paradox. And I think there's a very simple explanation for it. And Kevin, you're kind of hitting on it here, which is that we've been in an environment where good news is bad news because it incites the Fed to continue raising rates. I have been for quite some time saying, no, good news is good news. And there was good news today on industrial production. There was good news today on the Empire State Manufacturing Survey. When the Fed gets done with rate hikes, good news is going to be good news. Now, to your opening point, Scott, there are cross currents here, and oil's not good. And what's going on potentially with the auto strike, I know we'll get to that later, but that could be inflationary as well. So these are things that may provoke the Fed to do one more rate hike. But I think they're pretty darn close to being done. And if they are, then good news becomes good news.
By the way, speaking of the auto strike, we may get some commentary out of D.C. as well. We're watching the White House too for that as all of this unfolds, as we see how this is going to develop and play out now that strike is underway from the UAW. So all that said, I look at B of A, their flow show today, biggest weekly inflows since March 22 to equities. That's because the confidence in the soft landing is growing. Good. So people are putting more money in despite all of these issues that we say exist.
Good. I like that. Let me say this. People consistently will try and message in a lot of the Wall Street notes, and even on the network, you can eliminate risk. You could neutralize risk. I call BS on that. You cannot. All you can do is reshape risk in the market. So I'm going to make a statement to you. You haven't heard me say this in a long time.
Okay.
Next week, I'll buy the Qs. I will take the risk on the Qs. So for the people, on social media that want to criticize me for that, you've never traded. So you don't even know what I'm talking about. You have to take risk in the market.
A little defensive.
The setup that I see,
just mentioned it. They haven't even calmed down yet.
You know what's coming. The setup that I see is exactly what Kevin's talking about. The setup that I see is, yes, oil's rallying. We understand that. Yes, treasury yields are stubborn. We understand that. But earnings and the recovery in earnings is going to happen. The revisions have been positive. And I believe if you get the seasonal weakness that I described off of triple witching last week, you have to take the high probability, low risk scenario to go long for a Q4 chase for performance.
I'm with you.
Could I be wrong? Absolutely, but that's what this game is
So
about.
how do you respond?
Taking risk.
How do you respond to somebody like Savita Subramanian over at Bank of America, who talks about a tale of two markets today and says it's nearly impossible to be bullish on the market capitalization weighted S&P 500 on valuation? She's talking about the very stocks that you're talking about buying. It trades expensive on 19 of 20 measures we track. What do you think about that?
So from a long-term perspective, the strategy that I run is equal weighted. So I understand that. I am talking about a trade in the market.
Yeah, no, but the Qs are not equal weighted.
I understand that.
We're talking about the most market weighted way to buy the market right now.
100%. But here's the trade. In Q4, if the market's going to rally, I'm not talking about owning something over the next 12 to 18 months, which is what Savita is speaking towards. Over the next 12 to 18 months, I think equal weighted destroys market cap weighted, and that's how I am positioned and invested. But for a trade, I think the leadership in 2023 has been in mega caps, has been in technology, and I think that's where the chase for performance is going to be in the fourth quarter. Could I be wrong? Yes, but I'm fine accepting that risk.
All right, so obviously I'm in the camp that I don't think you're going to be right on that.
In the fourth quarter, I'm not going to be right on that.
I don't think so.
Okay, we'll take the other side of it.
Oh, totally.
All right.
But it's interesting because the positioning of my
You want to be
portfolio-
short the Qs in the fourth quarter against my long.
I don't want to be long the Qs. I don't want to be long that overexposure to the Qs. And so I've had this quote stuck in my head all week by this like old philosopher Rousseau, who says the world of reality has limits. The world of imagination is boundless. And I think to think that those multiples can expand more, you're living in the world of imagination and not reality. Like the earnings growth at the top of the Mag 7, the earnings growth doesn't match what the valuations
You're
are.
100% right. We're talking about two different things, and I said
But
that
you're talking
already.
about a
I'm talking about a trade.
Okay.
I'm talking about the setup for a trade. I've already said you're 100% correct.
In the long run.
In the wrong,
Okay.
you're 100% correct.
But I don't see how you get there. I don't see how you get there even for a trade. And I hear about the chasing, and we all know that emotions go too far. And maybe they will. But
That's
I
just a
don't think.
difference of opinion. You don't think there's going to be a chase of performance.
Okay. One other thing that I think is interesting, Joe, is when you're saying, I see this setup for earnings to rebound, for earnings to grow. I agree with that. But we need to like put magnitudes on all this. And so where are earnings right now? Earnings are still in the 220 range. If earnings grow, if they get to 240, which is the best case scenario, if you put an 18 to 20 times multiple on it, you still have limited upside. And so as we talk about all this like, oh, enthusiasm for a soft landing, let's remember what a soft landing is. A soft landing isn't great. A soft landing is disaster averted. And so I think that that the fact that earnings can't really grow that much, that valuations can't really expand that much, that people are misunderstanding a soft landing, I just think it sticks a really hard cap on the overall market, but I think it puts a bigger cap on the Mag 7.
You want to step into this move fight?
Yeah, I mean, let me see if I can play mom here and sort of calm you guys down, because you're both right. You're both right. You're both right. Look, if there's a chase for performance, and there probably is, then money comes into the market, and simple mathematics of market cap weighting means it's going to Apple, it's going to Microsoft, it's going to Amazon. Joe's going to be right. Now, you and I agree a heck of a lot more, and I think Kevin's with us too, that where the value is in the market and where the higher returns are likely to come from is the rest of the market, the other 493, where the multiples aren't 18 times. You look at financials, you look at materials, you look at energy. We're not talking 18, 19 times. You look at industrials, yes, some of them are up there.
But even you think in the fourth quarter, like between now and the end of the year, that if there is a big rally out of the chase for performance, it's going to be in those 7 type names rather than the rest of the more economically sensitive cyclical stocks.
No, so let me be very
You said
clear.
he's doing right.
I think he's going to make good money in the triple Qs buying them.
But I think
I get money somewhere else. Exactly. Okay, that's what I'm saying. Listen, let me be very
Because the soft landing comes to fruition.
Exactly. And you know what? I think it's not only in the fourth quarter. Let me just finish really quick. I think it's going to be a face ripper. I think it's going to be a face ripper. Yep.
Come on.
Kevin, help me out here.
Where the revision economy is strong, if profits have bottomed and money starts coming in, look, this is historically what happens in a market where you're up beginning of the summer. September gets a little wobbly. It starts in late August. People want to go on vacation. They take money out, and then fourth quarter comes along. You just watch. This is history.
Kevin Simpson.
Jim and I are usually on the same page for what Buller's thesis. I don't know about
You don't see these people all that often at the dinner table. You're an infrequent guest, so you can say whatever you want.
So look, if we're talking about 18 to 19 times forward earnings for next year, what does that give us? 5 to 10% upside for next year. I mean, that doesn't necessarily correlate to a strong rip roaring up here. But if you're going to talk about window chasing and a trade, both institutional window dressing and retail investors are going to buy the cues because that's what they want.
How did that fall here? Let's go to the White House now. We're going to hear from the president regarding the auto strike.
Said a few words about the contract negotiations between the United Auto Workers and the Big Three. Auto companies, I've been in touch with both parties since this began over the last few weeks and over the past decade. Auto companies have seen record profits, including the last few years because of the extraordinary skill and sacrifices of UAW workers. Those record profits have not been shared fairly, in my view, with those workers. Just as the Treasury Department has released a report pointing out the most comprehensive report ever dealing with how unions are good for both union workers and non-union workers to manage the overall economy. Unions raise workers' wages, they said, income, increase home ownership, increase retirement savings, increase access to critical benefits like sick leave and child care, and reduce inequality, all of which strengthen our economy for all workers. That's because unions raise standards across the workplaces and entire industries, pushing up wages and strengthening benefits for everyone. That's why strong unions are critical to growing the economy and growing from the middle out, bottom up, not the top down. That's especially true as we transition to a clean energy future, which we're in the process of doing. I believe that transition should be fair and a win-win, for auto workers and auto companies. But I also believe that the contract agreement must lead to a vibrant, made in America future that promotes good, strong, middle-class jobs that workers can raise a family on. Where the UAW remains at the heart of the auto economy, and where the Big Three companies continue to lead in innovation, excellence, quality, and leadership. Last night, after negotiations broke down, the UAW announced a targeted strike at a few Big Three auto companies. Let's be clear, no one wants a strike. Say it again, no one wants a strike. But I respect workers' right to use their options during the collective bargaining system. And I understand the workers' frustration. Over generations, auto workers sacrificed so much to keep the industry alive and strong, especially in the economic crisis and the pandemic. Workers deserve a fair share of the benefits they help create for an enterprise. I do appreciate parties have been working around the clock. When I first called them at the very first day of the negotiations, I said, please stay at the table as long as you can to try to work this out. And they've been around the clock, and the companies have made some significant offers. But I believe they should go further than ensure record corporate profits, meaning record contract. Record corporate profits they have should be shared by record contracts for the UAW.
All right, looking for continuation. Still looks like it could be a bear flag. S&P still bear flagging. VIX is elevated. I mean, it's relatively low compared to the last 6 months. This has been a pretty complacent market as far as volatility is concerned. VIX at 1346.
Earlier in the week, but when you look at this, Joe, the RSI is actually below 35 now because the stock keeps sliding today. But how do you want to look at this one from a trading perspective?
Well, what's interesting, Tom, is as you said, it keeps dropping. So the put spreads that I was looking to buy, or the put spread that I offered up to you guys, is probably more expensive than it was before. But basically, we're looking at the October 13th expiration, and that keeps you out of earnings, just in case you don't want to add that extra level of complexity to it. I have the earnings date as October 17th. So this is the October 13th. It's a weekly option. You'd be buying the 390, 380 put vertical. Earlier in the day, it was trading around 310, and I think it's probably 340, 350 now. If that's the case, let's just say it's still at 310. It's going to put your break even down to 386.90. It's going to give you a max gain on that spread. Basically between the two strikes of about 690 and your max loss of 310. What it's really looking forward to, or what it's really looking forward, is that if the stock does continue to roll over, where could we find support?
All right, looking for some sort of direction. Right now, it's just a bear flag. Can't really do much. All right, let's go see what is working at the moment. What is working? All right, so here is the market carpet. Earlier this morning, market carpet looked like this. Let's update this and see what it looks like now. About the same. Actually, a little bit worse. Look at industrials over here. Amazon cyclicals are off. Technology is off. Apple, Nvidia, Microsoft. Healthcare looks okay. Utilities. The defensive sectors look all right. But nothing really jumps out at me as far as, I want to take some extra risk over the weekend. I did buy some SPHD. I did mention that, SPHD. SPHD is in a dividend ETF, so every last week of the month, I think this month is next week. So it's the second to last week. Next week, I think we get awarded the dividend. I have the dividends rolled into more shares. I have no interest in, I don't need the dividends, the payout. All I want is to have more shares. So I bought some today, looking for this to follow through. Even if it doesn't, if it pulls back a little bit more, I'm okay with that. Longer term trend.
Yeah, and Joe, when you look at this, buying directional verticals,
longer term trend,
higher probabilities of success, higher implied vol levels to take advantage of moves with maybe selling out of the money verticals for directional play. This one gives you a little bit more flexibility as far as trade management goes, also because you don't need it to be.
Okay, RSI moving back above 50.
It can go below 380 any time over the next few weeks, and this thing can expand in price, correct?
It can, and the other thing that I would add to that is the expectations, right? It's not a given, but the expectations that implied volatility tends to creep back up as you get closer to that earnings cycle, and this trade expires 4 days prior to earnings. So,
all right, so that's good. Currently,
earnings cycle where implied volatility is much higher, right around like 43%. The idea is that you would start to see this kind of
12%, 12% gain off the October low.
Especially if the stock continues to roll over, I think one would expect that implied volatility would continue.
And we're about 6% below the January 2022 high. Okay, that looks fine.
Within that, you can always extend the duration on this by rolling it out a month or two.
Yeah, different ways to do that if the market's open, liquidity is provided, and we start
RSI back above 50. Stochastics rising. MACD's turning. You can see these two momentum oscillators are more bullish. One of the reasons why I thought about buying this week.
A specific strike. All right, thanks to Joe Mazzola, Director of Trading and Education at Charles Schwab, for joining us today. We're coming up after the break. Kevin and I are going to be joined by Andy Swan from Lightfolio for discussion of
KBWD. I have some in this too.
tech giants up about 54% this year, and 52-week highs.
This is a financial ETF. KBWD is a financial ETF. Last time I looked at this, I had about 41 financial stocks. It's sector specific. Dividend is 7.37%. On a risk scale of 1 to 5, this is the maximum risk on a 5. 10K would have doubled in 10 years. Make 100%.
That means a lot for my community and for every community.
Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week at schwabnetwork.com and on all your favorite.
Most of these are doing the same thing, making higher lows, higher highs.
Spotlight the biggest market trends on Trading 360. 11 a.m. Eastern, only on Schwab Network.
JEPI and JEPQ trending. All right, these are ETFs. And of course, TRBCX, which we talked about earlier and a couple of times this week. TRBCX, this is more 401k IRA related long-term stuff that I'm not interested in day trading, obviously. Just looking for this to continue gaining over the months and weeks ahead. TRBCX. We made it 45% off the low while the S&P made 32%. The recent rally from October, November, December. This particular T. Rowe Price growth blue chip growth fund gained 45% before reversing a little bit. You know the story here is I took half off on the way up, right around debt ceiling negotiation, and I only added back that half on the recent dip 5 weeks ago. And now we're back above the 10 EMA. 10 EMA is starting to turn up again. You can see this week we have buyers at the low of the week. So I'm looking for this to get all the way back up to the January highs. That would be 100% return. I'm sorry, that'll be about a 65% return from the low.
It seems like this stock and this company just pushed back against all of that. And what kind of data do you have on it?
Yeah, I would say
TRBCX. Okay, dip following through. MACD's above signal line. Stochastics embedded. RGA FX, another one. You know what we should look at? Let's take a look at international indices with the dollar continuing higher. World indices. Turkey's been doing fine.
Gemini software coming online, very impressive debut. I think that this is probably the company.
India doing well. You see India down there.
We're going to bet on, one of the companies that's not OpenAI to dominate or to at least succeed
India.
in the artificial intelligence sector. It would be Google primarily because
52-week highs on India, INDA, as they gain more and more production and manufacturing from China. India and Vietnam. I don't have a symbol for Vietnam. Does Vietnam have an ETF? I imagine it does. VNM. Okay, so there you go, VNM. Okay, so this has been gaining manufacturing from China.
But from a consumer happiness perspective, when we see people, signing up for those Google Cloud services, they tend to be happier than those on Amazon. I think
I saw some people talking about EEM, or not EEM, Brazil, EWZ.
What we have seen over the last couple of weeks in terms of
EWZ, W-shaped pattern.
adoption levels and people talking about signing up for YouTube TV, I think is a really big game changer for Google. I think that they're the ones that are capturing the most out of the
Brazil,
cord-cutting movement.
Brazil looking pretty good.
I don't even know if you call it the cord-cutting movement anymore. It's just streaming is here. It's here to stay, and it's accelerating in terms of its impact. And YouTube TV seems to be coming out as the big winner in that group as well. So, from a tech company standpoint, I don't know what else you could want out of a company than what Google is putting forward. They've got their hand very successfully in the mix of all of the big trends that are happening in tech.
Andy, I have a little experience trading up big
VYM.
multinational
Let me just check here.
And you know what you find? It happened to me when I used to trade GE for
Was that real estate? VYM?
whatever. It's always something, right? There's always a story.
VYM.
You're always fighting some headwind. But that being said, they always come out on top or on the better side. Now, we don't know what's going to happen with Google out, but
VWM looks fine. It's range bound. VWM.
sold off hard when ChatGPT and Bing came out, right? And that was
And the upper half.
didn't even move the needle a bit on search in Google. And then you think about how
VWM is fine. It's in the middle of a weekly range. If you look at it, VWM, VWM, yeah, VWM. Just looking at Vietnam. VWM. Oh, VYM, VYM. VYM. All right, so if you look at the daily, yeah, it looks like it's going to push higher. Look at the weekly. Weekly. Okay, it's in a big range. In the upper half of the range. Okay, so it had a nice trend 2020 into 2021. It peaked in 2022 and went sideways. The Vanguard High Dividend Yield ETF, yeah, that's fine. If you look at it from that standpoint, you got the highs, you got the lows, and here's the midpoint. So you're in the upper half, so that looks more bullish to me. Yeah, it's fine. That is fine.
This is just one, if you hear somebody counting Google out, you kind of have to discount their opinion moving forward because they may not be the first onto the racetrack, but most of the time they're the best crossing the finish line. And we've seen it time and time again from this company for 25 years.
Andy, they make most of their revenue from advertising. I mean, tying that into this story about Google Alphabet just off 52-week highs, is that remaining as robust as we think it is because we didn't get that dip that everybody was predicting earlier in the year, and that's why you're seeing the stock move this way? And is it remaining healthy according to your data?
Yeah, so I have a different theory on this. I think that the ad market has softened.
Expense ratio is really low. Scott, the expense ratio is only $6 on $10,000 invested. So that's not much. $49 billion worth under management. Looking for high dividend U.S. companies, including REITs. Okay, looks pretty good.
Highly targeted ads that advertisers will pay huge dollars for. So I think the overall
Okay, the top 10 holdings: JP Morgan Chase, Home Depot, Johnson & Johnson, Chevron, Exxon, Procter & Gamble, Broadcom, Merck, AbbVie, and PepsiCo. I have that in some other ETFs, so, finance is the top sector by weight, followed by health and technology, consumer non-durables. Looks fine.
27% of the digital ad market share, and they get 78% of their revenue in quarter two from digital ads.
Digital ads.
Big numbers.
Yeah. I mean, you got to Google that stuff, right? That's whatever. That's the
word.
phrase. And it's not stuff. It's Google that stuff. All right, Andy, great stuff.
Net asset value is 107.48. We're just probably just a little bit above its net asset value, so okay. I like buying at a discount to net asset value, but that's fine. It's at fair value.
But at the same time, everything's going pretty well besides that Department of Justice.
Beta of 1.
Yeah, but like I said, it's always something.
All right, so we're starting to get a move on here. Let me go back to the S&P now. Starting to get a move on. Yeah, so VYM looks fine.
And that concerns traders. A news story will concern the stock spread. And then there's another thing, Tom.
Still, you can see, even with this little bit of a rally that we got going on here, we still don't have what I was looking for. Was like a dozen or so candles moving in the opposite direction. Let me get rid of this guy now.
It doesn't mean you move away from your energy exposure, because I agree with Brent, I agree with you, Kevin. I think it's the right place to be, but you have to set the expectation. The expectation right now is you might not capture everything you're seeing on the screen with the spot price of oil.
Well, if you think about it too, the energy market, the energy sector was up 60% last year. So the reason it's dislocated a little bit this year is because it pulled it forward. So to Joe's point, like, you really need to set your expectations. I think there's a lot of upside ahead, but they may not move in tandem because we have 2 years of pulling it forward. One thing that I think is interesting when Brent's talking about Saudi and restraint and Kevin's talking about old rigs, what I think is really cool, what we've seen in the last 3 years, is real discipline coming here. And I think back to, remember in the pandemic when oil prices actually went negative? I think that was a huge.
Yeah, remember that? Oil prices went negative. It was like negative $20 a barrel, whatever the hell it was.
And ever since then, and ever since U.S. producers were capital starved,
That was really weird.
disciplines come in. And I think we can ride those coattails for a long time. So to Joe's point, there's not crazy upside, but there's still upside ahead, and you have an industry behaving rationally where they didn't in the past.
I'm going to do this to my buddy Joe again. I think the negativity, I think we're coming out of it. I think the negativity is overblown. Look at ExxonMobil. It's about 1% off of its all-time high. Look at the XLE. It's about 2% off of its all-time high. It's been a crummy year, except for the last 2 months. We're coming out of it. It's going to continue. Bryn, thank you.
I was just going to, it's still about magnitude. The negativity may be done, but there's not the upside that we see. So manage your expectations.
I'm going to be a good listener.
Sorry.
Thank you. Bryn, thank you. Enjoy the weekend. We'll see you soon. That's Bryn Talkington joining us on the Energy Trade. Up next, the earnings setup, I should say, for the week ahead. Kevin's making a move in one name reporting. We'll tell you what that is, and we'll do that next.
All right, so very slow day. Not expecting a whole lot. OPEX, I am expecting some volatility at the end of the day as well. VIX did pop up to nearly got to 14, but by recent standards, it's still very low. A lot of complacency in the market going into September, October, which could be, we could see VIX spike. Could be and is spiking is two different things. Tesla trying to push higher. Tesla back above UAP, starting to push higher. This is what I'd like to see on the S&P. Something like this. All right, so I don't see it yet in the S&P. Tesla is rising back, rising to the occasion. All right, that looks okay.
Welcome back. We're looking ahead to next week. Companies reporting their earnings up. Jumping out to me, guys, KB on Wednesday, because let's look at Lennar. Let's look at DR Horton. Let's look at Pulte today. When I was looking at discretionary stocks, they were, at least right before our program, among the 3 worst performers in the entire index. So, Joe, you own Lennar and DR. So what does that say about what KB might have to say next week and what the stock may do as a result?
These stocks are all in a tenuous technical position, in particular for DR Horton and Lennar. It really is at a critical 200-day moving average. I think that you can make the argument that we've seen the peak in the earnings cycle for the home builders. I think that's fair. I think it extended way beyond what we.
All right, the 60-minute ES, big drop, a little bounce, bear flag, if you will. I'd be very careful on making any strong moves in calls at the moment. We've got to see this follow through. I'd like to see more FANG stocks. Continue short covering. Apple did there for a while, but it kind of petered out. It's hanging out at right below 175. Microsoft's turning the corner. Tesla is doing very well.
There was some concern moving forward, and I'm fearful that we may see something similar to General Mills.
Darden on Thursday, Joe. You got that in the T.
Yeah, that's been falling back as well. There's been challenges as it relates.
Meta sitting at the low. Google trying to get back up to the high. Amazon's off today. Turning the corner. Amazon's off 360.
What has been in the near term some weakness in terms of the fundamental expectations.
We'll step away. We'll take another quick break. We'll come back. Mike Santelli, he's going to join us. With his midday word, we'll do that in 2 minutes. Dow's down about 182.
Let me take another look at Google. Google Daily. Some of you are trading or swing trading Google. Google Daily looks fine. Notice that whenever it comes down to either the 9 or the 21 day, buyers keep stepping up at the low. So that's a good sign. We want to see that continue. I made the example that for us to exit this trade, first off, we are looking for 151 as a target upside over here. Maybe by the end of the year, could take longer. So I know that 151's up there for Google. Okay, so that's a big cup pattern. So the bears were in control over here as it stayed below the 10 EMA. Over here on the far left from 2020 into the peak in 2021, we stayed above the 10 EMA. What are we doing right now? Exact same thing. We're staying above the 10 EMA. There's no reason to sell it. I'll show you what I would like, what I want to see to make me exit this trade. I showed you this earlier. Okay. We'd have to see something like this. We'd have to see a big down candle. Something like that. It wouldn't have to be that big. It could be something like that. Breaking the 21-day in a big way without reversing and just closing at the low of the day. That would be my first warning signal. Okay. So we need to see that at a minimum. So it'd have to be a big down candle like this. I don't see that right now. For now, we had this one big candle, but it stayed above the 9 EMA. We had 4 candles down. We were below the 50-day, but quickly reversed. Since moving above the 200-day, 9/21/50, 100-day are all up and to the right. So we need to see, even over here, like in April, we would have need to see a move down below the 50-day to negate this trend. Didn't happen. Every time we come back to either the 9 or 21-day, in this case, we pull back to the 50-day. But since we pulled back to the 50-day, now each time is at the 21-day or the 9 EMA. So that tells me to just stick with the trend. Stick with the trend until it stops. Look for that big bearish candle. We'll keep an eye on it too. Otherwise, this looks like it's going to continue higher. All right, SPY starting to move higher. There goes Tesla.
It seems as if to me that we have the orderly decline in inflation happening faster than earnings estimates or the economic picture in general are eroding. I think the big question is that we kind of almost internalized the calm too much. Very, very low volatility demonstrated by this market in the past couple of weeks. Also the case, expected volatility.
So you can hear what Mr. Santoli is saying. All right, so let me cover this one more time so I beat it to death. Here's the S&P weekly time frame. What do you see? Does it look like 2022 where we were below the 10 EMA? 10 EMA was dropping. Does it look like September, October, where price action was oscillating above and below the 10 EMA? Or is price above the 10 EMA? It's above the 10 EMA. So that's a bullish trend. Whenever you see a gain like this from, say, 4,000 up to 4,600, and price action starts to meander sideways to lower, you're consolidating these gains. Is price dropping below? It did 5 weeks ago, but it quickly regained. That means that there's buyers on the dip. 3 weeks sideways, so we're chopping people up, but the trend is still bullish, intermediate and long term. Short term, neutral, could go either way. All right, so I think that's pretty straightforward. Okay, so over on the left, below the 10 EMA, in the middle, above and below, now it's trending. It moved from 4,000 up to 4,600 and then consolidated over the last 7 weeks. 5 weeks ago, we dropped below, but then we quickly got back above the 10 EMA, and now we're in a sideways pattern on the weekly time frame. So I'm not that really concerned about the markets right now. That said, if next week we open up below the 10 EMA and we start to accelerate, if we drop below the 10 EMA, I'll more than likely start to hedge with SPXS or SQQQ. It depends if it's small caps that are leading, TZA. All right, so ask me next week. All right, if we drop below the 50-day and the weekly looks terrible, then I'll start looking at hedging. The trend is up, intermediate to long term, though. Today is just not much going on. You could have bought Tesla at the low. obviously in hindsight, but once we got above the VWAP, we're starting to move higher pretty quickly. People bought the dip, volume picked up. Volume has picked up on Tesla. And Microsoft is starting to turn now. Watch Microsoft. Microsoft's showing signs of turning. If it gets above VWAP, look for this upper level of resistance overhead, 338. I have Microsoft. I have next week's calls. Also have shares. I've been selling cover calls on shares. Apple, same thing. Have shares, selling cover calls. Day traded from time to time. Same thing with Google. Have shares. Same thing with Tesla. Have shares. Sell covered calls from time to time. And day trade them. Why? Because everybody's watching them. Everybody's watching them. All the institutions, the S&P 500 ETFs, everybody has these stocks. So there's lots of premium being sold. And it's not like Apple's going to go to hell in a handbasket. I mean, we would see warning signs before. Some would say that we've already seen the warning signs. We made a lower high. We're below the 50-day, which is true. If we can't get back above the 50-day or the 921-day, then this range that we're looking at could be problematic. We could be headed back down to the 200-day. In that case, if we started moving lower below 171 next week, I'd probably reduce my share count on Apple by half. Still sell covered calls, but just reduce my exposure. All right, let's see what the 200-day would mean for Apple. Okay, pull back to... Okay, if Apple did pull back to the 200-day, that would be about a 17% drawdown. I'm averaging about 25 to 30% on the cover calls that I'm selling. So it does work out in my favor to hold shares, sell cover calls, sell premium. When we hit the highs, you can also sell call credit spreads, which is a bearish trade, selling the near the money call, buy the out of the money call for protection. Look for price to pull back. You get a credit. You can do that too. I have no desire to sell all of my shares of Apple for any reason right now. All right, Microsoft. All right, Microsoft being rejected at VWAP for now. Tesla not getting back up to the high. Google pushing higher. Google above VWAP. Let's see if this can follow through. All right, S&P is still showing us a bear flag. Okay, this could roll over very easily. We're below a downward sloping VWAP, so it's a bearish sentiment for the day, bearish bias. All right. Bear flag, S&P. Yeah, it's 1 o'clock already. Wow. Almost 1 o'clock on the East Coast. I am your host, Cousin Vinny, coming to you from theclosingprint.com. I'm here with you from 9:15 until a little bit after 4 o'clock every day, giving you the play-by-play. sharing my knowledge from 38 years of investing and trading, and trying to make sense of the markets myself from time to time. Things don't do what you expect them to do or anticipate. Just got to keep track of the data. The weight of the evidence, data will help you most of the time. Earnings. Looking for Google to continue here. Google's trying to do something. Sneaking Sally through the alley. Google. All right, so Google needs to get through this pivot right here. Okay. What would be rewarding or welcome to see is we've had selling all morning, a lot of block trades. What would be rewarding to see now for the bulls is buyers coming in and buying the dip, push us back above the 50-day, back into the upper half of today's range. That's a lot of ifs. We would see the FANG stocks for sure moving higher. Tesla, Microsoft, Apple.
UPS, stock that's grossly oversold, pays over a 4% dividend, trades at a 16 multiple, and they've been growing that dividend at 13% per year for the past 5 years.
All right. The good farmer. Oracle. You're going to harvest some gains from Oracle. You've got a price break that was well overdone on earnings.
Oracle, yeah, that's a good point. I would like to buy some Oracle on this dip. Okay, it came right back to the 100-day. Is it done? Wednesday was a good reversal day. I might do something with Oracle. I still need to see it above the 50-day. So I'm willing to give up 3 or 4 points to get back above the 50-day. Once it gets above the 50-day, it'll be a little bit easier to digest along. AbbVie just came across my mind. AbbVie. All right, it's above the 200-day, above all the moving averages. Several weeks ago in late July, we were looking for a pullback. Once it got above the 200-day, I always look for the pullback. Then we get the follow through, but wasn't enough to get into this gap. We pulled back again, tested the 50-day, reversed. Now I'm feeling a little bit more confident about AbbVie. I'm not going to buy any AbbVie right now because I have a lot in SPHD, which I added to today. Looking for that to get above the 50 and the 200-day next couple of weeks. This awards a dividend either next week or the beginning of the following week.
Those gains are harder to come by even just today, is what it comes down to. So big rally yesterday, Kelly. Not so much today. As you can see here, we're just about maybe 0.5% lower on the Dow Industrials, 34,721 up 185.
Okay, Tesla, a little rejection there at 276.50. Amazon trying to move back up. What happened to Amazon? Is there some discussion about Amazon? AMZN. Oracle and Microsoft are working on a database deal. Oracle's major database deal with Microsoft could be a major positive for both companies. UBS said in the emailed note to clients Friday. That's tongue tie. The tech companies late Thursday introduced a new database service for customers to access other Oracle services in Microsoft Azure data centers. The deal creates a Oracle cloud infrastructure tailwind through faster cloud migrations and is a material win for Microsoft given how resource heavy typical Exadata-based workloads are but the tech giant may moderately lose some Azure database upside, according to UBS. The transaction is also likely to be a modest negative for Amazon, which is the reason Amazon's lower today. Amazon Web Services, AWS, could cut some Oracle's displacement upside for MongoDB, according to UBS. Revenue from the new database at Azure will be reported as OCI revenue, according to the note. All right, so Oracle and Microsoft database deal is materially positive for those two companies, but a little bit negative for Amazon short term. This is so weird. I'm seeing buy the news instead of sell the news. You've got GM, Ford moving off the lows. I completely got that one backwards. I thought GM would be lower, like down at $30 per share. Instead, GM has rallied. I thought for sure it was going to lose this level. But that's, again, where price action tells you you're wrong. I was wrong. Puts didn't work. Price action is moving the opposite direction. So the only way that's going to happen is if institutions are buying at these lows. So let's take a look on the weekly time frame. Still not interested on the long side. Big range for what? Almost 2 years. It's got to get above 43. I don't see that happening. GM and Ford are so far behind the EV competition. Tesla is so far ahead. It's not even, you can't even compare it. So it's doing exactly the opposite of what I thought the stock would do. Price action telling us what to do. All right, so S&P dropping off here again, headed towards the lows.
Goes into that $65 an hour, but it is a healthy increase in pay potentially. Here's Mary Barra talking with us this morning about her frustration over the negotiations.
All right, VIX spiking up.
We don't need to be in strike right now. You know, we put a historic offer on the table that not only has very significant gross wage increases, you know, totaled through the contract over 20%, that compounded is 21%. But we also have job security. We maintain world-class healthcare. There's so many aspects of this, of the offer we have on the table that I think
low tick alert minus 800.
Point out that here in downtown Detroit, there will be a rally by the UAW later this afternoon. But again, Kelly, no direct talks in terms of the big stuff going on today.
Okay, S&P putting pressure on stocks. S&P back down to the low. Lower highs, VWAP overhead, recipe for lower prices. We're still on, we just went on another sell signal. Only got less than 3 hours to go to reverse this if that's what they plan on doing.
That's all part of the negotiation here. And also keep in mind, Stellantis has far more inventory than GM and Ford. So to a certain extent, it can wait this out.
Puts are still rising along with calls as price action drops off. Puts and calls both rising.
We really appreciate you joining us with that report today. I feel a bow. Let's turn to Diane Swamp now. And Diane, I should mention to our viewers as well, not just what their fallout might be as you warn from this continued strike in the U.S. economy, but we also could now be facing the biggest healthcare strike we've seen.
So although puts are working, no clear advantage because we do bounce from time to time. We did roll out of this bear flag drop. Let's see if we take out this low.
In the month of September and October. The real effects of these strikes really don't start to really bite in the employment data until we get into October. The survey week is the second week of October. The people that are paid this week will show up on payroll, so that's very important. What we did see, though, was already some idle plants, 3,000 workers, an increase of 3,000 people on unemployment insurance claims due to an idled production plant in the auto sector, and that will show up as a manufacturing loss in the September data. But what's important is how quickly these tend to snowball. Once you shut down a full assembly plant, you start to affect suppliers very rapidly. The people who are furloughed and not on strike in the suppliers are eligible for unemployment insurance, but they will be counted as unemployed workers, whereas strikers, when they walk out of a plant, are not counted as unemployed.
And this will become extremely important when we're trying to suss out the direction of the economy. One moment, I want to bring everybody some news. Former President Donald Trump sat down with incoming Meet the Press moderator Kristen Welker, and here's what he just had to say about the strike.
Let's talk about the economy. And I want to start by talking about this big standoff between the auto workers and the big three auto manufacturers. My question for you, Mr. President, whose side are you on in this?
I'm on the side of making our country good. The auto workers are not going to have any jobs when you come right down to it, because if you take a look at what they're doing with electric cars are going to be made in China. The auto workers
All right, we continue to drop off S&P.
the auto workers are being sold down the river by their leadership, and their leadership should endorse Trump. The reason is you gotta have choice. Like in school, I want school choice. I also want choice of cars. If somebody wants gasoline, if somebody wants all electric, they can do whatever they want. But they're destroying the consumer, and they're destroying the auto workers. The auto workers will not have any jobs, Kristen, because all of these cars are going to be made in China. The electric cars automatically are going to be made in China.
So let's talk about UAW's leadership. The president, Xi Jinping, has withheld his endorsement of President Biden. This is what he had to say about you. Quote, another Donald Trump presidency would be disaster. How would you weigh that in?
Well, if that's the case, I probably want one of them. I don't know the gentleman, but I know his name very well. And I think he's not doing a good job in representing his union, because he's not going to have a union.
All right, S&P continues to move lower.
Those jobs are not going to be gone because all of those electric cars are going to be made in China.
You're going to see more of Kristen exclusive interview with former President Trump as she debuts as moderator of Meet the Press this Sunday. We should note the same invitation to sit down with Kristen has been extended to President Biden, who so far has not accepted. Diane,
VIX continues to spike.
completely about this issue this morning, and I want to unpack a couple of things here because this is so on point. China right now is about to become the world's biggest exporter of cars globally. 3 years ago, they weren't even in the top 15, and only because of Trump's tariffs on Chinese batteries and that kind of thing, they haven't made inroads into the U.S. yet. But they're probably going to, whether in partnership with Toyota, with BYD, or one of the others, already top-selling cars and so forth. This is amazing. We've been talking about the impact of the strikes on the economy. How about the impact from the UAW and even Tesla being back-footed, and all of a sudden the consumer could buy a $40,000 Chinese-made EV, and that's going to dramatically transform the fortunes of the auto industry in this country as we know it.
Well, we've seen this before. We've seen it with the Japanese producers in the 1980s, which I'm really familiar with, and we've also seen those producers also move to the United States, which is really striking. I think what's important to see is what we've seen in terms of response to all the trade wars that we've had and the tensions that we've had with China. We have seen a major reallocation of supply chains around the world, and Mexico is going to go by this winner largely because of the USMCA. Now, that's really important to understand because that means a lot of production is shifting not only by other producers around the world and U.S. producers into Mexico.
All right, S&P continues lower.
Producers are shifting around the world to deal with some of the issues and the tensions within trade. And I think that's important to understand because we're going to see.
We're down over 1% now.
Largest trading partner ahead of Canada and China in 2023. That's a new move for Mexico, and it's
broaden this out because we can talk in the very near term about what's good. Listen, as Dan Rosenthal and others have said, if the strike goes beyond 4 weeks, you start to see the economic impact really pushed out into 2024 for the car makers and also broadened out economically here. So, you know, there's kind of the near-term tussle on labor and inflation, all of the issues we know about. But looming in the background is this larger question of this existential threat to the automakers' survival. I mean, if we take $1 billion or $2 billion out of their profits next year, okay, GM made $10 billion, Ford lost $2 billion last year. You know, that there's not a ton of fat there.
I think the real issue is, you know, what are we going to see going forward? Where is the electric vehicle capacity? Right now, we're at the bias to build up electric vehicle capacity.
Yeah, Goldman Sachs looks good, Brother Bill. Goldman Sachs, JP Morgan did bounce. Morgan Stanley, Wells Fargo, Citigroup, they all bounced. Now we need to see a higher low and a higher high. Volume was pretty good earlier in the week. Tuesday, Wednesday, Thursday, volume was very high on many of these big caps. Banks.
And the automakers are making a commitment there, both domestically and abroad. I think what's important for the auto workers is they're looking at what is their role going to be in terms of those plans.
Yeah, this is, you know, thank God for Tesla because otherwise I'm not sure what would offset the potential impact of this major inflection from Iraq. Some companies that they bring will catch up. Okay, Diane, let me pivot and ask you about some of the other economic data this morning. Confidence, sentiment a little bit weaker throughout the week that's going to meet next.
Halliburton starting to bounce. What? What is this? That's very strange. Okay. S&P, very weak.
This stream is sponsored by Digital. Digital allows you to actually view the flow pages or send stock instruments. Get a free trial at digital.com.
That's also looking at the fact that we had blistering heat waves, which are going to mean higher agricultural prices and higher food prices. Although we don't, you know, they like to spit those out and look at core, and when it all happens all at the same time,
All right, we continue to move lower. All right, bear flag 60-minute did break down, obviously. Continue to move lower. S&P weak.
Their move has been more modest, but it are seeing some selling pressure today, down around 3% just in today's session. So Alex, walk us through what you're thinking now for an example trade, leading into some of this near-term, more bearish momentum.
Yeah, let's say you're looking at this and they're agreeing with you guys and saying this thing's just getting started. There could be plenty more downside, at least in the near term. Looking at a strategy that would benefit from a retest of those previous lows from the most recent downward trajectory around 75. Looking at buying a put calendar, this is a strategy that benefits in two ways. One, from an increase in implied volatility. It's a positive Vegas strategy in a move towards our strike. And so in this case, that strike, 75, is below the current share price near 80. So lower than the current share price should equal bearish.
VIX continues to spike.
October 13th, 7.9. We're selling in September, buying October. 55-cent debit.
NYMO's minus 10.
In risk. This thing benefits from a move towards our strike. That's where the apex of this profitability graph is. You can see there's risk in both directions. This thing crashes. Well, we can overshoot and lose to the downside. And of course, never comes to fruition, and this thing starts to rally, catches its footing around these levels that Rick had talked about, and moves higher to be risk to the upside as well. But risk is defined.
Lots of selling.
And it's customizable. So, Jenny, so long as there's a strike and that fits a potential investor's outlook, be that in this particular name, which is DoorDash, or any name, the strategy could come into play.
Looking to just capitalize on some of this trend deterioration we've seen over the last several weeks. But now to look at Shake Shack here, which is I would say a very popular name here in Chicago, and also I'm sure throughout the country where there are Shake Shacks, because this is a great place to eat for lunch. I mean, you can tell.
All right, we're quite a bit, we're quite red here. ATR minus 157, 157%.
Backtrack a little bit, check out these yearly lows near the 4083 level, trending upward from that point, but just recently
VIX still pushing.
To the downside below that trend line. You can
Sell signals today.
Cross below our purple 252-day
NYMO lower.
Made a test above that level once again today. Our purple line here around
VIX is the culprit for now. The 10-year is still at weekly highs. The dollar's at 105.22.
Downtrend is still in play as well. This white dash line here. We had a nice move up after earnings in May, but it's all the way up to those yearly highs, but we were not able to break above them there. So that's what kind of started this downward trend that we've been seeing here that's been taking place more recently. One interesting thing about this chart, we have some very clear volume nodes, some clear areas of heavy trading that line up reasonably well with some levels that stuck out on our chart. First, we have the 61 level. That's about where we topped out here. Then we hit a large breakout from beyond that point once we managed to clear above it again.
Quite a drop so far.
We bottomed out yesterday and the day before as well. So then we can also see 65 level, an area of consolidation around here. And then the 70 level, a frequent topping point for price and some consolidation as well there, Jenny.
Now, just based on my very baseline level of charts here, Rick, I can just tell momentum not looking too
Low tick alert minus 800.
You know, it started to get.
Let's look at this from a daily standpoint. S&P. So what I was saying about Google is what we're seeing here on the S&P. We see this bearish candle. Okay. So that's a warning shot, just like over here at 4607. Again, right here where we hit the 50-day and got rejected bigly. We did wind up following through, but for now, neutral to very bearish on the markets. I think there's probably some capitulation selling. Speaking of that, let's go take a look at NYSE. Capitulation selling again. So we hit this level, very interesting. We hit this level volume wise, and we're not turned down decisively.
Geared toward the downside, so perhaps we'll start looking at that level first. So around 61, if we start getting below there, 57.10 would be the next area to watch, because that's about where we hit the lows after we had our gap up and from earnings during May. So that would be a key point to hold there. To the upside, our purple 250 two-day EMA is the mark to beat today. Not looking too likely that we'll get above that point, but you never know. Things can turn around. Beyond
All right, so looking at this McClellan volume oscillator, I'm impressed the volume is hung in there. We're not selling hard. It's 3-to-1 down volume on the NYSE, 2-to-1 on the NASDAQ. So OPEX, triple witching OPEX. So once again, the idea here is a close below the 50-day in a decisive way like this sets up next week to head down to these lows again, 43.56, 43.50. That would be my guess if we don't get any buyers to show up.
For a $2.50 debit on this $5 wide spread, and a break even close to the current share price. You find that break even by adding 250, 260, and you get to 62.50. The stock has pulled back a little bit.
Apple, big pullback on Apple.
61.95 right now, but still relatively in that ballpark for the break even. Risk is to the downside. This thing falls below 60. You have $250 in risk. Of course, we talked about that break even. And as it moves higher, above 65, which is one of the resistance points, rather, that Rick had highlighted, that's the max profit scenario, $250 as well. Neither accounting for transaction fees.
Again, there's not a whole lot to do today. We got some decent selling. If you're on the put side, you're still on sell signals, so you're okay there. FANG stocks had some short covering for a while. Starting at around 11:30, 12 o'clock, we started to see some short covering, but didn't last long. We rolled right over. We're below VWAP. Whenever we're below VWAP after the opening range, we're below the low of the day, below the opening range low. We're looking for a bearish trade. In this case, that played out. We're now right above 44.50. That was a level we needed to get above a couple of weeks ago. Now it's support.
At Schwab, free means more. You get commission-free online trades and quality trade executions on our powerful platform. Plus the satisfaction guarantee.
Net market flow is definitely bearish as we drop off. No surprise there. It picked up again after dissipating for a while. Around 12 o'clock, we started to turn. Calls were starting to get bought. And then as we rolled over, puts really picked up speed again. We're right at the support, 44.50, 450 SPY. I'm sorry, 442, 442 SPY, 440. Okay, once again, let's say you're an investor and you're not worried about these intraday. I wouldn't be worried about it if I was just investing and not day trading or short-term swing trading. I'd be looking at potential entries on dips like we had a few weeks ago for TRBCX, RGAFX, SPHD, dividend ETFs. While the markets are pulling back a little bit, you're still making the dividend. Good place to put cash, unless you want to get into yields. bonds. The 1-3-year Treasury bond is flat.
Welcome back to Next Gen Investing. It's time for a look at a developing story with Kevin Green, senior markets correspondent here for the network. So Kevin, we are looking at all things UAW, the strike, which did go through. We already saw around 12,700 employees that have walked out of their respective facilities. So walk us through what we're seeing here.
Yeah, definitely. We actually had President Biden.
What time is it? Got to leave here in a few minutes. Go pick up my son, come back at 3.
At this point in time, they obviously are working with both the UAW and the big 3 automakers in order to try to come up with a deal. And he is sending his acting labor secretary over, along with his White House senior advisor, to be able to try to broker a deal here. Now, this is going to be a very interesting development. Maybe we do see a deal that's a little bit more on the short term rather than the long-term deal that they are seeking right now. But the big crux in this whole process right now is still the pay increase. The UAW would like to see a 40% increase. The GM and Ford and some of the other automaker here did offer 20%, but that was rejected. So I think that's the biggest sticking point at this point in time. As you said, it's around 13,000 employees right now that are being impacted. And just to give you a little bit of context here, we actually have some of the breakdowns of the cars that could be impacted now.
Junk and high yield corporate debt, not giving you a confirmation on this dip that we're seeing. You generally want to see junk and high yield corporate debt dropping below the 50-day here. That's the lower moving average. That's the 50-day. I should make that green to be consistent, right? Yeah, make it color and make that green. That's consistent with other charts. 50-day. All right, so
but right now it still looks like it's a stalemate. Just over the wage issue is the primary problem right now when it comes to trying to broker a deal.
Yeah, and we've heard from now the heads of all 3 of these Detroit companies, or Detroit 3 as we're calling them, where basically disappointment has been expressed by the leaders of these companies. And no doubt that this
so
market was already pricing in. But
what you would anticipate is if the markets are going to sell really harder than what they have today, we're down 1.25%, then you'd want to see junk bonds down below. So they're not selling junk. That's interesting. HYG. Okay, these are risky assets. As such, investors that would be buying or selling HYG, if they're buying, they're not outright selling. They don't seem to think that the market's going to drop precipitously. We are still moving lower, though. So that's a contrary signal right now. Okay, IBB, IWM, both dropping. Crude oil moving higher. That's not good. Advanced decline making a lower high, turning. All right, so 10-year yield rising. All right, so we got mostly bearish signals. Started off the week that flipped, if you remember.
So if we do see a backlog in certain factories because they are still operational, but other factories are not operational, you can see a backlog when it comes to inventory, and then the demand for transportation once things start to thaw out could also increase prices when it comes to shipping. And so thinking about rail transportation, truck transportation, things of that nature, that is going to be something that is going to be a pressure point for them, regardless of how long this actually does take. It will have an immediate impact once the deal is brokered, and I think that's something that analysts really haven't been focusing on as of late.
Yeah, I think that's such a good point, because obviously the trickle down effect of this strike is something that's going to be watched, something that's definitely going to be felt. Even if it's a few days, a few weeks, this is something I think that needs to get fixed as soon as possible. But we will leave it there. Great breakdown on the UAW strike. Kevin Green, senior markets correspondent here for the network. I'd like to bring you back in, Alex. And it's time for FOMO. So we are looking at Tesla, which has now turned negative, as we are seeing some of these. I was just looking at the NASDAQ, the Dow at session lows here in real time. Tesla has reversed its gain, although it's still up 10% this week. So it's still pacing to be the best performer in the S&P 500, at least this week.
Yeah, I'm just comparing it to some of the other names that we throw in the bucket with it sometimes. Look at a name like, let's say, AMD down 4.4%. You got Meta Platforms down 3.5%, Nvidia down 3.6%. So hey, down 2/3%, let's call it. Not so bad when you compare to some of its peers.
Okay, so
I mean, no kidding. And the fact that it's been able to cling on
yeah,
to
let me take a look at that. Let's see.
now extending its third straight winning session here. Or it was extending its third straight winning session here before then reversing in real time. But what is interesting to me to tie together the UAW strike with all things Tesla, analysts are saying that Tesla could be the big winner here of this deal. The Detroit Threes have already struggled pretty notably with their transitioning into becoming more EV focused. And now I was reading that Tesla actually will pay its workers.
All right, getting a little reversal here. This could be the point where we start to reverse. Looks like a reversal candle.
Its advantages that it enjoys in the EV space. So Gene Munster, who's a managing partner at Deepwater Asset Management, said Tesla will emerge stronger from this. He said that big auto is in a tight place when it comes to transitioning its business to electric, and the current UAW discussions will eventually result in a steep increase in costs that will further push them into the red. I thought that was such a good point because, I mean, Ford has been pretty transparent. Their EV business is losing billions of dollars annually. So this is definitely not the situation you want to be in when you're working on becoming more profitable, no doubt. We also did see actually Dan Ives, Wedbush's Dan Ives, say that if this strike lasts longer than 4 weeks, he was one of the several analysts I actually saw that highlighted that 4-week mark, it would be a major hit to the EV ambitions of GM for near term. And for that reason, just continuing to propel Tesla's dominant position as the EV, I mean, really the EV name. I will say I don't necessarily think it was ever threatened by a Ford or GM, but slowly chipping away at market share, which we have more seen overseas, really, with a name like BYD. But I would say this is an interesting story, the fact that they're actually turning some of these companies' pain into perhaps Tesla's gain.
It seems like no matter what, we somehow find a way to spin this as a positive for Tesla. Tesla is going to be largely unaffected by this, and that's huge for Tesla. It's going to be more the other companies come out weaker. Tesla kind of comes out the same. I kind of see it as a false equivalency, though, to look at this in the EV world between Ford and Tesla. Look, even if Ford had all of their cars as all electric as choices, I'm not sure that the customer of Tesla is the same customer who's looking at a Ford Escape or some other car that Ford makes, the F-150, for example. They're just not the same consumer. So I look at this, and if you're in the price camp and you make enough to go buy a new Tesla or a Tesla in the last few years, you're not really the same person that's looking at Ford vehicles. So the big question is going to be what this deal looks like on the other side for some of these companies, what they do to continue to stay relevant and competitive in this space going forward. But we've said all along, if Tesla's being priced as a car company, it's way overvalued. It's not. It's being priced as a tech company.
All right, so
What kind of tech company is it? It's also inventing things in the battery space. It has investments in the solar. It is not just the vehicles we see driving on the street.
I think that's exactly what I was going to say, and I think that's such a good point because we make the argument that with its valuation, I think the bulls of this name say it's not an auto company, it's not a pure play into the automotive industry. So then, for that reason, can we really say that they're going to benefit from a pure play automotive headwind? I don't necessarily think we can make that same argument because, like you said, Alex, sort of different veins of business at this point. So for those that argue this isn't a car company, and I don't necessarily think that they can benefit from the pure play car company's weakness. I mean, the name like Ford, GM trade nowhere near the same multiple as Tesla. Their performance on a year-to-date basis is not even comparable at this point. Tesla, though, is up 124% this year. They pulled back about 12% from their highs, which is a much better position.
okay, do they start buying? This is the time of day right after 2 o'clock that I'd anticipate seeing some buying activity. It'd be nice. Okay, so junk bonds. I just posted. Thanks, Scott, for that heads up or comment about HYG right at anchored VWAP. Scott, yeah, Scott Z.
300 to the upside. That seems to be battleground price level for this name to the upside. You look back to the summer and fall months of last year, it spent a lot of time in that area, failing to meaningfully break above it. It tested that level after its last earnings and failed to break above it. If you're optimistic on Tesla, that to me seems to be the level that investors would be focused on from a resistance standpoint to the upside. So I looked at a strategy.
All right, starting to see more short covering.
Test of that level. So
Shorts covering.
whatever conclusion you'd want as to what would drive it there. The fear of missing out in Tesla seemingly is always to the upside. So I looked at a bullish strategy, a retest of that 300 mark, buying a call calendar.
Okay, S&P reversing. Shorts are starting to cover. We got a buy signal.
And then the November monthly options we're going to go ahead and use as the long anchor of this particular call calendar spread. So it's a little bit more expensive. We're talking about a little bit bigger product when we talk about Tesla. $275 stock that trades with a little bit higher implied volatility. And also it's a longer date.
All the FANG stocks red.
2 months out in time to November. It's going to be a $5 debit. It's going to be $500 in risk on this one. And you can see, because of that little bit longer time associated with this compared to the calendar spread that we looked at in DoorDash, it's a little bit less aggressive of a vertical peak on that particular mountain-like risk profile. And so
Beagle, I have a script for Thinkorswim. If you would rather use Thinkorswim, I don't know if you have Thinkorswim. I think you said you had Schwab, right? I use Schwab for my trading, but I have Thinkorswim for the alerts. All right, nice reversal. Nice reversal. Underway. Okay, watch Tesla here.
Like there's whispers we could see some pricing increases if this strike does go on longer than anticipated. So really interesting story in all things autos.
I'm really surprised that GM, Ford are moving higher instead of lower. And the volume suggests institutions are the ones picking up shares. That's very interesting. Okay, I have to leave here in about 15 minutes to go pick up my son. Okay.
Young lady who was mid-30s.
For now, though, we got a nice short covering bounce. So just view this as short covering for now. Still a very bearish day. Watch VIX. VIX is rolling over.
Client won't care how much you know until they know how much you care.
Every morning, our analysis is your blueprint for the day. Bonds, stocks across all asset classes. On Morning Trade Live on Schwab. Weekdays at 9 a.m.
Signing up at todetape.com.
No politics, no noise. From bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
At each and every angle, the whole picture, everything comes full circle on
All right, so we're making higher lows now.
right here at the New York Stock Exchange on Trading 360, only on Schwab Network. Binge watch the market with the Schwab Network.
All right, nice little reversal off the low. Shorts covering. This is a time of day, usually after 2 o'clock, but institutions might step in early. It is a triple witching OPEX. Next week, what we see today is what I was expecting next week to be repeating myself. I thought that I thought for sure that next week when all of this hedging rolls off for this week, it's a pretty big expiration. The next week with FOMC and the JP Morgan collar roll and all that stuff coming up, that we would see, more volatility next week. And most likely we'll still see volatility. Let's see if we can't get going here. S&P on the move in the opposite direction now. Tesla bouncing off of VWAP, Microsoft short covering, Apple short covering, Meta short covering.
And now the company says that this is not a financially induced event, right? But they ousted their longtime CEO, Chris Rondo, and they have named an interim CEO while they do an executive search, both internally and externally. But if we look at the stock's price action over this year, it is down substantially. It's been a long time since it's been close to its all-time high, and it's nowhere near its yearly intraday highs right now. But just a little bit more info about Chris Rondo. He was with the company for a total of 30 years. He was CEO since 2013. Before that, he was COO for 10 years. And he's actually going to continue to serve on the board in an advisory role, and then he's going to be nominated to be reelected on the board at the company's 2024 annual meeting. That was a part of his separation agreement. So big shock to everybody involved and not involved.
So what's interesting about this thing, you mentioned we're well off of the yearly high at around $90 a share, all-time high just shy of $100. It wasn't like this was a pandemic winter, right? Because everyone was home, no one was going to gyms. So it's sort of like with this weakness here, I mean, are people just not going to gyms? It's sort of confusing to me because you'd think that right now with the reopening of the economy and the reopening of so many offices, shouldn't a name like Planet Fitness be benefiting?
It is one of the fastest growing gyms in America, certainly publicly traded, right? But I have anecdotally just seen a bigger move to the boutique gyms. People want that personal attention. They don't want to be a part of a huge operation anymore. So yeah, or people who are even doing the online workouts with gyms virtually. I did that for a few months.
I was gonna say, there's been a bunch of consolidation in this space too. Like I can just say anecdotally, in my hometown, driving around, there's less and less big box gyms with different brands. It's like 2 of the brands survived, and they just have all the different locations now. And you have to wonder. I mean, Planet Fitness is still one of these ones standing. You thought that would be beneficial, but maybe some of those trends that we're seeing on a individual basis, finding more boutique, class-oriented locations, that's weighed on a kind of traditional.
All right, nice reversal so far underway. Nice reversal. For those of you playing this, we still got a lot of work to do. We're still down 1%. The most I'm anticipating is maybe we get back to VWAP. If we get past VWAP for some reason, look for 4,500. That's a long way to go. More than 40 handles to go.
$10 a month if you just were at one gym, but I think it was $20 if you wanted to be able to go to any of the partner gyms in the country. So that's very cheap.
That is very cheap. And I'm not like a gym snob, so I'm like, that sounds great to me. I mean, that signed me up at that point. But interesting move to the downside here, taking out new 52-week lows. It's down around 15% now in real time. We will leave it there. Really great breakdown, Renee DeYoung, on what is a negative story for Planet Fitness, but perhaps we could see some turnaround with some new leadership overall. Now, coming up next, it's time for Under 30s. We are talking about another name that's expected to IPO next week. That is Instacart, as we are seeing some updated numbers ahead of that IPO. George Tilts will have more on that story for us coming up next.
I was born on the south side of Chicago. It has been a long road, but now I'm working for Schwab. I love to help people understand the world through their lens and best support. You can call us Christmas Eve at 4 o'clock in the morning. We're going to always make sure that you have all of the financial tools and support to secure your financial future. That means a lot for my community and for every community.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
Trading the trending names every day. It's Fast Market. Ready for you, ready to go. I'm Kevin Hinks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
No politics, no noise. From bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
All right, we continue to drift a bit lower.
Headlines? Get caught up and catch the wreck at schwabnetwork.com. Available anytime, anywhere, on any device for free.
Welcome back to Next Gen Investing. I'm Stoppy alongside Jim Ward. It's time for Under 30 as we explore the world of IPOs as ARM made a splash, and I'm going to be stating lightly the last 24 hours as it became public. Jetting stocks up slightly here today. It's off its highs quite a bit. Looking at ARM in real time, up about 0.5% with the overall market down 50. Kind of impressive. And I know you have kind of back of pocket here. Those prices that it started at, how much that was over the expectation at that IPO price, but largely a success so far, I would say.
Ingrained in my mind, Alex. So set to open at $51 a share. Their first trade on the Nasdaq was for 13.3 million shares, $56.10. Then that move only continued throughout the session, gained 25% in yesterday's day alone. So really nice debut, obviously, for a name like ARM. The valuation has now come into question among those analysts covering the name, saying that the valuation looks pretty rich here. Where do we now?
All right, rolling over. All right, so not so quick, my friend. Rolling over. Or selling. So the selling comes in waves. They get a little short covering. They sell into that. So we need to see a higher low print now. All right, I got to leave here. All right, I'm going to go pick up my son. I will be back as usual right before 3 o'clock. Right at 3 o'clock, probably. So let me get everything set correctly here. All right, S&P. Okay, S&P. All right, let me put the 5-minute on here. Okay, I will be back. I need to go pick up my son. Give me an hour. I'll take a late lunch. I'll see you 3 o'clock. Bye.
I think this is an interesting one. I mean, it's not going to be as large as the ARM IPO, but Instacart, which I'm sure a lot of folks are familiar with from the standpoint of grocery delivery, and effectively, it's a company that has access to about 1,400 different grocery stores and grocery outlets, and it's actually only going to be offering about 600 million shares of $600 million worth, and 22 million shares and $27 estimated IPO price. When you look at the company, it's actually very interesting. Now, it is a technology services company. That's what you have to really look at. You look at Instacart. You also think about companies like DoorDash and Uber as perhaps some competitors to Instacart. But at the same time, there are also major competitors out there that we're all familiar with. For instance, Target, Walmart. They offer very similar types of services for their particular stores. Amazon, of course, when it comes down to their fulfillment, both in delivery, but also through, of course, pickup through Whole Foods stores. But nonetheless, if you look at Instacart and you back down to their financial fundamentals, this is a company that actually, from a $600 million standpoint, listed
shares, or we're going to be offering shares, is valued somewhere between $5 to $7 billion based on estimates. And so this amount that they're offering is very low. It's about 9.5% of the total estimated value of the company. And the company itself has been growing pretty phenomenally. Now, last year, full year 2022, they sold.
By the way, if we hammer for some reason, if we hammer today and get back above the 50-day, that would be very unusual. I'm not expecting it to happen, but keep an eye out for a hammer right at the 50-day.
Profitability certainly makes a difference, especially from a GAAP basis, which is kind of unusual, especially for a technology-like company like Instacart. But I think the low float in this case might create some a little bit more volatility. Let's just put it that way, especially considering the multi-billion-dollar IPO that was released by On Holdings.
George, I'd like to get your kind of thoughts on the general kind of macro backdrop for IPOs as we assess that. I'm looking at a Goldman IPO, liquid IPO basket, just as a proxy here, up 14% year to date, down about 7% year over year. So it's not like we have this furbish, market that's just, screeching to the upside. We're not on all-time highs in the indices, but volatility has muted relative to maybe where it was at this time last year. Is this a core kind of almost, I don't want to overuse the term Goldilocks, but for lack of a better kind of terminology, kind of the best of both worlds here, where we have lower volatility, but we don't have zero interest rates and super skyrocketed, equity prices.
We are not extending the ban on imports.
Well, I would say that high interest rates would affect, I think, the Instacart's IPO if the company wasn't profitable, which it is. So I think that, again, is something to consider here with this particular IPO. I think the market is in transition from a macro perspective. I think, considering we're, near the peak terminal rate for our cycle, the questions are, what's next? Is the economy going to roll over? Is it going to continue? Is there going to be more fiscal stimulus in some capacity, et cetera? So there's a lot of things going on from a macro standpoint.
This stream is sponsored by TickStrike. TickStrike allows you to actually hear order flow features, forex, and stock instruments. Get a free trial at tickstrike.com.
Microsoft, Apple, and some of the other, AI-based stocks, which actually fell on really good news, and that's kind of telling as well. I'm going to throw in NVIDIA, Adobe, for instance, is also falling on good news. So I think the environment's a little bit tepid right now. There's probably less risk appetite in general because the market is relatively weak, at least in the near term. But I think overall, in the next couple of quarters, as Instacart, initiates their IPO, issues secondary, insiders start selling, and of course, a couple of reporting periods might actually find some foundational price action in the stock. So I think this was an interesting one because of the profitability profile of the business.
Yeah, and George, I think that's such a good point because with this IPO, this is a well-established company already. I mean, we have the balance sheet to go off of, like you laid out, a company that's been around for quite some time in this overall food delivery space, or what have you. But we will leave it there. Really great breakdown. We'll obviously be watching Instacart once it goes public, expected on Tuesday next week. George Tillis, senior markets correspondent here for the network. Have a wonderful weekend. That also does it for Alex and myself for Next Gen Investing for the week. Coming up next, we have the watch list with Nicole Pedalides.
My dad was a hard worker. He used to do side jobs, installing windows, charging something $100 a window, and other guys were charging $400 to $500. He just didn't want to do that. He was proud of the price he was charging. My dad instilled in me, always put the people before the money. Be proud of offering a good product at a fair price. I think he'd be extremely proud of me.
I'm Nicole Pedalides, live from the New York Stock Exchange. Catch me on Schwab Network, available anytime, anywhere, any device, for free. Schwab Network.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com and on all of your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free. Binge watch the market with the Schwab Network. It's time to look forward
Find the next trend.
from every click to every tick.
There's no fear of missing out on next gen investing.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Binge watch the market with Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com on all your streaming devices. Schwab Network is available anytime, anywhere on any device for free. No place better than the Schwab Network. Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
Good afternoon. Welcome to the Watch List. I'm Nicole Pedalides, live on the New York Stock Exchange. Thanks for being with us on this Friday. It's 2 p.m. Eastern Time, and we're seeing markets under pressure. In fact, the S&P 500 has lost its weekly gain in the last couple of hours. So only the Dow holds on to a weekly gain so far. The Nasdaq and the S&P lower for the week. In the meantime, here's what's coming up on today's show. We'll examine a way investors can make a play on live music events. After record-breaking summer tours from Taylor Swift, Beyonce, we'll explain, and taking a closer look at blockchain, the chance of a spot Bitcoin ETF, and a new professional designation in the space. And our panel is ready to talk all about the consumer and the shift that could mean some big changes for retail. In the meantime, we'll hear a look at the exact numbers. As I said, only the Dow is higher by about 0.25% this week. Right now, this moment, the Dow is down 252. The S&P is down almost 50, 44.56. The Nasdaq tech is the worst of the day. That's down 1.7% at 15,202. Every single sector is lower today, and the Russell down 1.25%. We have a lot of big stories, but of course, the one from overnight is leading the way. Caroline Woods, senior markets correspondent here on Schwab Network, joining us to talk about the UAW's historic strike, 11:59 p.m., and so it goes. What are you watching when it comes to the story now?
That's right. The deadline came and thousands of UAW workers went on strike. It is historic. As you said, it's unprecedented because it's the first time that all three of the big major automakers have gone on strike at the same time. So the strike impacts 3 plants in Missouri, Ohio, and Michigan. They're GM, Ford, and Stellantis plants. And upwards of 13,000 workers at this point are on strike. Now, keep in mind, the UAW represents 146,000 workers. So still a small amount of workers that are actually on strike. But these 3 plants produce some very highly profitable vehicles for these automakers. The Chevy Colorado, the Ford Rangers, and Ford Broncos, and the Jeep Wrangler. So the union is pushing for 40% pay increases, more time off, cost of living adjustments, shorter work weeks, and end of temporary workers. The automakers have come back with different proposals for wage increases of roughly 20%, altered profit sharing, bonuses, enhanced vacation and family leave benefits. But so far, they haven't been able to reach a deal. UAW President Sean Fain said, "We're We're going to be out here until we get our share of economic justice, and it doesn't matter how long it takes. And I think that's the big question. How long could this potentially take?
Right.
Now, if you take a look at shares of GM, Ford, and Stellantis, they're all actually higher today. Ford is basically, it was lower. It was about 0.8% higher. Now it's basically flat, but Stellantis up 2.2%. GM up 1.2%. So not weighing on shares right now. The stocking on fast market, it could be because it's only 3 plants. It's not the most profitable cars that are made at those plants, only 13,000 employees, but it could also be that it's baked in to the stock price at these levels. And in fact, just a few days ago, we had a UBS analyst say that he thinks that people should buy any weakness that we do see in Ford and GM, grading them to buy, because he basically said that for the suppliers, 4 weeks of a strike at each of the major automakers is already priced into the stock. So 4 weeks, let's see. We don't actually know how long this could take. But I think the headline grabber, of course, is Dan Ives over at Wedbush, who said the clear winner in this Game of Thrones battle between the UAW and Ford GM is Musk and Tesla, with champagne now on ice.
Yeah.
Because, they're non-union and not participating in these strikes.
And don't have to deal with this. And it's my understanding too, Stellantis, with they have Jeep and Ram and Chrysler, that they have the most inventory too, is to back up. GM has the least, then Ford, then Stellantis. So I mean, they're a little bit more set as far as the inventory to get those things out.
But there's also the potential that they've already signaled that they could shut down plants, so their strike could actually last longer. Because you know that the union is not going to be supportive of shutting down plants. So I did see some speculation that the strike for Stellantis could extend even further than Ford and GM.
Yeah. Oh boy. And then what about Taiwan Semi? I saw some deliveries being delayed.
Yeah, well, we're seeing chips across the board actually lower today, and it's due in large part to this report that Taiwan Semiconductor told its suppliers to postpone the deliveries of its chip-making equipment amidst demand uncertainty. Essentially, Reuters is reporting that TSMC is increasingly nervous about demand from its customers. Of course, Taiwan Semi is a key supplier to so many of the companies that we know, like Apple. It makes the main processors inside iPhones, Qualcomm, AMD, Nvidia. It really dominates the markets for the high-end chips. We already know back in July, Taiwan Semi cut its outlook for the year, forecasting a 10% drop in revenue because of a worse than expected deterioration in the non-AI market, outside of AI, and a weaker than expected recovery in China. So if you take a look, Taiwan Semi share is off about 2.4% today, but Nvidia down another 3.5%. Now down about 11% this month. AMD off more than 4%. Applied Materials off almost 5%, and KLA Tencor off almost 5%. I will say the only name, even ARM, which is not a chip maker, it's a chip designer, was holding on to gains, but ARM has turned negative. So I was initially seeing it add to, but it's actually basically flat. So compared to the weakness that we're seeing across the board with some of these other names, it's actually holding up pretty well.
And still holding that IPO price of, what was it, $51, right? I mean, pretty amazing. All right, Carolyn Woods, thank you for all of that. Good to see you, Caroline. Now let's take a look at the bigger picture. Alexander Reed, Chief Investment Officer at Envisage Wealth. Thank you for being with us, Alex. Tell us more, Alexander, about what you're thinking when it comes to the market. You would think the Fed should actually raise rates. Do you think that should be in September or in November, and why?
Yeah, thanks for having me. We think the market and the economic data is really telling us that we're in a late cycle mini reacceleration of the economy. And it kind of sets us up for an interesting setup for next week in the Fed meeting. Right now, the Fed Fund Future is pricing in a 4% probability of a rate hike next week. And we've heard consistently from Jerome Powell over the years is we're going to be data dependent. And when we look at the data over the last 3 months, it's very hard to find any data that would suggest a rate cut or a pause, we think, at this moment in time. You look at crude oil's up 28% in the last 3 months. The US dollar is up 4%, which is a big move for a big currency. The 10-year is at the highest level since 2007. We've seen real rates at the highest level since 2009. Consumer confidence is improving. Unemployment claims continue to cool off. Unemployment insurance claims continue to cool off. Retail sales accelerating on a 3-month basis. We see durable goods orders kind of reaccelerating as well. And look at energy or sector performance, energy, communication, consumer, financial, those are all cyclicals from a sector perspective, outperforming the last 3 months. That's all indicative to us to say that the economy is not decelerating and flirting with an immediate recession. In fact, that would all suggest that we're kind of seeing this mini reacceleration. So we think the Fed's in a tough spot where there's a lot of pontification around from pundits and economists alike saying, we see progress from CPI, which we have. We continue to see, core, super core CPI continue to make progress there. We've actually seen headline inflation reaccelerate for the last 3 months in a row. And we think it's just too early for the Fed to start talking or hinting at a dovish pace. They really need to see the whites of their eyes. And again, taking Jerome Powell for his word, the data would suggest that there's a higher probability of the economy reaccelerating over the last 3 months than slowing down to below trend growth is what their target is, before we see them kind of pausing and even hinting at a rate cut. So we always think it's funny hearing, especially recently, because inflation has come down, that the Fed will pause and we expect rate cuts next year. And, if the economy is reaccelerating and doing well with the risk-free rate at 5.5%, we find it very difficult to explain or give a reason why the Fed should cut rates other than just because inflation is getting back down to 2%.
So let's talk about your investment strategy. That being said, you have certain sectors that you think are better to overweight at this time. Where would that be?
Yes, we continue to like high quality technology. Specifically, healthcare we think is a strong sector overweight. Last time we were on, we talked about a short-term tactical overweight to energy. We think that it has more legs to it. Again, we try to keep in mind at this point, as I said at the beginning, this is a late cycle mini reacceleration. So a late cycle, you can have fits and starts of growth. And so for us, we think the probability of a recession is still out there. It's just the can's been kicked down the road. So in the meantime, we're starting to see some better trends within the energy sector from a price leadership volume perspective. So we think that is an attractive tactical play on the sector perspective, but from a factor perspective, quality, low volatility from the factor perspective. And then from fixed income, we like municipal bonds, investment grade bonds over high yield. We're trying to keep our duration 4 to 7 years. The Barclays Ag and many private wealth advisors benchmarks are 6 to 7 year duration on fixed income products. We think it's more prudent to be 4 to 7 years, shorter than the benchmark, because we think that inflation, economic activity is going to be elevated, and so with that, bond volatility can stay high. So we want to kind of keep duration in check, but up in quality for the time being.
Yeah. Tell me about Europe and China. I mean, if we're still running hot so much so that you think the Fed should raise rates, what do you think about what's going on abroad?
Right. So internationally, we tend to like India, Japan as kind of our international overweights right now, staying away from developed Europe, UK, and China specifically. The data over there creates a much higher probability of a recession, especially in the Eurozone. We see industrial production, business climate surveys, especially in Germany, really starting to roll over here. The UK, you could argue, is already in a recession. And China has a lot of different things, especially in the real estate fronts, coming into play. They just cut rates, and they saw the market sell off. That's something that you see when there's more volatility in the domestic economy. So we're trying to stay away from an underweight China, developed Europe, and for any international exposure, leaning into specifically India and Japan, where we see economic activity actually accelerating across the backdrop of consumer demand as well. So you don't have as many headwinds in those developed countries versus what we're seeing in that kind of clearly decelerating momentum growth in developed Europe.
All right. Thank you so much. Great to see you, Alexander Reed. Glad you were on with us today, giving us the scenarios and ways to overweight and how to get into this market for Visage Wealth. Thank you. Coming up next, two names in the energy space that you might want to consider. The potential upside for Pioneer Natural Resources and UGI. We'll explain. Stay with us. We'll be right back.
I remember when I first started flying and we would experience turbulence, I would watch the flight attendants. If they're not nervous, then I'm not going to be nervous. Financially, I'm the flight attendant in that situation. The relief that comes over people once they know they've got a guide to help them through, I definitely feel privileged to be in that position.
At each and every angle, the whole picture, everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network.
No politics, no noise, from bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
Download the Schwab Network app and join us to follow all the market trends. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
There's no place like the New York Stock Exchange. We've got you covered. The biggest stocks, the biggest trends, all the market moves. The Watch List with me, Nicole Petalides, 2 p.m. Eastern on Schwab Network.
Schwab Network's like no other financial media you watch because it's all markets, all the time. It's 100% finance. We look at everything as traders and investors, and everything we say, everything we do is through that lens. There's no ulterior motive, and there's no subjectivity. There's no random guesswork about what we think. We are following the numbers all the time relentlessly. We have the best CEO interviews, hands down. They are longer, more thorough, and tailored specifically to our audience. We never take our eye off the ball, which means we're always ahead of our peers.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
I remember when I first started flying and we would experience turbulence, I would watch the flight attendants. If they're not nervous, then I'm not going to be nervous. Financially, I'm the flight attendant in that situation. The relief that comes over people once they know they've got a guide to help them through, I definitely feel privileged to be in that position.
Welcome back to the Watch List. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. We're looking at some more movers in the market right now. Shares of Planet Fitness fallen to the lowest level since March of 2020. Its board ousted longtime CEO Chris Rondeau after 10 years leading that company. Former New Hampshire governor and Planet franchise owner Craig Benson has been named as the interim CEO. Shares of Planet Fitness are down more than 30% this year. The resumption of student loan repayments could hit DoorDash, according to a new note from MoffettNathanson. The fund downgraded the food delivery names market reform from outperformed, cutting the price target to $93 from $110. DoorDash also said late yesterday it will transfer its listing to the NASDAQ from the New York Stock Exchange. Nucor shares are down after it issued weak guidance for the third quarter. The company expects earnings for its steel mills segment to decline on lower pricing and volumes. It also expects a decline in steel products segment. Nucor is also a big supplier for GM. And an earnings beat was just not enough to rally those shares of Adobe. Analysts are calling its fourth quarter guidance good, but not impressive. The company indicated AI price hikes would take longer than expected to show up on its bottom line. Its shares still up more than 55% this year. But I'll tell you, both my guests today, Chris McMahon and also Dan Romanoff, both liked Adobe. And Bitcoin has been in at 26,455. All right, have you been seeing some concerts this summer? Pretty much everybody I know has been to a concert this summer. So let's talk about music. People love to get outside all summer long. Taylor Swift, Beyonce tours have certainly made headlines, a lot of social media. We're looking at ways investors can approach such a popular live event and the situation of music, right? Maybe you want to look at this as an investor. Dave Schloff's with us, founder, CEO, Music LLC, recently had this beautiful write-up in Barron's, right? The minute I saw it, I said, oh, in a prominent place because people were paying attention. MUSQ. Welcome back to the show.
Thank you, Nicole. Thanks so much for having me back here today.
So you've been doing exceptionally well, getting more and more interest in MUSQ, music, your ETF. What do you tell them?
Well, first of all, we're very excited about this product, MUSQ. We just launched, 2 months ago. We already have $10 million of inflows into the fund. We have 10 to 15,000 shares on average traded every day. This fund captures the growth and innovation of the entire global music industry. Captures streaming, content, live music and ticketing, equipment technology, satellite and radio. This summer was obviously an incredible summer for live music. Folks coming out of the pandemic were revenge spending. I call it funflation. Funflation and the evolution of the superfan. So the superfan really wanted to get out and see live music this summer. You had exciting shows from Elton John to Taylor Swift to Beyonce, Harry Styles, Ed Sheeran. So live music is happening. People want it. It's disruption proof, right? People don't want virtual shows. They don't want to watch concerts on TV. They want to see their favorite fan. And obviously, who can ignore the success that Taylor Swift and Beyonce have had?
It's unbelievable. Yeah.
Both artists are just incredible. I mean, Beyonce originally she announced 52 shows. Now she's doing 146. She's going all the way through 2024. It's unbelievable. Taylor Swift is going through 2024. Beyonce is going through the rest of this year. And fans are paying up for these tickets. Fans are, Beyonce's charging like $700 on average for a ticket. Taylor Swift is charging like $50 to $500 with packages, VIP packages going up to, $1,000.
Yeah.
So, fans have pricing power. They have experiential desires. They want to take videos of themselves at these shows. They want to promote themselves on TikTok. So live music has just been, incredible for fans. It's been incredible for obviously live music companies like Live Nation, CTS Eventum, Madison Square Garden, Sphere, Vivid Seats. All these companies are in our fund. So MUSQ captures all the growth and excitement around live music and, of course, all the other categories too.
And you were a music executive yourself many years, so you're fully informed on how this works and where the money comes in and how it goes out. And as an investor now, you're looking at some of these names like Sony, like Live Nation. I don't know if Madison Square Garden is in there as well, but you also have names like Google and Amazon and Apple. Where do those fit into the music industry and why are they in MUSQ?
So streaming is a top category. 35% of the companies in our fund are streaming companies. Obviously, the number one in terms of paid subscribers is Spotify, and they have 200 million paid subscribers.
Is that in the fund?
And that's in the fund, clearly. And then after we have Spotify, and then we have Apple, Amazon, Google, because together they represent the second, third, and fourth largest player. But we also have other companies like Click Digital. We have Kakao in South Korea. We have Genie Corp. We have Tencent. We have Cloud Music. We have Live One. We have 11 streaming companies in our fund. So those big names are capped at 7%. It would be unfair to exclude them from the fund because they are a really important part of the music business. YouTube is an important part of the music business. How do you ignore Google? How do you ignore all the big companies, Apple? How do you can't. So I had to include them, and I had to include them. And I think we've created a very thoughtful, diversified basket of holdings. We have 48 companies in this fund. We have 22 content companies, all the big names, Universal, Warner Music Group, but also the smaller royalty trusts like Reservoir and Hypnosis. We have all the K-pop companies in our fund. We have companies like HIM you've never heard of before. They're a huge they're a huge company in Taiwan. We've got companies like Avex in Japan. So we have small players and big players.
Who's helping you to decipher what needs to be in the fund or out of the fund? And if something is big in music, but the balance sheet looks like it's the pence, does that get to stay in?
So we've already defined we've defined the rules for this fund. Okay, this is a passively managed fund. This fund tracks the performance of global music companies worldwide. The way we've defined eligibility is that every company that is eligible has to derive more than 50% of its revenues from music, or they have to be a top 5 player in streaming content, live music ticketing, equipment, or technology. So, and no company can be smaller than $100 million in market cap, and it has to have daily trading liquidity of $500,000. So what that does is it gives you a diverse selection of companies, small cap, mid cap, and large cap companies. They're all market cap weighted. And as I said, the big name, no single company can be more than 7% weighted in this fund. So obviously the big names don't outweigh the fund.
What do you do when the likes of Google and Amazon and Apple keep growing in price? You just cut down the number of shares.
It gets rebalanced every quarter.
You cut down the number of shares so that you don't go
That's
over
right.
that
It cuts
7%
down. So you may see it spike up a little bit, and then when it gets rebalanced quarterly. It gets back down. So that's a common question that comes up for investors. But the answer is you're getting like all the music companies. You have to include these companies. They're big players. You cannot get exposure to music just by buying the triple cubes, right? Or just by buying these companies. There are too many other companies.
Theoretically, there could be some that are falling behind. They may get more than 50% of their revenues from music, and they may be over 100 million in value, and they may be somewhat heavily traded, but they could be burning cash left and right, and it could be a laggard. I mean, but that still gets it.
And
right?
Well, if it's a lagger again, so if the trading volume falls down between 200,000 to 500,000, it actually gets a half weight on the index. So if it's smaller than $100 million market cap, and if the trading volume falls between 500,000, then it gets a half weight. Below 200,000, then you're off the index. You can't be on it. But we wanted to include the small cap companies to really give them an opportunity to grow, for investors to get exposure to them. Everyone knows the big names. Everyone knows Sony and Warner's, but you don't know, the 40 other names. And what's great is this fund, 45% of the companies are domestic, 55% are foreign. You're getting exposure. Yeah.
Goldman Sachs recently predicted that the music industry would grow by 7.5% a year through the year 2030 as music streaming prices are on the rise and companies figure out how to get the super fans, you use that phrase, to spend even more. So do you see that coming? I mean, are you already seeing that happening?
Let me tell you something. Music today is the most overlooked, underhyped, undervalued media company out there. And that's not just me saying that. That's JP Morgan. For $11 a month, you're getting $150 million, 150 million songs, okay? Spotify, that's 45% of what Netflix is charging with very little churn. So the industry is actually going to 146 billion by 2030. JP Morgan just revised their forecasts. And I think price hikes are coming along for Spotify to raise another. And what does that do? You raise it by $1. It's got 200 million paid subscribers. That's $200 million of incremental revenue a month. That's $2.5 billion a year just for Spotify alone by raising it $1. So I think we can expect price hikes to continue to go up with very little churn. People love music. People want exposure to music. It's so cheap. Music is cheap compared to all the other streaming services. Even the valuations of these companies are cheap. They're a third of like AI.
What about we have to go, but I think about other ways. Like there's movies that are related to music, like All About Elvis now, and Taylor Swift's going to be making the Eros movie, and there are shows and music about music, like Neil Diamond's. I just went to that play. A Beautiful Noise. So there's music's everywhere. MTV.
Music's everywhere. Music's everywhere. I produced Clive Davis's film, The Soundtrack of Our Lives. That's a #1 music documentary on Netflix. Taylor Swift
So
is,
much fun. Okay.
yeah, Nicole, we could go on and on about music. Thanks for having me today.
Thank you for being here, David Schohoff, founder and CEO of Music MUSQ. That is the ETF you can look for. Thank you, David. All right, coming up next, looking at the energy space. We'll be singing some of the songs about natural resources and UGI coming up.
You know that tech stock we talked about? I picked up 500 shares.
You get in at a good price?
Oh, yeah.
Schwab saved you how much?
With Schwab Order Execution Advantage, you get price improvement on 96% of orders and commission-free online trades. Are you getting complete price transparency? Expect more from your firm. Schwab, the better place for traders.
I'm Nicole Petalini, live from the New York Stock Exchange. Catch me on Schwab Network, available anytime, anywhere, any device, for free. Schwab Network. Get each and every angle, the whole picture, everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network. It's time to look forward
Find the next trend.
from every click to every tick.
As though we are missing out on next gen investing.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. He's Alex Coffey. I'm Jenny Ford. Join us for Next Gen Investing.
1 p.m. Eastern, only Schwab Network.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Renner.
Welcome back to the Watch List. I'm Nicole Petalini, live at the New York Stock Exchange. Dory Wiley's with us, CEO of Commerce Street Capital. Dory Wiley, haven't spoken to you in a while. I want to hear what you think. When we look at what's going on with the Fed, we have a 97% likelihood the Fed will stand pat here now in September. Your thoughts on September and November?
Well, thank you. Good to be here again. Nice to see you. Yeah, I think the probability looks like it's pretty low. I'm not sure it's going to stay that way. If you look at inflation, it's still hanging in there, but we've gotten some recent data here that I think is probably up a bit. Chairman Powell scratching her head. You look and you see unemployment still remains very strong. Consumer spending is hanging in there, despite the way it feels. You have equity fund inflows, the highest that they've been in 3 months. The VIX remains very, very low, and so that tells us it's a risk-on market. The earnings are hanging in there, particularly for tech stocks, right? So, I think the Fed has got to be going, we're going to have to raise rates. We may not do it next week, but we're going to.
Right, so that's what you're saying. So for right now, they may just hold that for next week, but eventually they may have to do something. Are you concerned?
This stream is sponsored by To The Tick. Get free daily pivot points, Fibonacci, and market profile levels by signing up at tothetick.com.
Which one stands out to you? Because if we're making an investment portfolio, you have to sort of have a theme of where you think this might be going.
Well, I think you have to expect a recession when they can get to it. The Fed is on purpose trying to force a recession. Now, that may seem counterintuitive, but it's better than inflation running amok, right? So now if they can engineer a soft landing, that's fantastic. That just call it a soft recession. And so far, they've kind of done a tightrope, but the economy still remains stronger than they probably like it to, keeping inflationary pressures out there. We've got to see some of these other things drop, and that'll make them at least hold rates, and then possibly, as the market wants it to do, lower rates in 2024. But I don't see that happening yet. I see the economy still pretty strong, and there's no reason to panic yet.
All right, let's go over some of your names that you like. I mean, as we see Bitcoin fluctuating, can't hold 30,000, and these names moving around. What about a name like Microchip Technology?
Yeah, I think, if you've noticed, rebounded very nicely this year. They have great margins, and their earnings are not being revised downward, at least not near as much as what some of the other S&P stocks. So I think hanging around in stocks like Microsoft, Nvidia's got the AI edge, et cetera. But Microchip Technologies, I kind of like, because I actually think it's undervalued, and it's trading below some of its historical numbers and averages and what some of its peers are, and yet it's got a good growth rate and a good strong position, in the marketplace.
Yeah. How about Pioneer Natural Resources?
Yeah, now Pioneer, I'm just like all, if you think oil's going up, you believe we have structural supply problems. Oil, they have the biggest position and the best position, the best reserves in the Permian. And that's least likely to be influenced by the government, right? Or perhaps opposite. The more government tightens restrictions on drilling places, that actually improves the value of the Permian. And Pioneer, you get paid double digits while you wait for oil to go up. And, you never know when Exxon or someone's going to come along and just pay a big old price for them, which will give it probably another 50% premium.
Yeah, and then we have UGI in the world of utilities. Your thoughts there?
Yeah, I think that's a less risky stock to pick. That company's been paying dividends for, 100 years. It always pays dividends. It's got a nice little 4% yield to it. It's got a great position. It owns gas utilities and pipelines in West Virginia and Pennsylvania. And, it's not going to go down as much if we go into a recession or stocks fall off here, and you get paid a nice dividend. It's a very strong company. And yet it's still got some upside, and it's got some nice growth projections in its revenue.
All right. Thank you so much, Dory Wiley. Wonderful to see you. Really appreciate you being on the show today and giving us your picks as well. Thanks, Dory. CEO, Commerce Street Capital. Still ahead, we're going to be looking at the crypto market and put that in focus, and a new professional designation in blockchain and digital assets that you'll want to hear more about. We'll be right back. We're heading to break and take a look at the winners and losers in the S&P 500.
You could think getting commission-free trades is as good as it gets, but you know better. At Schwab, free means more. You get commission-free online trades and quality trade executions on our powerful platform, plus a satisfaction guarantee. Expect more from your firm. Trade up to Schwab, the better place for traders.
Empower your portfolio with the Schwab Network. Available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to the watch list. I'm Nicole Petalides, coming to you live from the New York Stock Exchange. 90 minutes left in the trading day. Taking a look here, it looks like we lost the gains for the week. Only the Dow's holding on, but the S&P and Nasdaq are in the red now with today's sell-off. Today, across the board, you're just seeing every single sector lower, led by technology. So the S&P is down 1.1%, the Nasdaq's down almost, I'll say 1.9%. Dow is down 0.75%, and the Russell also losing ground. Small caps down 1.2%. So what's going on here? Let's bring in Ben Lichtenstein, Senior Futures Contributor. 90 minutes left in the trading day. Curious to hear what you're watching.
Hey, Nicole, red arrows across the board here. It seems like investors just a little bit of apprehensiveness as we head into the Fed meeting next week and the weekend ahead. There's been a lot of focus on the positive. Investors have been kind of discounting the negative, and
today you can see some selling. The market came off from that 45.66 level. We're currently trading down around, as you can see, we're trading 4,500 right now as we speak. But, a chart that I've been using to kind of help put things into perspective in terms of, a big move up on the intraday basis or a big move lower is what we're seeing here today, because it's been kind of a choppy week, is this chart. And it gives us a couple good parameters, the upper extreme being the July high in the top left corner here, 46.34. You've got the August high here up around 46.20. And then you can see the August low, which is down around this 43.50 level. And for the most part, look, even with today's big sell-off, again, it kind of helps put it into perspective. We're sort of just right in the middle of the range that we've been in that we established last month. So not a lot of conviction one way or the other, although we are seeing some intraday movement. And I've been calling this a win for the bulls, right? The fact that we've been in this range since June for the most part, very comfortable around 45. And you can see that as the 50-day moving average is starting to flatten out a little bit. And we're basically parked on that right now as we speak. The market has managed to shrug off some headwinds here, though. Look at this. I mean, again, the fact that we're still consolidating at this upper level with crude oil in this green line, 10-year yields in this blue line, and even the dollar has been strengthening. These are all major headwinds for stocks here, Nicole. And again, to see the stocks, to see S&Ps going out at 4,500, yeah, we're down 1% on the day, but right in the middle of the range we established last month. I think the bulls should consider that a win.
Right, understood, and they can't complain there, huh? What about, you're also watching crude really closely. Is it crossed the $90 a barrel mark? I mean, what are you thinking here?
Yeah, I'm thinking at some point this is going to start to raise some concerns. It's going to feed into inflationary pressures, and I'm thinking it's not what Fed Chair Jerome Powell wants to see, that's for sure. Now, this does not necessarily mean direct implications in terms of dollar for dollar to the upside, in terms of dollar for the pump, that's for sure. But keep in mind, petrol products are used across many different areas, right? It's not just price at the pump, but here you can see that rally from 77 all the way up to 91 in this instance. And let's just take a step back here. These are hourly candles going back to, we're looking at the end of August, and the rally we've seen about $12, $10, or $13 to the upside here. Taking a look here, you can see we're above the 50-day moving average. The conviction we're seeing to the upside, something like 9 or 10 out of the last 12 weeks have been to the upside in crude. Recently bouncing off that 50-day moving average. That's that move up we just looked at from that $75, $78 level. But I want to remind you of, where was it? We were back in May, if you remember. It was the Saudi energy prince, and he warned the shorts. He said basically that they have been ouching, and he said that I think he meant to say hurting. He said that they're going to continue to be ouching. And I mean, we've really seen that play out. I mean, he was basically predicting, whether you're talking about some of the production cuts we've seen or, what we've seen in terms of some of the demand expectations, which remain strong economic conditions here in the U.S. And either way, Nicole, I mean, they really forecasted this big move up that we've seen from that level when it was end of May when he called that. We're talking about $16 to the upside as we trade around 90 right now. I mean, for every one lot, one contract in the futures, you're talking about $16. That's a significant move.
Sure. Thank you so much, Ben Lichtenstein. Great to see you. Really appreciate it. Thanks, Ben. Now let's shift our attention straight over to the crypto market. Our next guest, Rick Adelman, is with us, founder of Digital Assets Council of Financial Professionals. Thank you so much for being with us. So we've had some volatility, as you well know, when it comes to the spot Bitcoin ETFs, right? I mean, when it started with BlackRock, and then you had Fidelity and VanEck and WisdomTree and many more that were trying to do this, and then we got a glimpse of maybe this could happen sooner or later. And then Bitcoin went up, and then it seemed like it was pushed off until, I think, October. Then it went back down. Your thoughts on where we stand? Would it be beneficial for folks to have the choices of spot Bitcoin ETFs in the first place? And how likely is it that they'll see them anytime soon?
Hi, Nicole. Yeah, you've described it really accurately. It's been a very frustrating period of time for the crypto community. The SEC has said no to every application that has been filed for the past 8 years. There have been about 50 of them. There are 10 pending before the SEC right now. The SEC has said no, got so frustrating that Grayscale filed a lawsuit against the SEC and won that lawsuit. And that is what got everybody very excited. Bitcoin rose very quickly, about 25% on the news of that, because of the excitement that we're now going to see a spot Bitcoin ETF. But We don't see it yet. Actually, Gary Gensler has a number of options available. He can kick the can down the road. As you pointed out, he's got really 240 days before he has to say yes. He could file an appeal in the Grayscale lawsuit. He could force Grayscale to start over with their application process. That would take another year. So there are all kinds of things that the SEC may yet do. To answer your question, it definitely is something that investment advisors want to see. 77% of advisors say they're waiting for this ETF to come onto the market in order to be able to access Bitcoin for their clients. We all know why. ETFs are the most popular investment vehicle there is. They're low cost, they're high transparency, high liquidity. It's a simple, easy way to access this asset class. People love the gold ETF, a great way to access gold. We use REITs for accessing real estate. We use ETFs for commodities and options trading. It's a simple, easy way to gain access to the asset class compared to the cumbersome nature of crypto in other formats. So we are fully expecting that when the SEC does finally say yes, and we think it'll be sooner rather than later, it could be a couple of weeks, it could be a couple of months, that the SEC finally says yes, there will be a massive amount of interest by advisors. It could be hundreds of millions of dollars that flow into this asset class, and that would be great news for the price of Bitcoin.
And Braintree futures
And you
settled
do
at
think
$93
that is
and
happening
93 a barrel.
sooner
That
rather
being
than
up
later.
23
So
cents
this
or
year,
0.25% on the session.
say?
Yeah, I think so, and I wouldn't even be surprised if it was as early as next week, to be honest with you. I mean, we don't know what the SEC is going to do, but it could be very quick. They have
This
lost
stream
the
is
lawsuit
sponsored by
against
TickStrike.
Grayscale. They lost the lawsuit
TickStrike
against
allows
Ripple.
you to actually
They're
hear
probably
order
gonna
flow
lose their
futures,
lawsuit against
forex, and
Coinbase.
stock instruments.
And so
Get a free
everybody's
trial
angry
at
Gary Gensler.
tickstrike.com.
Congress is angry, the media is angry, the financial services industry is angry. He's not acting in a rational way. The U.S. is losing its dominance and its leadership in the crypto space. Other countries and other continents are moving ahead in Europe and Australia, Japan, Great Britain, Canada. And it's silly for the SEC to be taking the posture that it's taking. And what's ironic about this, Nicole, is that Gary Gensler claims that he's trying to protect investors, but his actions are actually harming investors. Because in the absence of an ETF, investors don't have access to advice from an advisor. They're going on their own, searching the internet, and that's why they're getting caught up in frauds and scams. The existence of the ETF would actually improve consumer protection, and everybody except Gary Gensler seems to get that.
Well, you certainly have a lot of passion about this, and that's what makes you guys right in the right place, because now you're announcing that the Financial Industry Regulatory Authority now lists DACFP as professional designation. And what's interesting with that is I think a lot of folks they get nervous about investing in crypto. They don't know how to go about it or get advice on it. And this is a good certificate in blockchain and digital assets for folks to learn more, to see more, and have more conversations, right?
Yeah, I appreciate that. Yeah, we're very excited that FINRA is now listing our CBDA, the Certified in Blockchain and Digital Assets, as a professional designation, right alongside the CFP and the CFA. We're very excited about it. It does reflect that FINRA gets it, that this is a new asset class, and this course is a world-class faculty. Scott Stornetta, who's the co-inventor of blockchain, is on the faculty. Anders Brownworth from the Boston Fed, and among others. And this is an online self-study course that gives you the knowledge you need to understand what is Bitcoin, what is Ethereum, what is blockchain, how does it work, what's the investment thesis, how do I integrate it into my portfolio, how do I explain it to clients. The course is really, really popular. Over thousands of advisors from 37 countries have already enrolled in the program, and we've struck a deal with Schwab where we are the official crypto education partner, and we are now offering a 50% discount on the tuition when you enroll in the course, which you can do online at dacfp.com.
Oh, that's good to know. Thank you for all of that. And in your opinion, I know you can't necessarily recommend Bitcoin or recommend too much, but is it the type of thing in a diversified portfolio? Because there's a lot of people who are just really wary of Bitcoin altogether.
Yeah, and I don't really care. Yeah, I don't really care whether people like it or don't like it, buy it or don't buy it. I think you're right, Nicole. It's all about understanding it. You know, advisors have very strong opinions about annuities. You love them or you hate them, you use them or you don't. But you understand annuities. You know the difference between the beneficiary and the owner. You understand the difference between fixed and variable. You understand how annuities work, the fees and the taxes. I'm simply saying you should have similar knowledge about crypto so that you can better advise your client whether or not they ought to buy it. One of the most popular courses I teach is called How to Build Your Practice by Hating Bitcoin. It has nothing to do with buying it. It has everything to do with understanding it. And those who do want to integrate it into a diversified portfolio, 1 or 2 or 3% allocation is plenty to check the box, fill the need, and move on. So it doesn't need to be scary, but like everything else, things you don't know about tend to be scary. And that's why we encourage you to learn about it. Our sole goal is education. It's an unbiased, objective course. There are no product sponsors engaged. It is strictly education in an academic environment through online videos, and it'll give you the knowledge you need so you can figure out how to talk about this with your clients.
All right, Rick Adelman, thank you so much. Founder, Digital Assets Council of Financial Professionals. Thank you for all that. Still ahead, our panel is ready to talk all about consumer sentiment. The consumer is still going strong. So what do we need to know, and what big shifts towards experiences and more physical goods? What does this mean for the retail sector as we go closer to the holidays? Coming up.
Young lady who was mid-30s, a couple of kids, recently went through a divorce. She had a lot of questions when she came in. I watched my mother go through being a single mom. At the end of the day, my mom raised 3 children, including myself. And so once the client knew that she was hurt, we were able to help her. The client won't care how much you know until they know how much you care.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
Trading the trending names every day. It's Fast Market. Ready for you, ready to go. I'm Kevin Hicks. Catch me on Fast Market. Weekdays at noon on the Schwab Network.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
No politics, no noise. From bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Missed out on today's market headlines? Get caught up and catch the rep at schwabnetwork.com. Available anytime, anywhere, on any device for free.
Welcome back to the watch list. I'm Nicole Pedalides, live in the Florida New York Stock Exchange. Let's take a look at what the consumer is doing. We got the fresh consumer sentiment report today, which ticked down again, but the bright spot was that the outlook for inflation improved. Let's have a discussion here. Eddie Yoon, founder of Eddie Wood Grow and co-founder of Category Pilots, Pirates, and Tom Brown, head of investments at Fawcett Wealth. Thank you both for being here. So, Eddie, how do you think the consumer is faring? I mean, I know the market sold off today, maybe just tired from a big week of news, but you tell me. I mean, we saw a sell-off. Was it on the fact that consumers are not feeling good and now people are worried about GDP?
No, I think that's probably for different reasons. I think the consumer is continuing to spend, and that's good. The GDP for the U.S. is 2/3 based on the consumer, and so that's a good positive sign. So we saw personal consumption expenditures was up 0.82% in July, which was the highest level in 23. Although there is some cause for concern because disposable personal income was only up 0.15% in July, so that was the lowest level in 2023. So we are seeing that these consumers are funding their spending much more from a debt basis, and there's some nervousness about that. Loan delinquencies are up close to the Q2 2020 rates for the St. Louis Fed. Student loan payments are kicking in October. So that means consumers will have on average $503 less per month to spend on whatever else it is. But we continue to see the same signs that they're spending on experiences and personal transformation and less on physical goods. And I think companies and categories that are in the right ones will be able to benefit and the others will not.
So Tom, what do you make of it and how do you interpret it for the stock market? Is it retail? Is it something else? What did you look at? What stood out to you?
Well, I would echo a lot of the statements. I do definitely consumers are still in a strong place. I would just say with nuance that I think spending on growth or on goods is not really growing, but it's not really falling, while spending on services, which includes experiences and the like, is growing. And so I think that slowdown in growth has allowed inflation to improve, which I do think will ultimately improve consumer sentiment. Now, in terms of the stock market, we're more worried about what it means for margins. You know, a lot of consumer-based companies have been able to grow their margins substantially through price increases that have outpaced the increase in costs. If costs sort of catch up a little bit here, and squeezes margins, I'm not sure that's priced into certain consumer discretionary companies in particular.
And then as we translate this and what we're seeing, Eddie, your thoughts, because I know you have autos, you have retail, you have banks, how this all translates. Tell me a few thoughts.
Yeah, no, I mean, the categories that have the strong tailwinds are going to have pricing power, and that, as Tom says, is going to help with margins for sure. So international travel demand is at a 46-year-old high, with 22% of U.S. consumers wanting to travel to a foreign country in the next 6 months. Per BCG, consumers are spending up to $40 billion on medical aesthetics in 27, which is up from $16 billion in 2017. So that category is going to grow 10%. And you know, I think that one of the key things that we're finding in the physical goods space is not only is there pricing pressure, as the ability to take price up further is gone, but you're seeing a lot of other pressure, not only from retail sales being down at Target and Kroger and Home Depot in July and August, but the theft issue and shoplifting is becoming a real thing. Total theft from retail in 2022 was estimated to be about $100 billion. Target is saying merchandise theft will rob shareholders of $500 million in earnings. And so retail margins are already thin as it is. If the theft continues to make the shopping experience more unpleasant for the regular shoppers, while trying to prevent basically the razor thin margins from going away, you're going to just see a lot less of a pleasant experience to shop, and that'll affect goods. And then you're going to see more and more retailers going bankrupt like they are now.
Yeah, and you talked about personal consumption and how much people are spending, and they were very comfortable spending, but the disposable income that they have is dwindling. They're digging into the savings. They don't have that much money left over, you know, to spend around. And the student loan payments, you know, you still are going to have to pay those back. Final thoughts, Tom?
Yeah, I mean, I do think there's been a tailwind of kind of credit card utilization normalization. Credit card utilization plunged during the pandemic and started coming back in 21 into 22, and now it's probably close to a normal pace. And so consumers have been able to outspend their income growth for a year and a half or so, and that's not going to continue. They're going to only be able to really spend their income growth. And Nicole, as you mentioned, student loans resuming. I wouldn't call it a game changer. It's probably something like 0.3% of spending is going to get sucked up into student loan payments based on our estimation, which is not nothing. It's not a total game changer, but it's just another headwind on top of that kind of lack of kind of debt normalization and or savings normalization that was sort of a tailwind for consumer spending. So I think all this means that consumer spending, it can keep growing. It's just going to keep growing at more of an income kind of pace, which is great news for inflation, but might not be great news for every consumer discretionary company.
Okay. Tom Graf, Fawcett Wealth, Eddie Yoon, thank you both so much for being with us. I really appreciate it. Good to see you, everybody. I hope you have a beautiful weekend. I'm Nicole Petalides. Keep it right here. Oliver Reddick, Market on Close, next.
I was born on the south side of Chicago. It has been a long road, but now I'm working for Schwab. I love to help people understand the world through their lens and invest accordingly. You can call us Christmas Eve at 4 o'clock in the morning. We're going to always make sure that you have all of the financial tools and support to secure your financial future. That means a lot for my community and for every community.
I'm Nicole Petalides, live at the New York Stock Exchange. Catch me on Schwab Network. Available anytime, anywhere, on any device for free. Schwab Network.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
At each and every angle, the whole picture, everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network.
Welcome to Schwab Network,
Daily live exclusive content tailored to today's investors.
broadcasting 24/7 from our studios in Chicago.
And from the heart of Wall Street at the New York Stock Exchange.
Up-to-the-minute market insights,
Example trades and stock-specific analysis featuring the smartest minds in the business.
no politics,
No noise.
analysis ahead of the biggest events for the economy.
From bell to bell and beyond.
Watch live
And on demand.
24/7, 7 days a week on schwabnetwork.com.
And on all your favorite streaming services.
Available anytime, anywhere.
On any device for free.
Schwab Network, empowering every investor and trader.
Every market day.
Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week at schwabnetwork.com and on all your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free. Schwab Network.
Be part of the latest commodities action on Futures with Ben Lichtenstein, weekdays, 8 a.m. Eastern on the Schwab Network. Available anytime, anywhere, on any device for free.
I'm Oliver Rennick. Get ready to cut the cord. Market on Close is coming up. Good afternoon and welcome to Market on Close. I'm Oliver Rennick. We have 1 hour left in the day and in the week. It's Friday. We're almost there. Stocks are under some pressure right now. We're giving back yesterday's gain. That's kind of been the case here. It's basically a step forward and a step back pretty much for the stock market this week as the Russell 2000 and the NASDAQ are both down. We had seen a little bit of difference between those two small caps and the tech giants, but they are aligning to the downside here. And now over the last 5 days, the S&P 500 basically neutral. Technically, we're actually going to be down a little bit on the week right now if we don't get it balanced into the close. We gapped up Monday morning, Sunday night into around the 4,500 range for the S&P, so we're right back there. A little bit of a tough run here, considering that there were really no negative events. But the stock market's having trouble taking that next leg higher. Still better scenario, of course, than downside, neutral, going sideways. Not the worst situation you could ask for. But the fact that we have seen cracks forming in some of the big tech trades without any real major negative catalysts does suggest perhaps the market's a little bit exhausted in terms of valuations and the huge run up over the past 11 months. We got a good show coming up this afternoon. We'll be talking a lot of macro, of course, ahead of next week's FOMC decision. We'll also be talking with AOL co-founder Steve Case about where he's looking for tech innovation across the country. So we'll have some fun combos here heading into the closing bell, and our big picture Schwab panel will get you set up for next week. Look at ARM today, giving back some of the bounce and the success around yesterday's debut, but not too much. I do think that is fairly encouraging for bulls. The fact that that IPO went smoothly and that the downside here is limited to a percent in ARM. We certainly have seen more drama in IPOs over the past decade for big tech companies. So overall, went well. Market digested it. Even though there's only about $5 billion float trading in the public markets, it still is a big company with a very high valuation. So this certainly could have gone awry, and it didn't. It went smoothly, but it also didn't really inject a lot of fresh upside into the key chip making.
All right. We're back. All right, we'll continue to grovel at the lows. No reversal. 50 handles off of the area where we thought we might retest if we could muster a rally. Nope. No. Not today.
This is a 6-month chart, so you're including really the big AI liftoff that now has sort of fizzled a bit. Obviously, there's a difference between reversal and consolidation. Technically, this is what you describe as consolidation. Certainly could find some support back at those May levels for chips, but better sooner than later for bulls, given how important this group is. And again, the fact that there really has not been any negative news.
Okay.
A little bit of exhaustion. Case in point, look at some of the big tech trades of the last
50 handles today. 53.
around the report of Chinese restrictions to iPhone buying, but then this week, a report countering that one, and the shares in Apple didn't bounce back. Of course, there's implications there for chip makers in that world. But then you saw Oracle drop on its report, despite numbers being fine. Same situation for Adobe after its numbers. Same situation for Netflix, which gave an update earlier this week on its own strategy. Nothing really new there. Shares slipped anyway. So when you have the major mega cap giants dropping on really no negative news, it implies that the market has very high, perhaps too high, expectations to fill in these valuations that have come so far. Looking at the macro situation into next week, real fast, want to look at bonds and crude oil. There is more conviction in this trade, I think. There's more directionality. There's been a little bit
All right, I got to turn this guy off.
this week, and it looks like once again bears are going to win out as treasuries are selling off again today. And as far as crude goes, there's no
Into the second half is the first that we would see it.
But what if inflation continues to come down? Now, obviously, this week showed that it's sticky in certain places. CPI, PPI, both a little hotter than expected, but it's not like that upsets the Fed narrative all that much, because even in the face of that, as we said, the market's coming off.
All right, testing the lows again. All right.
And that is Austin Goolsby's golden path. This idea that we can remain strong, but inflation can come down on its own, meaning that unlike what Powell warned about, which is that a period of below trend growth would be needed to pull inflation lower, that's not what has happened yet. So the question then going forward is, do we get that below trend growth? Hardly at 4.9% on Atlanta Fed GDP now. Are there signs that it is today? That could be a scenario for 2024. We breathe a collective sigh of relief. People get complacent, they overhire, they overspend, and just at that point is when you hit the full impact of interest rate hikes, and that's when you would have a classical recession.
You mentioned a consumer earlier. Do you feel as though
Most stocks are just looking at flat VWAP. We can see Tesla here. Tesla, flat VWAP, price above, price below, price back above, price below. We'll probably close near 274. Does look good on the daily 9 EMA, although we're off a little bit at the moment. Tesla off $3. It's trending above the 9 EMA, 21-day crossed through the 50-day today, so that's a good sign going forward. Tesla.
Oil prices continuing to rise is a concern point pretty high on your radar.
Yeah, very much so. Just because it effectively
Oh, she's got a lot of makeup on. Holy crap.
So we know as the consumer has become more stretched, they've whittled down those savings and they're using more credit cards, that there's a lot less wiggle room for the consumer to be able to continue to spend at an elevated pace.
270. All right, so looking at Tesla, 921-day crossed up through the 50. 50-day is fairly flat. Price is above, so if this continues, most likely will. The 50-day will start to turn up again. So you'll have this kind of wave. You see this wave? We move up, the wave comes down, move, the wave goes up again, wave down. Next wave up is what it looks like we're going to see in Tesla over the next several weeks. MACD's above its signal line. Stochastic's embedded, so we'll see how that plays out. The last time Stochastic was embedded like this, back in May, June, we still made new highs. Note where RSI was when Stochastic was embedded. It was this last week of May. Price kept going through the 200-day. What did RSI? RSI was rising just like it is now. It's not overbought yet. So there's plenty of room. High probabilities that Tesla can continue just based on what happened in May, the volume. That's the difference right now. The volume is not there. So that's the one caveat. Volume isn't there. Looks like profit taking for the last 2 weeks as it rises. All right. So we've got to see better volume over the next couple of weeks on Tesla. Microsoft moving off the low, 330.66.
And I think that Stephanie's point is very, very clear that yes, the labor market remains firmly tight, and we agree with that. There aren't any signs other than kind of these peripheral signs of things like jolts moving lower, goods rates moving higher, some temporary work. There are some signs of slight deterioration, but there's not signs of easing yet, which is why I would agree that you're going to continue to see this period of stronger growth. We're not at the point where we're going to see below trend growth. It's not until you see that you'll see earnings revision down cycle and then the risk for some kind of deeper movement lower in the equity.
Steph, if you're mostly positive on the economy and even industrials, which I believe you are, why did you take money off the table in Ingersoll?
Oh, that's just profit taking, Scott. I mean, I had a 30% gain in the position. I love it, and I'll buy it back if it were to pull back. But I thought that and I put the money, by the way, into John Deere. And I did this earlier in the week before HSBC had initiated today with a buy. So I think that for me, I'm looking for bargains in this market, and Ingersoll Rand held up remarkably well. Did what I wanted it to do, but Deere, when I bought it, it was down about 5.5% year to date, trading at 12 times earnings. It typically trades in the last 10 years at 17 times, 7 times EBITDA for a very high quality company. Ag backlogs are $14 billion. That's 25% of 2023's total revenue growth. And you know I'm a big fan of these big.
All right, so we've got 49 minutes to go. 49 minutes, no rally. Just consolidating near the lows on this triple witching OPEX.
Saying that if there's a chase for performance between now and the end of the year, where are you going to see the most gains come from? And I'm sure tech may still do well for the most obvious of reasons that we don't need to list. But you're going to get more out of other areas of the market, like the Deeres, like the cyclical plays, like the industrials, like the energies. like these other places that are just cheaper on a valuation standpoint?
We thought that's how it would play out back a couple of months ago, where you would see the equal weight index get some life to it because there was value in it, and that's not what's happened though. We've actually seen the big mega caps, the cap weighted index completely overtake the rebound that we had in equal weight in June and July. And so we are seeing more earnings revisions up cycles or earnings revisions higher in some of these tech names. I think that there's plenty of opportunity to be had in the unloved parts of the market where there are idiosyncratic drivers. We continue to find those opportunities in our portfolios, but I think if we're going to have a chase into the end of the year, it's a good question of if people will chase the things that perform the best instead of trying to bargain hunt.
So, Steph, how would you entertain that question?
Well, I think that certainly there are opportunities to be had in technology, and you're seeing a pretty big pullback in the semiconductor space over the past month. So I would look for opportunities to add there. I recently added to Amazon, very small position. I would probably add more. I've been trimming Meta because it's really had a great run. So I think it's going to be stock by stock basis. But I think there are other sectors that are more intriguing to me into the end of the year. Quietly, Scott, the XLE is up 21% from the May 31st lows, and those stocks have really rebounded. And I think you're going to see actually a chase there, especially because with oil above 90, heck, it could be above 50. These companies make so much free cash flow, and the numbers and the estimates are likely to go
Yeah, that's a good point.
The price of oil has gone higher.
Above $50 per share. All of these small cap energy names on the IWM, they make so much money in free cash flow.
It's you. These stocks are getting crushed today. That's down 5%. KLA Tencor down like 5%. ASML, right? It's this report that Taiwan Semi has reportedly delayed equipment deliveries, and all of the suppliers are down a lot. You worried about that?
Well, it's interesting, Scott. First and foremost, Lam Research, even down 4% today, 5% today, still up 48% year to date. So I see it's easy to take profits. These are very high beta stocks. But I don't think anything that TSMC really
S&P looks like it wants to bounce a little more now.
They reported earnings back in July. So yeah, no, I don't like the commentary, but I do think that the valuations are still very attractive. I still believe that wafer fab equipment spending is bottoming. And back in July, when Lam Research reported, they did lift the wafer fab equipment spend number for this year. Very, very small, but incrementally, that was a big deal because the prior 9 months, it had been coming down, right? It's down from $100 billion, to $70 billion, and now it's going to be mid-$70 billion, according to Lam. So I think the fundamentals are starting to bottom here. It's not going to be a straight line up. Little choppy today, little choppy over the last month. I think you're going to get a buying opportunity.
What do we do, Cameron, with chips and software? These are, you look sort of stock by stock. These are stocks that have had pretty good gains this year. Everybody's fixated on the Magnificent Seven and the valuations there and the incredible run that those stocks have had. But you look at some of these other names, they've outpaced the gains by a lot, even in some of those mega caps.
I think Chris Barone had a really good point earlier today that would you be surprised that 50% of the semiconductor index is actually trading below its 200-day moving average? For as popular as that sector has been as the leadership part of the market.
Well, because NVIDIA sucks all the air out of the room and makes everybody think that every chip stock is an NVIDIA.
Yeah. And look, I think that if
No,
you're
they
buying
don't.
chip stocks for a week or 2 weeks, you're likely to have a period of digestion. If you're buying them for multiple cycles, as we are for long term, we own some of the equipment names. We really like them as long-term names, but understanding that this is an incredibly cyclical business, and when they trade at valuations that are as if they aren't cyclical, that's when you tend to see a higher volatility.
So, Steph, what do you think about the Fed next week as we spin it to that before we go? No one's expecting really a move. Is there a surprise? Not necessarily next week, but are we underestimating the capability of the Fed to do more than we think? And is that one reason why yields remain as elevated as they are?
Well, whether they raise next week, which we don't think that's going to be the case, or in November, they're still going to be doing QT. So it's not like they're taking their foot off the gas. That's number one. Number two, inflation is going to be sticky. We've seen it, right? We saw it yesterday and the day before in CPI, PPI, and even core PCE. It's way too high. 4.2%. The Fed wants it below.
All right, so we've got less than 43 minutes to go. Markets are just slipping sideways, not giving anything. If you've been hoping for a rally, just look at VWAP on whatever chart you're trading. Here's Tesla. Tesla, good example. Flat VWAP, price action just oscillating above and below, not going anywhere. Let's see what Google's doing. Google, flat VWAP. Amazon. So there's just no momentum in the markets right now. Amazon. You just heard Stephanie say that she was buying on the dip. Apple. Slightly downsloping, but fairly flat. Prices coming back to VWAP now. What's Netflix doing? Netflix below VWAP. Most stocks below VWAP. A stock that mentioned earlier, Owl, flat VWAP, but price pulling away. Blue Owl Capital, they are investment services for institutions, private clients. Let's see, XPro in the oil and gas group. XPro moving back above VWAP, starting to move higher. What is Okta doing? I haven't looked at Okta in a while. Security, Okta. Okay.
They're picketing in front of these plants, these 3 plants, one here in Michigan, one in Ohio.
Unity Software, Unity. Flat VWAP, no momentum. All right, let's just look at the sectors. XLB, downward sloping, selling. Okay. XLC, communications, that's Meta, Charter, downward sloping VWAP. XLE, energy should be upward sloping. Nope, it's downward sloping. Financials, XLF, flat VWAP, trying to bounce. XLI, industrials, flat VWAP. XLK, flat, downward sloping. XLP, consumer staples, flat VWAP. XLU, flat. XLV. All right, nothing there. And XLY. So all the sectors selling off today a little bit. Some selling. So if you're thinking about hedging, SPXS is one potential. It's upward sloping. Okay, so this is a hedge. This is short, 3 times short the S&P 500. You might want to consider that. SPXS, SPXU, upward sloping VWAP, QQQ, SQQQ, upward sloping VWAP, QID, upward sloping VWAP, TZA for the small caps, upward sloping VWAP. We're coming back to it now. So the acceleration to the upside stopped at around 1:30, 1 o'clock, 1:15, and then started to fade. So people preparing for next week, maybe. Hedging, yes, most likely. So let's see what the S&P looks like. So we're going to be below the S&P. We're going to be below the 50-day. So before I left, I was saying that if we get a hanging man or a hammer at the 50-day, that'd be excellent. Didn't see it happening, but a little short covering here. The wick on the bottom of the candle, I just say that that's short covering. OPEX. So if there is a silver lining, it's next week. Okay, we should see more momentum, whether it's downward, bearish, back towards 4,400, or a move back above the 50-day. Both are possible. The reason being, the 4,500 level was a major level in gamma. A lot of that gamma is going to roll off. I don't know if Brent mentioned it. Let's see. Okay, 4,500. I'm just reading through it here. Okay, so what we can do is we can go to the indices and we'll see what's expiring. Oh, I used to do it that way. You can see this big level 4,500. Wow, that's a lot of put volume. Gamma. 1 billion. 1 billion. Calls 913 million. Okay. Near the lows. Rick, near the lows. Okay. Okay, S&P. All right, you can see what's expiring here. Wow. Mostly on the call side. Calls have the most expiration today by 2 to 1. 2 to 1. Next expiration that's large is out there in December. We know that. And of course, this will change with the JP Morgan collar roll. But today, a lot of gamma expiring today. 2 to 1 calls the puts. 400 billion versus 186 billion in puts, 400 billion in calls. That's a lot of money that dealers and others sold. And what a perfect week for it too. When you look at how the S&P chopped around. Whoops. Okay, so we didn't go anywhere this week. Today was a little bit lower, but pretty narrow trading days. Monday, Tuesday, Wednesday, yesterday. It looked like we were going to follow through. So yesterday we were telling you if we got above 4,500, close there and then follow through today, how that would set up next week, perhaps. Now it's still very neutral. Let's see if there's any late day development in breath. All right, so we've got 30 minutes to go. It should get a little jiggy here. Market should get a little jiggy. Volatility should pick up. We could see a little rally. All right, so Lee Star is saying he was into Lulu today. Lulu, all right, XLY we talked about, it's descending. Lulu, all right, buyers stepping up at the 50-day. All right, so next week, Rick, if you're listening, next week, if we bounce, that could be good for Lulu. Let's see some other names in the group, like Dick's Sporting Goods. All right, basing down here, that might be a setup in the future. If you like trading Dick's on the swing time frame, let's look at the weekly. You know, I like it when price action's above the 10 EMA, like over here. Target, haven't looked at Target in a while. Just drifting lower. Walmart's been at the highs, trending. Doing well. Walmart. Narrow range days on Walmart. If you look at Walmart, it's a doji for the day. Walmart, like other things, flat VWAP, price above and below, but it is trending on the daily, so that's good. The real estate stocks were strong last week. We've sideways today, this week. Let's see, Raymond James Financial. Okay, Raymond James looking okay. Let's see, Schwab was off. Schwab down to the 100 period moving average, 200 days overhead. IBKR. I saw that they have a 6% for your cash balance, paying 6% versus I think Schwab is 0.5%. Interactive Brokers, all right, that's starting to lose the 21-day. Okay, let's go back to the S&P because it looks like it's trying to do something in the last few minutes. I'm not expecting much. Maybe I'll move back to VWAP. That's probably the extent of it. So here we go. Let's see what the FANG stocks are doing. Maybe there's something there you want to look at. Apple rising rapidly. Rapido. There goes Microsoft. All right, so more short covering. Shorts are covering the FANGs. Microsoft, Apple, Tesla, Google.
a lot of the inflation we still have.
All right. Apple making a little progress here off the lows, just some short covering to end the week.
Progress in the CPI inflation rate. So we got that reasonably well. And I think we're going to probably see the market kind of hang in there through the end of this month into next month, going for a year-end rally.
And a part of the problem, though, is non-housing services remain really sticky. And now oil prices are going up again, too.
Right.
So that's a double whammy that we can't take. Certainly you can't take if your prediction is as optimistic as it is.
Well, look, Scott, back in October, I predicted that we had made a low on October 12th in the S&P 500. And I thought we could get to 4,600 by the end of this year. Well, we got there by July. And when we got there at the end of July, I said, I think that's it for the year. And so, as you know, at the beginning of last year, the consensus was that the first half was going to be lousy and the second half would be pretty good. I had the exact opposite view, that the first half was where all the action was, and that the second half would be kind of flattish. And that's kind of the way it's turning out. And so I still think we're not that far away from 4,600. Just a few days away, the way the market trades sometimes. But in the interim, there are issues. There's a backup in energy prices here. I am concerned about the bond yield being sort of on the cusp of possibly moving up closer to 4.5%. These can all be setbacks that could hold the market back, but I think all I would do is kind of hold it back around 4,600.
Alrighty, just groveling at the low. S&P is not going anywhere. Pinning, most likely. Consider some hedges. They're listed on the watch list at the bottom, just above the middle, bottom. Hedges if you're interested, and hedging some of your positions helps to neutralize any further downside that we might see next week.
On the Federal Reserve and interest rates in an exclusive interview airing this Sunday on Meet the Press with our colleague Kristen Welker of NBC. Take a listen.
The Federal Reserve is obviously independent, but I wonder, Mr. President, if you are re-elected, would you direct your Federal Reserve chair to lower interest rates?
Well, you know that I put a lot of pressure on him. It was outside pressure because nobody knows whether or not he can really do that, but I did because I thought his interest rates were too high, and he ultimately dropped his interest rates. The same gentleman, as you know. And but it was a lot of pressure. I mean, I was very active on that. Right now, interest rates are very high. They're too high. People can't buy homes. They can't do anything. I mean, they can't borrow money. The banks don't have the money. The banks aren't lending the money. The banks, by the way, Chase Manhattan Bank, Bank of America, they discriminate against conservatives. It's a disgrace, and they shouldn't be allowed to. And I'm going to do something about that. But you take a look at banks throughout the country, and I think because of the regulators, but you take a look at Bank of America and Chase, they discriminate against conservatives.
What's
and
the evidence for
Republicans.
that, Mr. President?
We'll give you plenty of evidence.
Okay, all right. Well, let's stay on track with this question, though. So just to be very clear, if you were reelected, would you direct your Fed chair to lower interest rates?
It depends. It depends.
You
Depends where inflation is. But I would get inflation down because drill we must.
Mr. President, are you going to appoint a new Fed chair if you're reelected?
Well, I guess he would have 2 years left or something like that. So we'll see.
Okay. All right.
You know the word jawboning? I did a lot of jawboning against him, and he ultimately lowered interest rates.
Well, you can be sure to watch more of that exclusive interview with former President Trump on Meet the Press with Kristen Welker. That is this Sunday on NBC. Should also note the same invitation to sit down with Kristen has been extended to President Biden, who has so far not accepted that. But do not miss that. We wish Kristen well. Certainly, she takes over that program. So, Ed Yardeni, back to you. You want to respond to some of that criticism? I mean, obviously, President Trump took many shots, which he alluded to at JPAL during his presidency.
Well, that was back then. Let's look at what he said about the future. I think what he said is that whether he jawbones Powell to lower interest rates, first we have to see whether he's even going to be president. But if he is, and he
good point.
jawboning Powell, he very clear
I like Ed Yardeni.
doing, which I think is a fairly reasonable position. I mean, clearly everybody agrees
that in order for the economy to grow sustainably, inflation has to come down. I think it is coming down, and I think Powell has made it clear that he intends to do that, and he's made no promises once that's happened, other than to suggest that then interest rates could come down.
Then you've been critical at times of the Fed in terms of, thinking maybe they were going a little bit too far when they didn't have to, right?
Well, look, I thought that I agreed with them in 2021 that inflation was transitory, and obviously that wasn't a very smart call. It turns out that inflation has been very transitory. It's in services that's been slow to come down, and I do anticipate that rent inflation will be slow to come down. Look, I think they made a mistake in not acting sooner. Everybody
All right, we just had an extreme low tick just now.
We're not that far from 45, but we got a long way to go to get to 54.
Well, we do, and on the other hand, we've got some time to get there. But my assumption is that we're not going to have.
All right, so we continue this. VWAP continues to drop off.
This year, I think the analysts are looking at 220, so I think they're going to be. It's going to be somewhat higher. Next year, I'm using 250.
You close. What are you going to do?
2025.
Can I talk
to you? $270 a share. So I think yeah, I think. Like you said, there's going to be a debate between.
All right, so we're right at the low of the day. All right, we got a few minutes left to go. 17 minutes to go. I'm your host, Kazavini, coming to you from closingprint.com on a rather bearish and slow day. We had a nice day yesterday, kind of got spoiled real quick, and a pullback below the 50-day today. So we really needed to stay above the 50-day. That said, we are at the lows of the day, and we really need to see how the markets start next week, because all the hedges come off from today's expiration, triple X, triple witching. I keep saying triple X, triple witching, OPEX. All right, so you can see there's quite a bit expiring here. Okay, 400 billion in puts. 400 billion in calls and 186 billion in puts. Okay. My guess is that we could move a little lower. These expirations out here don't look very large. This one out in October is fairly large, mostly calls. And then again in December, we have the JP Morgan collar, which will roll. So there's a lot of things going on. Next week, we should see volatility pick up. I was thinking of the volatility we saw today, we would see next week. But it is what it is. Planet Fitness down 15.8%. Planet Fitness, $9.50. Okay, we're sitting down here at the low of the day. Again, just keep in mind that there are hedges if you're in need of insulating your downside. SPXS starting to turn up. SPXU, SQQQ for the Qs, obviously. QID and TZA, among others. There's lots of other ones out there. UVXY. I see a couple of you talking about UVXY in the room. Wasting asset. Back here in March, it was 72. You can see where it is now, $13. I don't really like trading UVXY, but it is turning, pulling away from VWAP. This is something that probably best if you're only in it for a couple of days, if that. The other hedges, though, those work fine. TZA, the IWM doing. IWM has to stay above the 200-day. We keep tapping on the 200-day. That's the fourth time we've touched the 200-day in the last 4 weeks. If we drop below, then, I'd be looking at puts down to this recent low over here, the weekly lows. All right, so if we lose the 200-day next week, I'd be looking at these lows down here at 160. It's a big range, you can see very clearly on IWM. So we weren't able to get above these levels, okay? And very likely that we could see this lower level here. If we lose the 50-day, which is right along in this area right here, below this wick, these wicks, that's the upper half of this range. So if we drop below, that's perfectly normal that we could see a revisit So I'd be looking at puts on next week if we do lose the 50-day IWM, or you could trade TZA. All right. All right, we're going to push lower right now. S&P. Looks like they're going to sell this into the close. All right, we're making new low. Almost there. Okay, that low this morning, or at 1:30, I should say. VWAP down and to the right. There was a couple of new members who were saying, you know, I want to do this or that. And my answer to them was, don't do anything the rest of this week. That was yesterday. I wouldn't be doing anything major. I did add some SPHD, but that's, you know, a position I've had for a number of years. But any new positions, there's a few exceptions, but for the most part, I wouldn't be buying anything until next week. Once we get an idea of what the markets can do next week, I'd feel more comfortable with new positions, whether long or short. We got to see how the week shapes up. We know we have FOMC on Wednesday. Most people are anticipating the Fed's not going to raise rates. So what if the Fed does raise rates? Does that impact the markets? We'll be looking at some of the early indicators like junk bonds that could tell us. Let's see, what is junk doing right now? HYG and junk. Where is that HYG chart? All right. No hope for the Bulls today, eh? Yesterday was a pretty good day, you know. So, you know, the way I was thinking coming into today was that yesterday was good. Do I want to give anything back? Not really. I had one Microsoft trade options that we bought at the lows, so it's not off that much, but those expire next week. So looking for a bounce. If we get a bounce early in the week, that could change the sentiment. But I'm not giving it too much hope because of that, because of the weakness that we tend to see this time of year. I just keep thinking about this for next week. The 16th is tomorrow. So starting off on Monday, we have Wednesday FOMC. We've got this seasonality to deal with. We've got the hedges coming off. So dealers and market makers will be resetting your hedges. We got the JP Morgan collar coming up. So that should roll. Remember the last time we, the JP Morgan collar rolled upward And that told us what to anticipate for the next 3 months. If you recall, that collar rolled up. Okay, and these are the collar levels right now. Okay, so they're short the 46.65, they're long the 42.10 put, and they're short the 35.10, 35.50 put. So closer to this neckline, they're making money. Looks like a head and shoulders top to me. It wouldn't have been so much if we had managed to stay above the 50-day, but all right, so let's recalculate these here. Stochastics also needs to turn. Stochastic needs to get oversold again. That'll turn out maybe next week to give us a good opportunity for a bounce.
But I do think there is some pent-up volatility, or at least unrealized volatility the last couple of weeks. Getting liberated today, you might say, on the downside. We've been pushing and pushing and pushing.
We're off 2% from the July high. We're off, or a little short covering here. We're off 3.5%. So it helps to keep things in context. Okay, we're only off 3.5% from the July high. Okay, we've gained 32% since October. So if you did nothing in your 401k or IRA since maybe starting positions in October, if you did nothing, I mean, we're still up, what, 29%? That's not a bad return. If we were to stay right here for the rest of the year, you make 30% in the year. That's a good return. I'd like any business that would give me a rate of return of 30% a year. That's not bad. So all depends on next week. All depends on next week. Does this head and shoulders top play out? And do we come down to the neckline? If we come down to the neckline, the pullback would be about 5%, 5.5%. We've already pulled back. What was this? 6%, I think this was. It was 5.8%. All right. So there you go. 3% off the high is not the end of the world. It might feel like it at times. Okay, we're going to close at the low.
1.3 trillion in assets from 7,000 investment advisory firms and 3.6 million retail accounts. Total client assets were over 8 trillion though at the end of August, which is actually up 22% from 2022.
Thank you, Leslie. You know, Mike, I mean, you still have this tremendous competition to everything from money markets, where you can get certain ends of it 5%, and you can blame whatever you want on the consolidation of things here, that, and the other, but that remains an issue, and it's going to for some time as long as rates remain.
All right, so we're 3%, a little bit more than 3%, 3.5% off the high.
But I think one of the things that people who invest in Charles Schwab have not really had to wonder about is, are they going to continue to be a major collector of investor assets? Because that has been the machine. They've just been kind of sweeping it up. And so I can understand being jarred by the fact that they had this shortfall with the transition of the platforms from TD Ameritrade. That being said, even if you're moving to money market, you can still keep it at Schwab. And I think that's what they're seeing. They're seeing the so-called client sorting is, we're not going to keep it in bank deposits at Schwab Bank. We're going to keep it in money market assets where they don't charge a fee necessarily on. But so I see why people are skittish about this particular move. I doubt it's a long-term trend.
Yeah, look at that, down there 30% year to date. Steve Kovach, some carnage today in the chips too.
Yeah, that's an understatement. Several chip names falling today following that Reuters report saying Taiwan Semiconductor
told its suppliers to delay deliveries of chip-making equipment amid demand uncertainty. Now, that includes names like Applied Materials falling as much as 5% during intraday trading today. That company makes the machines that actually make the chips that TSMC uses. Other chip-related names falling too, though, Scott, and they're among the worst performers in the S&P 500 today. On semiconductor, down nearly 4%. AMD down about 4.5%. Intel down more than 2% at one point. Lam Research down more than 5% at one point. And TSMC itself down more than 2.5% right now. Now, behind TSMC's request from suppliers, that uncertain demand environment, especially in China, that's causing some consumer electronics companies to order fewer chips to manage their inventory. It's a story we've been hearing all summer long, Scott.
Yeah, no doubt. Steve Kovac, thanks to you as well. Not going to take too much to push some of these stocks around, given where we are.
Yes, where they got to in the first half of this year, and some people have been looking at that and said, Nvidia aside, that it was being pretty aggressive in pricing in a durable turn to the semi cycle. So yeah, not too surprising.
All right, we're almost at the close here. Seconds to go. Weekend video will be out on about 2 o'clock on Sunday.
Morgan Brennan is off today. We got a big show coming your way. We're going to talk with the CEO of Databricks, the mega unicorn software company that just raised an additional $500 million at a $43 billion valuation. If an IPO might be in the cards, plus we'll talk to venture capitalists.
All right, folks. Have a great weekend. Don't sweat it too much. We're only off 3.5% from the high after gaining 32%.
And mega caps like Meta, Amazon, and Microsoft. Let's bring in our panel. Joining us now is Wilmington Trust Head of Investment Strategy, Megan Shu, and Unlimited Funds CEO, Bob Elliott. Happy Friday, guys. Bob, you're long energy, short tech, so this week worked out according to plan for you. You also say to stay invested. So if you're an investor out there, retail investor, how do you manage to both take advantage of opportunities that you see and also stay invested?
Well, I think the main question is, do you have the sort of diversification of your portfolio that's necessary to actually weather these sort of dynamics? If you look at today, what do we have? We got stocks down, bonds down, gold up, and oil up. That's about the worst possible scenario for a traditional 60-40 investor. So those investors are going to have to look for other opportunities.
All right, I'm out of here. Take care. We'll see you on Monday. Ciao.